We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America.
There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Welcome back to the European Market Open. We're 10 minutes into our European trading session, and these are the moves we see in the overall markets to the upside. US futures also point higher. Here in Europe, though, plenty of earnings to get our teeth into, and Bloomberg's Danny Berger has been doing just that. She joins us now with the movers. Danny.
And a lot of oil majors reporting today. Good results as well, beating expectations. So Equinor, Total, all rallying. I wanted to point out Shell because they've delivered on a key part that shareholders were looking for, and that's increased payouts, which of course they slashed amid the pandemic. So their payout is 4% higher. They've also used the extra cash they have on hand to pay down some debt. So those shares rallying about 1.5%. Unilever, another one to gain today. So their results also better. We had just heard from the CEO, thanks to a lot of the high-end personal care, beauty type products. But again, part of the reason shares are rallying here is because of the return of cash to shareholders, but this time in the form of buybacks. They've announced a €3 billion buyback program. Airbus, another stock to do very well today. Bernstein analysts point out that they beat on all key metrics. This is, of course, significant given that the air industry has been struggling, though Airbus executives pointing out that it's because of fluctuations in the market. It doesn't necessarily mean this pace is going to continue for the rest of the year. Now, when it comes to the market as a whole, the message is coming from the Fed, and the Fed is staying on message. FOMC really redoing their risk assessment in a way, perhaps less risks out there, pointing out the strength in the labor market. That means that dollar can continue its weaker trend. It's mostly flat now, but some of the more risk-sensitive currencies, such as the pound, is gaining versus the dollar. And I also just want to flag NASDAQ futures, which are up higher, leading the market after that Apple and Facebook blockbuster earnings that had those shares moving higher after hours, Anna.
Yeah, absolutely. Certainly keeping an eye on tech earnings. Danny, thank you very much for that. Also keeping an eye on telecom equipment companies here in Europe, because we've had earnings out from Nokia, and the response to the earnings from Nokia really strong. We see the share price up quite considerably in this morning's trading session. We see some real strength in that share price. Adjusted operating margin 10.9%. That was against an estimate of just 2%. So much more profitable business than had been anticipated. The share price up by 13.7%. We're also seeing some other commentary that's really clearly impressing analysts. The Q1 results significantly above expectations, according to analysts at Odo. They are talking over at Nokia about remaining alert to limited semiconductor availability, but going on to say that the impact of the chip shortages will not be material. Interesting to see they keep their outlook despite that outperformance. We will talk shortly to the CEO of Nokia. Pekka Lundmark is going to be joining us a little bit later on in programming. That's in around half an hour's time, in fact, and we'll talk to him about that. We'll talk about the competitive threats as well, talk about how they are doing against rivals in the sector. Let's get a Bloomberg Business Flash, though, for you now. Here's Laura Wright.
Thanks, Anna. Apple's had a blockbuster quarter with soaring revenue and stronger than expected demand for iPhones. But there was one major snag. The global chip shortage is finally catching up to the tech giant. Executives are warning that supply issues are hitting the sales of iPads and Macs, two products that performed well during the pandemic. Qualcomm is giving a bullish outlook for the current quarter, buoyed by demand for 5G phones. The world's largest smartphone chip maker is seeing a boost in countries like China as part of the world's return to normality. The firm is also seeing demand from outside the mobile phone market for connected devices and home electronics. China is reportedly planning to slap a fine on Tencent as part of its antitrust crackdown. Reuters is reporting the tech giant could face a penalty of at least $1.6 billion. That's less than the amount levied on fellow titan Alibaba. The company reportedly faces the fine for not properly reporting past acquisitions and investments, as well as some anti-competitive practices. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright with some of the corporate stories we're covering this morning. Sticking with that theme, European corporate results are in full swing, and it is a big week for European banks. Investor optimism in the sector's recovery seems to be paying off with a spate of strong results. The Stoxx 600 Banks Index is picking up pace after stalling last month. Let's think about the economics that's driving this better picture. Janet Henry, HSBC Global Chief Economist, is still with us, and clearly one of the things that would please bank investors, Janet, would be to see steeper yield curves. That's often cited as many as, well, flat curves, making it difficult to make money in the banking world. In terms of the macro inputs then for banks to deal with, what are you expecting to see in yield curves, Janet? Do you still see them steepening? I suppose we can think here about Europe specifically. Europe being behind the United States in its recovery. Do we still have some steepening to go in that curve?
Well, I'm not the fixed income strategist, but obviously we've had the ECB really pushing back against any tightening in financial conditions, although their last press conference, I suppose, added a little bit of ambiguity to that statement. But what we probably are going to see, obviously, is that Europe is at a different stage because of the more recent lockdowns. The recovery, the bounce back in growth is going to be coming through a little bit later than what we've seen in the UK and in the US. But we've seen a rebound in consumer confidence. Lately, we've seen a revival coming through in terms of the pace of vaccinations. We're going to see a pace of reopening. And actually, even on the inflation profile, while I don't think anyone is really worried about inflation risks in Europe to the same degree as perhaps they are in the US, the peak in inflation comes a lot later in Europe. It's in the final months of the year that we do expect to see higher inflation. So yes, it is possible, even though we still think that bond yields are driven globally, you do get variations within regions, and it could be that as part of this later recovery and rebounding growth, we do see things come through a little bit later in Europe.
Yeah. As you say, things have spread across the Atlantic, and the ECB has had to push back on that in the past. One of the other things that's come out of this earnings season, Janet, has been talk about supply chains. We see big tech companies talking about this. We see healthcare companies talking about it. Certainly the auto sector talking about supply chain issues, and specifically around semiconductors. Is this something that's showing up from a macro perspective at all? Is it delaying supply, delaying output sufficiently for that?
There's certainly a lot of discussion about it. And as you say, whether it's an auto company, a toy maker, a phone maker, we're all learning quite how many semiconductors and electronics are involved in all of these different sectors. At the macro level, we're seeing it in some areas of producer prices, and we're seeing it in some of the survey data. We're also at the CPI level, obviously seeing that mix of a sharp rebound in goods price inflation. We've seen that in the US. For the last couple of decades, it was always you had goods price deflation. Over the last year, you've had a really sharp rebound in goods price inflation, but service sector inflation has been a lot weaker because we haven't seen the same revival in service sector spending. So I think we are seeing it, and we will probably see further evidence of it. Powell talked yesterday about these ongoing risks regarding bottlenecks. He obviously still sees them as transitory, that we will see some of these bottlenecks be ironed out, but it could take perhaps longer than is feared. Things could be a little bit stickier. And certainly on our profile, we think in 2022, you'll see slower goods price inflation and actually some kind of revival in service sector inflation. So far, some of it's going on margins and disruptions rather than feeding through to the CPI level.
Yeah, that's interesting, Janet, because I was going to ask you about pricing power. That's another theme of the earnings season. A number of companies talking about their ability to set prices, and I wonder if you've seen anything of that in the data, given what you just said there about PPI, factory gate prices, and maybe in the services sector.
On the good side, yes, we have seen some element of it. It has been. But on the, I suppose, as I say, it's part of a broader rebound, goods demand. Say, for instance, in the US, over the course of the last year, it's not just that we're way above pre-pandemic levels, we're above the pre-pandemic trajectory. People haven't been able to consume services. The bulk of spending as it's come through has been very much in goods. We've even seen that in the retail sales figures that we've seen for March. So there's been strong demand in those sectors where you've also seen the bottlenecks. And yes, you have seen that in the hard data for the CPI. But remember, when you're thinking about consumer spending in the US, nearly 70% of consumer spending is on services. So even getting some big pickup in goods prices doesn't necessarily have a lasting impact on CPI. It's a relative price adjustment. And as we all know, in the core PCE, for instance, a third of it's rental prices. So it adds to the inflation narrative and the inflation risk. But for broader inflation, there are a lot of different moving parts.
Janet, thanks very much. Thanks for your thoughts this morning. Janet Henry, HSBC Bank Global Chief Economist. Janet will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. Coming up, we'll stick with that earnings story, but we'll talk about tech. Apple crushed revenue estimates as demand for devices surged. It also raised its buyback program by $90 billion and boosted dividends. We'll dig into Apple's results next. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Welcome back to the European market open. 23 minutes into a positive session for European equity markets. Positive outside of the Xetra DAX at least, up by 0.4% on the stocks Europe 600. Let's talk about tech, because that is certainly pushing up expectations on US futures. NASDAQ futures up 0.8%. And Apple specifically, because that business had a blockbuster quarter with soaring revenue and stronger than expected demand for iPhones. But there was one major snag. The global chip shortage is finally catching up with the tech giant. Executives are warning that supply issues are hitting sales of iPads and Macs, two products that performed well during the pandemic. For more on Apple, let's get to Matthew Bloxham, our Bloomberg Intelligence expert on the sector. And Matt, good to speak to you. So what is driving Apple's record March quarter revenue? This was a pandemic winner, I suppose.
Yeah, very much so. And it's been a pandemic winner for the last few quarters. I mean, you know, we saw incredible strength across all of their product lines. But, you know, it's still very much an iPhone-led company. You know, out of the roughly $90 billion of sales in the quarter, $48 billion, so over half, were from the iPhone, up 66%. Year on year, so still incredibly important to the business, and that's really down to the iPhone 12, which was their first 5G phone, which launched in Q4 of last year, but this was the first full quarter of sales, and it was they saw great strength in the higher end of the product range, so the more expensive iPhone 12 Pros and Pro Maxes, which has kind of really helped. There's a volume and pricing effects there.
Okay, so that's two positives. What about the negative, the look ahead, and the possibility maybe that the global chip shortage has an effect?
Yeah, that's right. I mean, they said $3 to $4 billion headwind in the next quarter, you know, which is significant. But to us on the call, they sound fairly relaxed about it, and their newer devices, which have this new M1 chip, got the sense they don't see those being affected. I think, you know, analysts, I think, generally a little bit more cautious that as people come out of lockdowns, that pandemic strength that's helped them, people buying iPads and new computers to work at home, that will start to fade. But I think the company sounded more optimistic about the strength of the product lineup and sustaining that demand, to be honest.
Okay, Matt, thanks very much. Thanks for bringing us the update. Certainly one we'll be watching when US equity markets open up later on today. Matt Bloxham from Bloomberg Intelligence. Coming up on the programme, as the humanitarian crisis in India worsens, businesses around the world step in to try to do what they can to help. We speak to the Group CEO of the UK-India Business Council, talk about bilateral corporate efforts and cooperation to try to do something to help the people of India. That conversation coming up next. This is Bloomberg.
if you can just scan all the incoming mail, all the incoming luggages, it's going to be a massive time saver. And it means that we can capture a lot more of the illegal wildlife trade that's currently going undetected.
So our focus is odor detection. And this is because no matter how you're bound, what container you're in, you're still producing and releasing odors. And we're kind of building off of wildlife detection dogs.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European market open, half an hour into our European trading session, and things looking fairly positive at the aggregate level, less so for the Xetra DAX, which is down by 0.2%, the FTSE 100 and the CAC 40, both up by more than 0.5% though, so Stocks Europe 600 is positive. Just looking for the sector moves, and we have personal goods is certainly the biggest gaining sector, and the biggest weight in that sector to the upside is Unilever, so I'm glad we managed to bring you our conversation that Anne-Marie had with Alan Jope a little bit earlier on, but that stock, the return of cash to shareholders and the outperformance of some of their numbers, that stock up by 3.5% as a result of the company's performance. The sector to the downside is autos and parts, and so that goes some way to explain why we see weakness in Germany today. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President Joe Biden says the U.S. has turned the corner on the coronavirus pandemic that's killed more than 500,000 Americans. At his first address to a joint session of Congress, the president promised tax increases on the wealthy to pay for his $1.8 trillion spending plan. He now sees America turning crisis into opportunity. The UK has ordered an extra 60 million doses of the vaccine produced by Pfizer and BioNTech. It will form a part of the booster programme to protect the most vulnerable people against COVID-19 before winter. The aim is to ensure that the most at-risk adults are fully protected amid a potential surge when the weather gets colder. Michael Collins, one of the 3 astronauts on the historic Apollo 11 moon mission, has died aged 90. He became known as the Forgotten Astronaut despite his pivotal role in the mission. He piloted the command module circling the lunar surface as fellow astronauts Neil Armstrong and Buzz Aldrin became the first people to walk on the moon. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura Wright here in London. Let's turn to the humanitarian crisis in India. It's hit another daily record in cases, with more than 370,000 reported in the last 24 hours. And more than 3,000 lives were lost. As authorities and hospitals struggle to cope, businesses are stepping in to help ease the crisis. The lack of medical oxygen has had devastating consequences, and a bulk of the efforts have been directed at boosting supplies. My next guest has been part of coordinating corporate efforts between the UK and India to provide help on the ground. Joining us now is Jayant Krishna, UK India Business Council CEO, who joins us now from New Delhi. Jayant, good to speak to you. Thanks so much for joining us. What are you able to do to try and help? What is the business community doing to try and help here?
The situation is on the ground is quite grim, that everybody knows. So what we're trying to do, we have reached out to our large network in the UK, extending to thousands of businesses. We've written to them, we have appealed to them through our website, and we are talking to many of them directly to figure out, that what is on a purely humanitarian basis, what's the help that they could render. And we are collating that data, and we are working very closely with the British High Commissioner in Delhi, as well as the Indian High Commissioner in London, to mobilize the business, to canvass the support and put things together, and eventually help the two governments in lining up the logistics also, so that the benefits and the support reach the beneficiaries, in the quickest possible time. So that's the kind of coordination we are doing,
That's the kind of coordination. Those are the supplies that you're trying to get to the people of India. Jayant, does it feel like a drop in the ocean? Does it feel like the business community, the help it's rightly offering, does it feel like it touches the sides?
In a way, yes, because UK, the Prime Minister has already sent, and India has already received lots of oxygen concentrators and so many other things. But the fact is, the gravity of the situation on the ground is so huge that the more you do, the more seems to remain to be done. So UK is doing, US President has also agreed to intervene and ensure that the supply of raw materials which are required for production of vaccine by the two companies in India, that also is eased out. So I think there are efforts all around, and yes, the crisis on the ground is so huge that there's a long way to go. As far as oxygen goes, I think there has been slight improvement in the last 2 days with a lot of industrial oxygen, with steel plants and many other companies were producing. That is being shipped to major urban centers. It's not that easy because bulk of the oxygen that they manufacture is actually in the gas form, and what gets filled in the cylinder is largely in the liquid form. And even to ship it, you don't need ordinary tankers. You need cryogenic tankers. So all that is there. Lots of governments are helping, there's been some improvement, but still a long way to go because the requirement of oxygen is at an unprecedented level. Some pockets in the country, like Bombay, which is a business capital, has shown some improvement and some dip in the numbers, and therefore the strain on the hospitals is relatively less. But Delhi is to show that improvement.
Is there support either in the wider population, Jayant, or within the business community for any kind of tougher measures, any kind of further lockdowns? I know India had a tough experience with lockdowns in the earlier wave of coronavirus, and I know that we have seen some state-implemented regional restrictions coming in, but is there any sense that that is being called for, that would be necessary at this point? Is that part of the narrative at the moment?
Surely. While we have reached out directly to the businesses in UK, but for example, if you look at the Indian diaspora, we have about 1.5, 1.6 million people forming the Indian diaspora in UK, and many of them are very, very affluent. So I think it's an appeal through your channel to them as well to reach out to help their motherland. Because it's very, very important. We need everything today. We need empty oxygen cylinders in 10 and 45 liter capacity. We need oxygen concentrators. We need remdesivir, and a whole lot of, and even oxygen manufacturing plants are required. So any help at this point of time, this is an unprecedented crisis. Some say this is the biggest crisis since the partition of India happened. And the wave 1 was incidentally handled quite well by government of India. But wave 2, nobody anticipated that the numbers, we are yet to reach the peak, but the numbers are already 4 times the peak of wave 1. So it's a huge challenge, and the government, the industry in India, and in the UK-India economic corridor, we are leveraging that help, and I'm sure in days to come the situation would improve, before the numbers start going down.
How is the political response, the international political response being interpreted here, Jayant? Clearly, help is being sent. You've called out for further assistance there. And some help is being sent by the US. There's a conversation there, and by the UK. But the UK and many other countries saying they don't want people from India to travel to the UK anymore. We've now seen the US calling on its citizens to leave India. How is all of that being interpreted on the ground?
Given the situation in India, US and UK and many other countries who have imposed travel restrictions or issued advisories or made it necessary for people coming back from India to quarantine, I think it's in the fitness of things, and it's a temporary measure. As the situation on the ground improves in India, I'm sure these restrictions will go. And I don't see anything wrong, because these countries, to protect their own people from the virus reaching through Indians or people of their nationality who have traveled to India and coming back, I think they are perfectly all right in putting these restrictions for travel from India. And I'm sure sometime later in May, as the numbers reduce, these would go away.
Thank you so much. Thanks for joining us, Jayant Krishna, UK-India Business Council CEO, clearly calling there for more support from businesses globally, essentially, for what's happening in India. Coming up here on the programme, we'll get back to our conversation around the markets. It is 8:38 here in London, 9:38 in Paris or Berlin. We'll pivot to a conversation around Fed policy. The Fed upgrades its economic view, but Chair Jerome Powell says it's not time yet for tapering. We'll discuss the impact on markets with the Market Live team's Laura Cooper. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Tonight, I come to talk about crisis and opportunity. Together, we passed the American Rescue Plan, one of the most consequential rescue packages in American history. We're going to get rid of the loopholes, allow Americans to make more than $1 million a year and pay a lower tax rate. And the IRS is going to crack down on millionaires and billionaires who cheat on their taxes. Trickle-down economics has never worked. And it's time to grow the economy from the bottom and the middle out. Wall Street didn't build this country. The middle class built the country. And unions built the middle class. There is simply no reason why the blades for wind turbines can't be built in Pittsburgh instead of Beijing. No reason. None.
Some of the highlights there from President Biden's first address to Congress. Joining us now is Laura Cooper, Bloomberg Markets Live macro strategist, and we see some positive response in the main, well, to the Fed and also to what we heard from President Biden then, Laura, in terms of his fiscal stimulus plans. I was saying this to Mark in the last hour. It's interesting how the market seemed to like tax cuts under President Trump and now finds enough to like about fiscal policy and fiscal redistribution policy in what President Biden is talking about. The market just wants to look rosily, I suppose, on a plan.
Well, and that certainly is the case, Anna. I think that markets are just grasping for any kind of narrative that continues to propel stocks higher, continues to keep just this overall broader risk sentiment quite sanguine across markets. And I do think what's driving the Fed this morning, or sort of what's driving markets this morning, is actually the Fed. And that's because the main message was just the fact that keep calm. They're going to continue to ease on. Yes, they see, price pressures as transitory. They're taking a holistic view of the labor market. Millions of Americans remain unemployed. And so, yes, we are seeing just a string of economic data come through the U.S., but that's not reason yet enough for them to shift their policy stance because they don't yet see that substantial progress that's needed.
Keep calm and ease on. I could see it on a coffee cup somewhere near you, Laura. That's for sure. What about the Markets Live question? You've been thinking about tech earnings, no doubt. How long before the Nasdaq reaches 20,000 is the question you've been asking. It seems as if tech earnings are certainly pointing in an upward direction.
Well, and when I read this question this morning, unfortunately, I don't think most market watchers have a crystal ball on timing that 20,000 mark for the NASDAQ. It's still quite a ways away given where we are now. And I think the question is, yes, we've had these blowout tech earnings from Apple, from Facebook, and that's largely reflective of this first quarter, partly this work from home environment. And I think the question now is really, given these upbeat upbeat earnings, can they really sustain that financial momentum going forward? It's unlikely to be the case because we are seeing economies reopening. We are going to potentially see yields resume their climb higher in the U.S. on the back of that further stimulus. So I do think it's going to be quite a challenging environment for the NASDAQ to continue to gain. And because that's likely reflective of just more of that cyclical rotation, those fundamentals for that shift are still in play.
Laura, thanks very much. Laura Cooper, Bloomberg Markets Live, macro strategist. Thanks for joining us here on the program. We are 45 minutes into what is a positive story for European equity markets in the main, and a lot of positive response to some of the earnings stories, including this one. Nokia shares jumping after a big earnings beat. We speak to the company's CEO, Pekka Lundmark, after the results hit the wires a little earlier on this morning. This is Bloomberg.
trading revenues coming in better than expected, everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European market open. 48 minutes into a European trading session that has weakness for autos and that related sector, so the DAX is fairly flat. But elsewhere, we see moves to the upside for European equity markets, up around 0.5%. The FTSE and the CAC, as you can see, doing well. Also doing well, shares in Nokia. Let's turn to the telecoms equipment manufacturer. Nokia shares are soaring after it reported first quarter sales that beat estimates. The new CEO, Pekka Lundmark, has embarked on a restructuring plan that slashes costs and steps up research and development. That's as Nokia seeks to take back market share and catch up with 5G rivals. I'm pleased to say Pekka Lundmark joins us now, the CEO of Nokia. Pekka, very good to speak to you once again. It seems that your numbers were much higher, in particular on some of the margins, much higher than the market had anticipated. What did you manage to deliver on that the market had not seen?
Yeah, it was a great quarter. We are seeing growing demand in 5G when operators are increasing their investments, but also because of the pandemic, we have seen a lot of increase in network demand for fixed connections, optical connections driven by remote work and so on. We had 9% comparable currency top-line growth, which is really good for the first quarter.
You talk about remaining alert to the limited semiconductor availability, but you say that the chip shortage is not material. How are you able to navigate around this and to make sure that this is not a material risk?
You know, it is a real shortage in the market. It's not driven only by our sector, but it's driven by automotive, electric vehicles, data centers, consumer gadgets. Hey, look, it's a fight out there, and you have to be in daily contact with your suppliers. You need to make sure that you are important to them, and I'm really happy our people, our organization did a great job.
You did a great job. I mean, what dictates who gets what, though? Because we've heard from various sectors, from telecom equipment to healthcare to autos, and they all want chips. What's dictating who's getting the chips at this point, Pekka?
Well, ultimately, you go back to supply chain management, you go back to relationship management with the suppliers. When there is a shortage on the market, it is things like how important you are in the big picture, how strong your relationships are, and how you manage expectations.
Let me ask you about the 5G performance that you delivered. The loss of the Verizon 5G contract to Samsung, that was something that many analysts were citing as something to watch as a negative in your earnings. Now, clearly, you've impressed the market, but how has that loss of the Verizon contract impacted on the company?
There was some impact from that in Q1, but the interesting thing is that despite that, we had a great quarter in North American market. And what I would like to highlight is that we continue to work with Verizon in many different segments. And during the quarter, we published 5-year 5G deals with both T-Mobile and AT&T. So I'm pretty optimistic about the North American market in the big picture.
Yeah, and let me ask you about market share, because we speak to Ericsson. Ericsson keeps talking about market share growth. That's happening at the expense of somebody. What are you seeing on market share?
We expect to have 25 to 27% market share this year in 4G and 5G. That's according to our expectations. We are increasing our market share in Europe at the moment. In most other parts of the world, it is more or less stable. But then in the network infrastructure business, which is fixed connections and optical networks, IP routing, we are actually continuously increasing our market share thanks to the technology strengths that we have there.
And how does that apply to China, Pekka? Barclays analysts ahead of this earnings statement suggesting maybe you're losing market share there. Any update on the Chinese business?
We have a pretty strong position in China. We are working with our customers in many different segments. Our 5G market share is low in China, but we definitely have targets to participate in the upcoming tendering rounds that will take place later this year.
It's interesting that just a couple of months ago, we were all here at Bloomberg TV talking a lot about retail investors, the increased role of retail investors. And I mentioned this to you, Pekka, because, of course, on certain Reddit forums, we were seeing certain stocks being picked as something that retail investors should focus in on. And one of them was yours, and you saw a bump up in the share price. I wonder how much that impacts on a CEO or the management of a business more broadly when you see that kind of thing happen. Is it a nice bit of spotlight or an unwanted distraction?
Of course, it's always good as a CEO if there is interest to your stock, but hey, look, the only thing we can do is to do as good a job as possible. We had Capital Markets Day a few weeks ago where we laid out our 3-year strategy, and this quarter that we now published is a great start to that 3-year journey, and ultimately then a good job that we do hopefully is something that will be appreciated by all our shareholders, both institutional and private shareholders.
Can I just ask you briefly then, Pekka, about pricing pressures? We talked about the chip market, but are you concerned about the prices of imports? Are you confident in your ability to set prices?
Well, of course, ultimately, your own pricing power is dictated by your technology strength, and I'm pretty optimistic about how that is developing at the moment. Then the other side of the equation is, of course, the fact that the semiconductor market is tight, and there are examples of semiconductors where we are seeing prices go up at the moment because of the shortage. So it is always a balance between these two dimensions.
Okay, thanks so much for joining us, Pekka. Really good to speak to you. Pekka Lundmark, the Nokia CEO. Thanks very much for joining us. I just want to get some breaking news across the Bloomberg, and this is from Germany, and it's in the shape of unemployment numbers coming through, and actually worse than anticipated data coming through from Germany. The German April unemployment figure rising by 9,000. The estimate was actually for a drop in this number of 10,000. So that does seem to be an unexpected move. The German joblessness number unexpectedly rising amid stricter virus curbs. The government has tightened restrictions for pandemic hotspots. We know that story well. So that is part of the macro narrative, I suppose, around the German economy at this point. Keeping an eye on what's going on the euro in conjunction with that. Perhaps we see a little bit of weakness coming through. The euro down by around 0.1%. The dollar fairly flat this morning, and that has been the case for much of this morning. Getting back to the European equity markets, and we do see some moves to the upside, broadly speaking, not for Germany, incidentally, where the auto sector is still under pressure. And you can see there on your screen, the Xetra DAX is fairly flat. We've seen the autos and related parts sector under pressure this morning. Elsewhere, we see moves to the upside for European stock markets, up by 0.6% on the stock 600, and gains in London and in Paris. US futures pointing higher. We've had some positive news out of Apple overnight, really smashing through those revenue estimates. That being seen as a positive. NASDAQ futures reflecting that positivity, up by 0.8%. As many people ask questions about how sustainable strong performance is in the tech sector as we move in certain parts of the world, and certainly not all, from pandemic to recovery. That is it for the European Market Open. Surveillance Early Edition is up next. They'll take you through all the latest market moves here this Thursday morning from London. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Wall Street didn't build this country. The middle class built the country. And unions built the middle class.
Our nation is starving for more than empty platitudes. We need policies and progress that brings us closer together.
We've got a long ways to go. And also, it's going to be a different economy.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 29th of April. I'm Francine Lacqua here in London, and here's what's coming up on today's program. On the move again, Joe Biden says the U.S. has turned the corner on the pandemic, presenting a unified vision of America in his first speech of Congress. Apple crushes revenue estimates after a 66% surge in iPhone sales, even as the global chip shortage finally catches up with the company. It also boosted its buyback program by $90 billion. And Airbus gets a cash boost from a flurry of new jet deliveries in the first quarter. The chief executive, Guillaume Faury, joins the program shortly. Now let's get straight to the markets. U.S. equity futures higher alongside European equity futures as investors cheer President Biden's ambitious spending plan, also given buoyant earnings from U.S. tech giants like Apple. Our Danny Berger, a ray of sunshine in the morning, joins us now. Danny, what do you have?
Francine, I feel like there are so many macro stories, but they all are pretty positive for risk assets. Those ones you lined out, and of course, the Fed. Look, the message is the Fed, and the Fed is on message. That is one where, yes, inflation might be creeping higher to some degree. The labor market is strengthening, but they are retaining that dovish message. So what does that mean? It means the dollar can resume its downward trajectory. It is flat today, but when we look at riskier currencies like sterling, they are moving higher against the dollar after essentially a two-day holding pattern waiting for the FOMC. You pointed out that U.S. futures are stronger. We have yields ticking higher, although I should say bonds did get a bid during that FOMC meeting. I do want to point out one thing, though, that happened that did seem to spook markets during the FOMC meeting. So around this time over here, you see this drop. This is when Powell says that there are signs of froth in the market. So this did spook investors just a bit. Stocks ended lower on the day, but of course, they're coming back higher in future markets. So, you know, a spook, but not enough to completely throw markets off. Of course, the other big thing to drive this higher are these two companies here, Apple and Facebook, really stellar earnings, be it confirming the ad picture we had from Google, that ad spending is higher, prices are higher, or from Apple that there is demand for devices. Of course, these companies are so massive. They make up such a big part of the S&P 500 that if they're having a good day, both the NASDAQ and the S&P 500 probably will too, Francine.
Danny, thank you so much. Danny Berger there with some of the big names that actually reported yesterday and will report further today. Now, President Joe Biden made his debut speech to Congress yesterday after almost 100 days in the job. He said the U.S. had turned a corner against the pandemic while urging Americans to get vaccinated.
Today, 90% of Americans now live within 5 miles of a vaccination site. Everyone over the age of 16, everyone is now eligible to get vaccinated right now, right away. Go get vaccinated, America. Go and get the vaccination. They're available.
The focus for business and investors was on his tax proposals. The president confirmed that his $1.8 trillion American Families Plan would be funded by an increase in taxes for the wealthiest. Well, joining us now for more is our D.C. morning editor, Kathleen Hunter. Kathleen, first of all, this was a significant speech, but actually, will he manage to get some Republicans to vote for it?
Well, that's the big question. And I think that, so far there's very little indication that there's any degree of Republican support for the types of things that Joe Biden is proposing. He could have gone many, many ways in terms of this American Families Plan, and the decision to finance portions of it with these heavy tax increases on the wealthy certainly will appeal to the progressive left and to even some more moderate Democrats, but definitely doesn't have a whole lot of, or if any, support among Republicans in Congress. And so it's looking like Democrats may have to go the route of reconciliation, which is a process that allows them to pass measures with only Democratic support. If they do that, that creates its own challenges as well, but it doesn't look like it's going to be necessarily a very bipartisan effort in Congress.
So, Kathleen, how will this differ actually from other presidential addresses to Congress?
Well, so it certainly was very different. This wasn't a traditional State of the Union address. It's occurring mid-pandemic. It's occurring after the January 6th insurrection. So there were far fewer members in the chamber. Even folks like Mitt Romney, the Republican from Utah, who's a moderate, and Joe Manchin, who's a moderate Democrat from West Virginia, they were relegated to sitting in the upper balconies instead of sitting on the floor. So the speech just logistically looked a lot different from what we've seen in the past, and I think that underscores the fact that it was really directed at the American public. This was a speech, I think, that was meant to bring the public on board in some ways more than Congress.
Thank you so much, Kathleen Hunter, there, our D.C. morning editor. Now, Smart Conversations on Bloomberg Surveillance, the early edition. Later on in the program, we'll be speaking to the chief executive of Norway's biggest bank, DNB. After that, we also speak to Chatham House chairman and former Man U board member, Jim O'Neill. So that'd be a good conversation on the Super League, but also on the economy and the markets. Up next, though, we talk aviation. Guillaume Faury, the chief executive of Airbus, joins this program. If you have any questions for our guests, just go to IB and go IB Plus TV Go. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
folks. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Airbus is warning that its outlook hinges on no further disruptions to air travel or the global economy. Well, setbacks in fighting COVID have forced governments to tighten borders, weakening airlines and leasing firms that make up its customer base. The recent virus surge in India has hit one of the world's strongest aviation rebounds. Well, my colleague Guy Johnson is now standing by with the Airbus chief executive. Hi, Guy.
Good morning, Francine. Thank you very much indeed. Airbus's numbers this morning, Q1 numbers, pretty much beating across the board on every single major metric. The key question now, of course, Francine, is how sustainable are these numbers? What does the rest of the year look like? As you say, we're joined now by the Airbus CEO, Guillaume Faury. Guillaume, good morning. Q1 looks really strong. How sustainable is it for the rest of the year? What does the picture look like?
Good morning, Guy. And indeed, we released some good numbers this morning, driven mainly by the good deliveries we had finally in Q1 this year, and also the good support of our defense and space and helicopters businesses. I think we should not take Q1 as an indication of the full year yet. There's still a lot of volatility, of uncertainty. I think we have not passed what we call the tipping point of the pandemic, and therefore we have to remain quite prudent. We see a lot of diversity in situations across the globe on the recovery or sometimes the aggravation of the pandemic. It was rightly mentioned, and India is really in a very difficult place. So it's a good Q1, but it's not yet a full year.
What does Q2 look like currently? What kind of delivery numbers do you think you're going to be looking at?
It's too early to say, and we don't have a very strong start in the month of April. We'll see moving forward what it means. So again, that's the reason why we've been prudent, because even for Q2, it's too early to say what it will look like. And we've been looking a lot at the demand last year. It has a bit stabilized overall, with the complexity I was mentioning before. But we start to look even deeper now at the supply chain, as there are many repercussions of the pandemic on the whole supply chain. And that's really an area of focus to make sure we can have a good Q2 and then potentially a good second half of the year. But again, challenging situation across the board.
Guillaume, airlines currently have still a lot of aircraft parked. My question is, what is the lag between a recovery in airline demand, i.e. passengers coming back, and a pickup in demand for new aircraft?
Yeah, that's a very important question. And in fact, there's not a single answer to that question. We have different market segments with very different dynamics. When it comes to the single aisle, which is the bulk of our production, actually, it's quite directly connected. And we think that when we will see the tipping point in terms of passenger traffic on the single aisle, this will be a strong signal for the recovery, or the start of the recovery on the airplane deliveries. On the wide bodies, it's a very different situation. There was already overcapacity before the start of the pandemic, beginning of last year. And we think it will take by far more time for our own business to recover. And if I try to give a bit more color, we think that the recovery, the tipping point for long-range travel might be in 2022. We think the recovery for us would be more between 2023 to 2025. So you see that there is a bit of disconnect on the wide body, or a time lag between the tipping point for passenger travel and for airplane deliveries.
In terms of new orders, though, you talk about deliveries. Let's talk about new orders. When do you think airlines are going to be in a position to place new orders for new planes?
We have started to see the first indications in North America and the US that airlines are starting to look at new orders, mainly for single aisle or solely for single aisle. That's the US. We think it will come progressively for the rest of the world. So I would say prudently and modestly in 2021, and probably in a much stronger way in 2022.
Guillaume, the pandemic has significantly changed airline economics and airline business models. Freight has kept many airlines alive during this pandemic. Freight rates have been elevated and demand has been strong. The question is whether or not that is a permanent shift. I've been talking to a number of airline CEOs over the last few days. I'm getting mixed messages, but some certainly are talking about a stronger freight market going forward. Do you see that as well? And how is that going to impact the way you plan for your business?
So on the wide bodies, we are not a major player today in the freight market. Our main competitor is almost exclusive in that segment, and it's an important segment moving forward. So we are looking at that segment very carefully. We don't like the idea that we are not active in that segment, and that's probably an area where we will be more aggressive and where we will invest moving forward. We have two strong platforms in the wide-body business, and we think they might deserve at a point in time a freighter version so we could compete and bring our solutions to our customers also in that segment.
Guillaume, how close are you to making that decision? We hear that you're only 50 orders away, for instance, of pulling the trigger on a 350 stretch that would be a bit bigger than the larger, the 900 at the moment, that would be a freighter. Can you confirm that? How close are you to making that decision? How many orders do you think you need to make that a viable money-making option?
I can't confirm, and we won't take a given number. We are looking at the market potential over the life of the product. So we're really looking at the life cycle and the whole business case. Till the decision is made, there's no decision. So I have no time frame to share with you, and no numbers, no magic numbers in terms of orders. We're really looking at the market potential and the strength of the product, and we believe, as I said, our platforms, our wide-body platforms, are very strong products for the freight.
What are the customers telling you at the moment about that possibility?
They tell us that they believe our platforms and the 350 in particular that you mentioned before would be a very strong candidate for a good freight version. And they tell us that they really would like to see Airbus being a player in that segment. So that's good news for us.
The other thing that's changed in the airline economic story is business travel. I was talking to one CEO, an American CEO, a large American carrier last week, who told me that it is possible that business travel doesn't come back for 10 years in the way that it was pre-pandemic. Again, how does that change the economics of the way you look to your product lineup?
It changes the perspective for our customers and the way they share between leisure and business and the layout of the cabin and the revenue model. Well, what I hear currently is not exactly consistent with what you just said. It's very difficult to really know what will happen, but the major trend seems to be that it will take 2 or 3 years to recover, but people, or most of the people, tend to believe that business travel will recover and will probably be close to what it was before. And we had a different view last year in 2020. We thought business travel would never recover, would never be what it was before, thanks to the use of all the digital tools and the Zooms and the likes. Well, we tend to believe now, based on what we hear, that there will be a combination of more use of digital tools, but also still a lot of business travel, because many businesses now really see the downside and the problems of not being able to travel and to visit your customers, your partners. When it's about infrastructure, designing products, you need to be on site.
Guillaume, you talk about that digital shift that we're all experiencing at the moment. One of the results of that digital shift is there is currently a global chip shortage. Does that global chip shortage impact you? Are you experiencing any problems both within Airbus or within your supply chain?
At the moment, we don't experience problems because of that chip issues. So it's not a problem for us, or it's not yet a problem for us. We think anyway we will not be impacted with the same magnitude like other industries, like the car industries. We are monitoring the situation very carefully, but on that front, for the moment, we feel rather safe.
Guillaume, Airbus is invested in China. Your aircraft currently are fully certified to fly. Not everybody can say that right now. How big an advantage do you think you have in China? What is your plan to take advantage of that situation in China? What do you see demand looking like from China as it comes back? The domestic market's already back, international's beginning to open.
Airbus has a long-term perspective with China. We have established a good partnership with Chinese industries. We've supported our customers, I think, very strongly before the pandemic, in the pandemic, and we continue to enjoy a very strong and very trustful relationship with our customers over there. So we continue to take the long-term view with China. I think that's the way it works with China, and we'll continue to behave in the same way, believing that's the right way for China. And we bring our products. We have industrial activities over there. We are very much happy to hear that China is also looking at the decarbonization as one of their priorities moving forward. So this fits very well with what we're trying to achieve with Airbus in general, and in particular in China.
Solid set of numbers, Guillaume. Thank you very much indeed for your time this morning. We really appreciate it. Guillaume Faury, the CEO of Airbus. Francine, back to you.
Guy, thank you so much. Great interview. Guy Johnson there and Guillaume Faury from Airbus. Now we'll have plenty more, of course, on earnings. We'll also go back to the travel industry. We'll look at Boeing versus Airbus. Smart Conversations continue on Bloomberg Surveillance Early Edition. Later on in the program, we speak to the chief executive of Norway's biggest bank, DNB. After that, we speak to the Chatham House chair and former Man U board member, Jim O'Neill. This is Bloomberg.
valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've had strong underlying sales growth of 5.7%. That means we're growing faster than our markets, and it's thanks to our focus on running our business with operational excellence and good innovation, our purpose-led brands doing well.
So yes, I think we've had a good start to the year. We, as you say, had a significant increase in profitability, up 18%. The 1.4 billion is one of the biggest quarters profit-wise we've had for several years.
And today we announced a €3 billion share buyback that reflects our strong cash delivery. We're in good shape for the challenges ahead.
As you've seen from the last couple of years, we have done a mixture of both buybacks and dividends. And to the extent that we have got surplus in the business, we will be very prepared to return that.
Results with us, which I should say both beat. I mean, it's been a slew of beats for this, including U.S. companies, big tech beating handily, Apple, Qualcomm, and Facebook. The pandemic themes are still there, still buying more devices, still online, ad sales jumping, ad prices jumping. And I also just wanted to put Twitter here as well because they're rising in sympathy with hopes of better ad spending as well. Francine?
Thank you so much, Danny Berger, there with some of the stocks to watch. Coming up, President Biden unveils the American Families Plan in a primetime speech, saying he'll reward work, not wealth.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
On the move again, Joe Biden says the U.S. has turned the corner on the pandemic, presenting a unified vision of America in his first speech to Congress. Apple crushes revenue estimates after a 66% surge in iPhone sales, even as a global chip shortage finally catches up with the company. It also boosted its buyback program by $90 billion. And the Airbus chief executive actually tells this program that 2022 may be the tipping point for long-range travel. The French plane maker sees a cash boost from a flurry of new jet deliveries. Well, good morning, everyone. Happy Thursday. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 29th of April. Now, we're still in earnings season. Actually, it's been quite a week when you look at a lot of the reporting from big technology companies. U.S. stock indices actually racing ahead. Treasury yields also rising. I think it's a double whammy of the Fed giving some dovish assurance, and we had also some pretty blowout earnings from technology giants, really cementing some of the conviction that we saw about the world's largest economy, the U.S., and the fact that it's resurgent. That's filtering through to some of the Asian markets and then onto Europe. The FTSE still showing some good gains, 0.6%. And actually, the good news, the encouraging news that we got from robust earnings also filtering through some of the tech companies here, telecoms, travel and leisure, energy, the big gainers amongst industry groups in the European trading session. Now, President Joe Biden made his debut speech to Congress yesterday after almost 100 days in the job. He laid out the goals for his $1.8 trillion stimulus plan, as well as how he was going to pay for it.
Tonight, I come to talk about crisis and opportunity. Together, we passed the American Rescue Plan, one of the most consequential rescue packages in American history. We're going to get rid of the loopholes, allow Americans to make more than $1 million a year and pay a lower tax rate. And the IRS is going to crack down on millionaires and billionaires who cheat on their taxes. Trickle-down economics has never worked. And it's time to grow the economy from the bottom and the middle out. Wall Street didn't build this country. The middle class built the country. And unions built the middle class. There is simply no reason why the blades for wind turbines can't be built in Pittsburgh instead of Beijing. No reason. None.
Well, joining us now with more is Bloomberg's chief content officer and editor-at-large, Marty Schenker. Marty, first of all, the visuals were actually quite powerful. I think it's the first time in U.S. history where behind the president they were two women. What do we actually hear from the president? How different is this speech from others we're going to hear from him? Is this a unifying, speaking to the citizens almost directly speech?
Yeah, Francine, the symbolism was striking, and even Joe Biden himself started out his speech noting that this is the first time a president has ever said those words. And since the White House had briefed the press in advance, there was nothing really new in the speech, so it was more about style and tone than it was about substance, and I think it was particularly well received.
Marty, how difficult is it going to be for the Republican Party to vote this down if there's an overwhelming majority of Americans that are behind this plan?
You can't overstate how much the GOP stands by its partisan politics in the face of public polling. Joe Biden is getting really high marks, especially for his handling of the pandemic. But he's probably not going to get a single Republican senator, at least, going along with any of these plans. So he's going to have to go it alone with the Democrats. And that's just the way our partisan politics, the state of those politics is right now.
Marty, very quickly, how difficult then is it going to be for the Democrats to actually push it through as it is? Do they, they can just about do it, given the votes they have, but will they have to water it down?
There may be some compromises on the edges, and as we all know, Joe Manchin of West Virginia has raised some questions about the size of this plan, so he will be a key senator. But at the end of the day, I think the Democrats will hold together and get a significant part of his tax and spending plans through.
Marty, thank you so much. Marty Schenker, there, Bloomberg's editor-at-large and chief content officer. Now, back to the European banking sector. Norway's DNB posted a larger-than-expected rise in net profit for the first quarter. The bank said it's targeting a return on equity of 12% from 2021 to 2023, but the impact of COVID-19 makes that target unlikely to be achieved this year. Well, joining us now is Kirsten Bratten, the DNB chief executive officer. Madam Bratten, thank you so much for joining us. First of all, given all of the talk about flexible working from home, actually going back to the office, what's your policy going to be? Will people have to come back to the office full-time, part-time, or how do you see it going forward?
We have no sound.
I think actually we're just having a couple of difficulty, which often happens. I feel like it's a very 2020 pandemic thing that sometimes we can't actually hear each other. So we'll get back to the chief executive of DNB. Now, coming up, selling in May could once again be a popular trade this year. We speak to Jim O'Neill, Chatham House chair and British economist who coined the term BRICS. We'll talk to him next, but coming up, the chief executive of DNB. This is Bloomberg.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Mercedes-Benz on a path towards neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, joining us is Kirsten Bratten, the DNB Chief Executive. Kirsten Bratten, I hope you can hear me. We were starting to talk about some of what we heard from DNB, but also in general about what the banking system and actually the banking industry will look like post-pandemic. Will you require for your employees to go back to work full-time in the office?
Now, we certainly look forward to a more flexible work life also after the pandemic. We have said that the office is still a very important place to build competence, to build the organizational culture, but most people will be able to choose where they would like to work for a couple of days in the week. So right now we are continuing to do training program for our managers in order to train them on digital leadership. We are building equipment into our offices to prepare ourselves for more of a hybrid working environment, which will be a change from almost purely digital as where we are today.
How do you see that actually, playing out with your workforce? Are banks that are not as flexible going to lose out because you believe that employees really want that flexibility? And is it flexibility of time or flexibility of place where you work from?
I think it's both. I think flexibility is a direction that banks, financial industry, and society is moving towards. And I think that is not only wanted, but expected by employees going forward. The ability to work remote and work digitally, I think, is one of the advantages we have seen, and one of the reasons why Norway has fared well from a relative perspective during the pandemic. We are one of the most advanced digital societies, and actually our ability to run businesses, not only in finance, but also in other areas, is due to being advanced digitally. But I think this is acknowledged across. I mean, the trend of digitization is scaling, and we see businesses who haven't had digital business models turning around and adapting. For example, our payments app, Vipps, has had 15,000 new businesses signing up onto their platform in the past 12 months because people see that they need to be both physical and digital. But for those who aren't able to do it, yes, I believe that there's a risk of them losing out.
Talk to me a little bit about, if you look at Nordic banks in general, impairments have actually been lower than expected. What happens post-pandemic?
Well, certainly we see that 1 year into the pandemic, Norway has fared well, both dealing with the virus as well as dealing with the economy. So the downturn in the economy has been much less than most people feared entering into this situation in the month of March. We've seen crafty authorities employing support measures. Of course, it's tough for certain businesses, but overall, we continue to see a very robust portfolio, both across our SME sector and large corporates. One of the sectors that we highlight as the most challenging in our portfolio is offshore, but that is now down to 1.3% of our portfolio. And this quarter, impairments came in as a net positive to our results, driven by certain reversals. And we continue to see a robust portfolio across our business activity.
We've also heard more and more from regulators talking about a green asset ratio, and that would basically be a way of looking at some of the climate change challenges going forward. Are you expecting to report such a ratio in 2022 already?
We are certainly working to improve and build the transparency into sustainability. I think the financial industry has a tremendously important role to build in order to establish a baseline on where we are and in order to measure progress. We have worked very actively on sustainability and climate for many years and have this integrated into our credit processes. So we are preparing to report on all of our asset mix in 2022. We have clearly stated our support to a net zero emission target in 2050 from all our activities, direct and indirect, and see our role much more as an impactor by helping companies and businesses transition into the new economy and actually contribute to accelerating that rather than just deselecting and turning our backs.
But what are some of the complications or some of the benefits of this specific ratio?
I think transparency might be more important than the green ratio. There's a lot of considerations going into the green ratio. And I think one of the risks and concerns of this whole trend where we're moving extremely fast is that this to a too big a degree becomes a tick the box exercise. That is not where we will find the solutions. We need to actually put our minds to it. So we need to measure. So in that sense, a green ratio is helpful, but we also need to look beyond that. There's a huge amount of businesses that needs to transition, and there are new business models and new infrastructure that needs to be built, and it must be more than a tick-off exercise, and that could be a pitfall a little bit if you focus too much on single ratios.
Kirsten Bratten, thank you so much for joining us, the DNB Chief Executive there. Now, U.S. equities, futures, and European stocks are trading higher, supported by some blockbuster U.S. tech earnings. Now, President Biden's ambitious spending plans were also welcome news for the market. After a spectacular run for global stocks following last March's crash, selling in May could once again be a popular trade this year. Well, Jim O'Neill, Chatham House Chair and the British economist who coined the term BRICS, said that he might get behind the strategy. He joins us now. Jim, always great to speak to you. I know you want to talk about football. We need to talk about markets, the economy, lockdown, and I guess anything in between. What do you see in the markets right now?
I'm not sure I do want to talk about football.
You know you do. We all know you do, Jim. But let's start with the markets. Is it looking a bit frothy given the kind of constant earnings beat that we saw, especially from big technology companies?
I think it's definitely trickier. It seems to me from the tiny bit I've read that the reassurance message from the Fed last night was pretty powerful. I think the absolute key to watch is the ongoing evidence about inflation and inflation expectations. What is rather encouraging in the past fortnight or so is the bond market seems to have entered a state of being a bit more chilled out about these risks. And the Fed has sort of embraced that with its kind words last night. But a lot is going to depend on ironically, as is often the case with markets, on the state of the data. Because, I mean, it looks to me, it's kind of madness really, but it looks to me as though we are going to see some most staggeringly strong data from all over the world in coming weeks. And there will be days where that really freaks the markets out because, even though it's good news, because they think it'll freak out the policymakers to abandon their monetary generosity earlier. And we're probably going to go through this ding-dong for quite a while. But at the end of the day, I'm going way back now. You tell me whether it's still even published. But I used to swear by the 5-year Michigan inflation expectations survey, partly because I knew Alan Greenspan and Janet Yellen did, but and before then Paul Volcker. But I think some things like that are still pretty stable, and that now becomes really important because if we saw signs that those kind of measures of inflation expectations were rising, then I think a sell in May and go away would probably be not crazy. We've come a long way, as you said in the intro.
We have. Jim, when you look at some of the forces at play, so what makes you worried about is there anything that makes you worried about the U.S. recovery right now?
I mean, not per se. That all the issues I have and about the U.S. and globally are more to do with the sustainability and what I'd call the sort of broader environment of how business still thinks. As related to what you jokingly touched on, and we may get into, and we discussed when I was on recently, that whole nonsense of the European trash league, as I'll now call it, is indicative of a lot of business people being completely out of touch. And so policymakers are increasingly rightly focusing on trying to change the allocation of reward away from just the profit owners and manipulators to more of the wage earners, which obviously carries all sorts of challenges and risks that we haven't seen for a long time. But when you see business deliberately announcing the sort of thing that the football crowd did last weekend, it's just going to induce that kind of policy reaction way beyond football, because here in the UK, you have a government completely committed to so-called levelling up, and you see the most outrageous steps being undertaken by business in the opposite way. And so part of the question depends on whether business is really getting it and trying to pursue what you and I have discussed before, the sort of profit with a purpose kind of concept, and not just be so narrow-minded and utterly obsessed with some kind of revenue maximization the day after tomorrow.
But Jim, if you look at industries, there are industries where that actually they are obsessed and have a huge implication also for society. I don't know whether you see taxes rising across the world for big corporations. I don't know whether you see some of the big tech being broken up to maybe again level the playing field. Like what are the big shifts that you're seeing in corporates?
I mean, it partly depends on their lateral thinking and wisdom. I mean, again, following the football mess, I participated in a quite brief House of Lords debate on it, and there were two of my fellow peers that actually windfall tax on those companies. I wouldn't be surprised if you get more and more calls, as we're seeing, for a windfall tax on some of the big financial winners in terms of their stock market performance and sales, and ultimately the generosity through this pandemic. And the more you see companies inviting attention on themselves by not doing the right thing, the more it's likely that policymakers will be pressurized by society to consider those things. And so, more business people have got to wake up and realize that they have a societal remit for delivering more shared economic growth.
Do you think that UK companies, UK big corporations, understand it more than US? And do you think that Boris Johnson will do something about it? I know he's also distracted with the cash for curtain scandal right now, but will they crack down or not?
It's tough. I mean, obviously, the Tory Boris is sort of almost become prime minister de facto with a sort of very splintered Conservative Party that is essentially just very good at winning elections. And the sort of general philosophy of the Conservative Party wouldn't dream of trying to be on the front foot of the kind of thing I'm talking about, because it's alien to its sort of historical roots. But there are people around that cabinet table, Michael Gove in particular, I think of, who've occasionally made speeches about capitalism having to work better so that there isn't so many people feeling left behind. And what we certainly cannot afford is some massive economic recovery coming out of this staggering pandemic that essentially widens the economic spoils even further, because that would have major adverse long-term consequences for how the whole of capitalism has been allowed to evolve during our lifetimes. So policymakers have got to do some things here to try and make sure the spoils are going to be more evenly shared. And that has to I would hope, be more voluntarily led by industry. In that regard, I mean, you ask about taxes going up. They already are. The whole move to reverse this race to the bottom of corporate tax rates, I think, is very sensible. As I tried to argue with people when I was back in government 5 years ago, the whole sort of textbook theory, if you cut corporate taxes, it boosts investment, hasn't actually worked for the past 20 years. But policymakers carried on doing it because they believe the theory. And so tightening up on corporate taxes, which can raise quite a bit of money, it is definitely a sensible thing to do. But they may have to consider more pending how evidence and human behaviours move in coming weeks and months.
Jim, are we underestimating actually what kind of recovery we'll get? I don't know whether it's stronger, or if you see at some emerging markets and you worry that some of these variants could actually come back, that vaccines don't work. Are you optimistic that we're on the right track and that we'll put the pandemic behind us, or will it linger for quarters to come?
So, Francine, I mean, variants aside, I mean, if I look at the proprietary indicators that I presided over Goldman calculating back in the early noughties, around the same time as the BRICS thing, particularly the components for its high-frequency leading indicator, I still follow 5 or 6 of those religiously every week and month, even though I'm not in the business. And right now, the 6 that I trust the most are all showing the same thing, and I've never seen anything quite like it. And it looks to me that the next 2 quarters, many parts of the world are going to show that probably the highest year-on-year, that's easy because of the base year, but also perhaps the highest quarter-on-quarter GDP improvement that's ever been recorded. Some places, obviously India right now, won't be able to share in that, but the ongoing, in additional, more powerful, decent news, it looks to me as though there's more and more vaccines being produced. And as we creep through time, some of the manufacturing challenges are also starting to be beaten. So I suspect in the second half of the year, we're going to have a lot more vaccines that will make it easier to get a lot of these vaccines into the emerging world as well.
Jim, since I spoke to you last, there's now, we're talking about valuations of a lot of these super clubs, on the back of the league. Do you have any idea of how much Man U is worth, or do you know of anything that, that could actually change, I guess, the way that these clubs are held?
Well, if you look, I mean, it's not really a fair, normal, truly free floating price, but Man United is quoted on the New York Exchange every day, and I think where it closed last night, it was worth just under £2 billion, which is probably a lot more sensible than the ridiculous numbers that some of the red tops have been talking about. Given what's happened, in my view, these top clubs have shot their own toes. The kind of valuations that they would be hoping for if they ever had any idea of selling them has just been undermined by this self-inflicted mistake. So
do you think some of them will be up for sale?
Listen, Alex Ferguson once said to me that a football club is worth what some idiot wants to pay for it, and to some extent there's some truth with that. But it seems to me. There's a lot of things now being opened by this, and the threat of regulation in the UK, which seems to me to be pretty genuine, would mean suggests to me that all sorts of things could unfold in coming weeks, even though the current owners of these clubs probably don't even realise it still.
Jim, thank you so much. I always love speaking to you about football because you're always so passionate and never mince your words. Jim O'Neill, Chatham House chair, joining us. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons joins me out of New York. We'll have a full lineup, of course, of markets. We'll look at the Fed. We'll look at a lot of the earnings out there. Today, it's Amazon, so we'll look at the everything store after that pretty impressive blockbuster beat from Apple yesterday. This is Bloomberg.
Renewed global attention on the fact that the efficacy levels of Chinese vaccines have not reached the levels that we've seen from the mRNA vaccines in Pfizer and Moderna, and even Russia's vaccine. All of these have efficacy levels above 90%, but the Chinese vaccines are ranging between 60-something% to just below 80%. And specific attention is being paid on one Chinese vaccine, Sinovac. This vaccine has been proven in a large-scale Brazil trial to have an efficacy level of above 50%. 50% is the minimum threshold that regulators will accept for approval. So that is concerning, especially because this is the Chinese vaccine that's been distributed most widely around the world. A lot of developing countries like Brazil and Indonesia are dependent on this vaccine. So questions are starting to mount on how is this going to affect the global immunization effort. But what's also really important to keep in perspective is that the 50% efficacy rate is looking at all symptomatic disease, even mild sickness. And the truth is that all the vaccines we have out there right now, including the Chinese ones, are nearly 100% effective at preventing hospitalization and deaths. And those are the two most important things: bring down serious sickness, bring down fatalities. We're still going to see that happen around the world, and that's why it's really important for people to keep getting vaccinated, even if the only access they have is to a Chinese vaccine.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America. BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Wall Street didn't build this country. The middle class built the country. And unions built the middle class.
Our nation is starving for more than empty platitudes. We need policies and progress that brings us closer together.
We've got a long ways to go, and also, it's going to be a different economy.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lyons.
Good morning from London, Berlin, and New York. Our top stories today. Biden's big bet: the president tries to sell America on sweeping change while calling on business and the wealthy to pick up the tab. Shifting into high gear, U.S. futures rise, tech giants post blowout earnings, and the Fed upgrades its view of the economy. And feeling the pinch, Apple, BMW, and Ford are now seeing their revenue squeezed as a global chip shortage gets worse. There's quite a lot going on in the markets. Of course, this double whammy of looking at the Fed that was pretty supportive of assets and looking at these blockbuster, very robust earnings. Kaylee, how's it shaping out today?
Well, and we have to look at Biden's economic spending plans that he outlined in that address to Congress yesterday. So a lot for markets to digest, and where it leaves us is mostly in positive territory for equities all across the world. It was a positive session in Asia overnight. Japanese markets were closed for a holiday, but we were up by 0.9% in China, the better part of 1% in Hong Kong. And South Korean equities actually were the only real underperformer in the Asian session. One stock in particular within the South Korean session I wanted to note was Samsung Electronics. They beat in the first quarter, but the company warned about the continued fallout of that global semiconductor shortage, and as a result, the shares closed lower by about 0.5%. The yen is the big underperformer in the G10 space today. Not a lot of bid for a safe haven asset like that. It is just shy of 109 at this point. And I wanted to point to China steel futures. They hit a record amid China's crackdown on emissions for some of the steel makers. As for what the picture looks like in Europe, it is really green across the screen on Map Markets Go, with few exceptions. You have the FTSE 100 in the UK higher by about 0.7%, even though the British pound is the outperformer in the G10 space today. It's sitting around 139.42 to the dollar. The stock 600 is higher by about 0.4%. And then in the commodity complex on the London Metals Exchange, I am watching copper. I am on $10,000 watch. I'm not sure if we'll hit it today, but right now copper futures at $9,956 a ton. As for what the picture looks like here in the U.S., it does look like it will be a positive open come the opening bell in about 4.5 hours' time. What's leading the way is technology. NASDAQ futures up a full 1 percentage point after some of those blockbuster earnings from the likes of Alphabet and Facebook last night. Of course, as Francine alluded to, Jerome Powell reiterating his dovish message yesterday, but even though yields fell on that yesterday, we are back up 4 basis points today, sitting just shy of 1.65%. On the 10-year, the dollar is mostly stronger today, recovering from its earlier weakness, but a stronger dollar not weighing on crude. WTI sitting above $64 a barrel, Matt.
You know, Map Markets Go seems like so much to type, Kaylee.
map, space, markets, go. You could just type WMGO. It's short for World Markets, WMGO. It takes you to the same place, and it would be just so much easier on your fingers, I think. So you can get the same picture of global markets with that. I want to take a look ahead to what's coming up today at 8 a.m. New York time. We're going to get the latest read on Germany's inflation data. At 8:30, we're going to get U.S. GDP. It's forecast to show 6% growth in the first quarter. Pretty big deal for the United States of America. Finally, it's another big day for tech earnings. Pretty big day. Amazon, as well as Twitter, will report after the market closed today. And Amazon, Francine, has to be one of the biggest beneficiaries of the pandemic because I don't know about you, but we get pretty much everything online. And Amazon, of course, has a huge share of that market.
Yeah, I kept on joking for a long time that it makes me a better mother just because I pre-buy presents for any kind of occasion, and that's certainly true in the pandemic.
Exactly.
I was looking into some of the funny stuff. Matt, I think they're now talking about Amazon hairdressers, which I don't know. I need to dig deeper into it, and then we'll have a discussion with you and Kaylee about it. Now, President Joe Biden made his debut speech to Congress yesterday after almost 100 days in the job. Well, he laid out the goals for his $1.8 trillion stimulus plan, as well as how he was going to pay for them. Senator Tim Scott delivered the Republican response.
Tonight, I come to talk about crisis and opportunity. Together, we passed the American Rescue Plan, one of the most consequential rescue packages in American history. We're going to get rid of the loopholes, allow Americans to make more than $1 million a year and pay a lower tax rate. And the IRS is going to crack down on millionaires and billionaires who cheat on their taxes. Trickle-down economics has never worked. And it's time to grow the economy from the bottom and the middle out. Wall Street didn't build this country. The middle class built the country. And unions built the middle class. There is simply no reason why the blades for wind turbines can't be built in Pittsburgh instead of Beijing. No reason. None.
Our nation is starving for more than empty platitudes. We need policies and progress that brings us closer together. But 3 months in, the actions of the president and his party are pulling us further and further apart.
Well, let's get straight to our Bloomberg editor-at-large, Marty Schenker, who joins us now. Marty, this was a speech on unity, a speech on America coming together. Will it work to unify, I guess, the troops and the citizens after a pretty testy 4 years?
Yeah, I think the word normal comes to mind. It was remarkable how different the tone and structure of the speech was, reading from the prompter as Joe Biden does, and ad-libbing at certain points, but it is an attempt to bring the population watching together rather than the people in the audience, especially the GOP.
Yeah, I mean, Tim Scott pointed out that in terms of unity, Biden hasn't made any strides, on Capitol Hill. But the striking thing, Marty, is that the majority of people in America across the aisle, although there's no American aisle, but you know what I mean, support President Biden's policies. Isn't this discrepancy fascinating that, a lot of Republican voters support Biden's policies, even if they don't like him and even if the senators won't vote for them?
Yeah, it's the dichotomy of the public versus the politicians, right? And I do think that what Biden gets is a lot of high marks for his handling of the pandemic, less so for taxes and spending. And if you look at the public polls, they do want Republicans and Democrats to come together and compromise. And they did on the initial rescue plan, but there's no sign of that going forward from here.
Yeah, now comes the hard part. Thank you so much to Bloomberg editor-at-large Marty Schenker for joining us. Now let's turn to big tech earnings. Apple and Facebook reported after the close on Wall Street, and the pandemic demand surge continued for both companies. Facebook sales and users jumped. Apple crushed Wall Street expectations, fueled by sales of the 5G iPhone as well as iPads and Macs. Let's get more now with Bloomberg's Danny Berger. Danny, it was a blowout for both of these big tech companies.
It really was. And Kaylee, it's pretty interesting because the trend, or at least the common thread that allowed these earnings to be so good, was similar between the two of them. And that is that pandemic habits are still among us. For Apple, that means people are still working at home. They're still learning at home. So they're making purchases of iMacs and iPads to help them do that. Those sales nearly doubling. Now, they did warn about the chip shortage, but that wasn't enough to take the wind out of the sales. Shares up 3% pre-market. It also doesn't hurt that they announced another $90 billion buyback, so buybacks alive and well. When it comes to Facebook, people aren't out. They're still in. They're still scrolling through Instagram, looking for their phones for at-home entertainment. So with more online user growth, those active daily users growing 10%, it meant ad prices could also jump by 30%. So those shares moving higher. Twitter also moving higher pre-market, just with this anticipation that the online ad environment is really strong.
Danny, thanks so much. Our Danny Berger there with some of the big tech reporting with pretty robust earnings. That's probably a euphemism. Kaylee, what else are you watching in the markets?
Well, as Danny mentioned, Francine, Apple does have to contend with that semiconductor shortage. It could knock $3 to $4 billion off their fiscal third quarter, and there are a number of other companies contending with that as well. One of them being Ford, which reported after the bell yesterday. It had to cut its outlook, said it could take a $2.5 billion cost because of that semiconductor shortage. Those shares are down 2.7% in pre-market trading as a result. But speaking of chips, Qualcomm is moving higher. It had actually raised its outlook for the current period due to the strong demand for 5G iPhones. It's up about 5.3%, but to the downside, eBay missed expectations when it came to the current quarter forecast. The company warning it may not be able to fully hang on to the gains from the pandemic as the economy reopens and the boost from the stimulus checks fade. That stock is down the better part of 6%. ServiceNow, an IT software company, is down more than 6% after its outlook missed also, Francine.
Yeah, so much to talk about today. I mean, so many earnings. We're really in the full swing of things. Now, coming up, STMicro's sales of $3 billion beat estimates. We'll be speaking to the chief executive, Jean-Marc Chéry, shortly. After that, Neil Sherry, Capital Economics Group chief economist. We'll talk to him about the Fed. We'll talk to him about inflation and the price of lumber. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, I was blown away yesterday when Ford put out its earnings and then said that 50% of their second quarter production is going to fall away because of the chip shortage. It's going to cost $2.5 billion, but just the idea that they won't be able to make half of the cars and trucks they wanted to make this quarter, it hurts my soul. I found this chart. Hillary put it together for me. This is chip prices. They're for mobile devices and PCs. We're talking DRAM here. So these are not the same chips that Jim Farley is having trouble sourcing, but they tell a story that I think is still interesting. You see that prices have come down since 2019 and have now shot up. That makes sense, Francine. In a chip shortage, prices are getting higher, but they still haven't reached the heights of pre-pandemic 2019. So I wonder if there's still room to rise when it comes to certainly DRAM prices, but for a lot of different chips out there that are just hard to get.
Yeah, and so many people are actually asking how long does this also last? So the global chip shortage has translated into strong demand for semiconductor makers like STMicroelectronics. The French-Italian company beat earnings estimates and will increase its CapEx spending this year. It's a key provider, of course, of chips to the autos industry, for example, which is being hard hit by supply constraints. And we're delighted to be joined by Jean-Marc Chéry. He is the chief executive of STMicroelectronics. Mr. Chéry, thank you for joining us. First of all, the million-dollar question is how long do these chip shortages last? How many quarters will this continue to happen?
We do believe it will continue for at least for the next 6 months, but most likely for the full year. But simply for the reason that the process equipment lead time now are well above 9 months. So in any case, if you want to increase your capacity now, it will not be for Q1 or Q2 2022. So what we classify the shortage, what I classify a gap with unprecedented demand versus what we install, okay, will last up to the end of the year minimum.
And what are your clients, what are the industries most affected? So I know you've spoken quite a lot about, what will drive the rebound and the fact that car makers at the moment are so affected by this. Who else?
Today, we have all the verticals, okay, clearly requesting a semiconductor. The acceleration of Q4 and Q1 is more related to the automotive industry, but the industrial verticals as well. And on industrial, it is high-end, but consumer industrial. So home appliance, power tools. Okay, so everybody are asking, okay, semiconductor driving by the power energy efficiency, by the electrification, the digitalization. So all the verticals are impacted now.
What can you do, Jean-Marc, to boost chip production? And how big a bet should you be taking right now as, this bottleneck could open up?
What we have done, with the visibility we had a few months ago, our CapEx model was 1.5, 1.6 billion, and we prepare ourselves to make $11 billion. Now we boost our CapEx to about $2 billion, maybe slightly above. And we will deliver $12 billion of revenue, 18% growth. But believe me, for the industrial market and automotive, our growth will be between 30 to 40%. 30 to 40% growth for industrial and automotive.
We just heard last night President Biden argue that there's no reason you can't produce, I think it was turbines or some sort of manufactured product in Pittsburgh rather than Beijing. What about chips? Is it easier to produce them in Asia than, say, here in Europe or in the United States?
No, absolutely not. And ST is a perfect example. In Europe, we have 5 wafer fabs, and we are building another one, a big 300 millimeter fab. So we will have a 6 wafer fab, okay, by end of the year. And you can produce, okay, very easily in Europe or in US.
You had some pretty significant margin expansion in this quarter. Gross profit margins increased 110 basis points year on year. Operating margins by 420 basis points. What is driving that margin expansion, and can it continue?
This is mainly the manufacturing efficiency. Because when you run our wafer fab at 100% of capacity saturation, our efficiency is huge. And in a certain extent, the product mix. Because when we grew Q1 versus Q4, there is a slightly decrease sequentially. But when you look inside the verticals, there is a strong growth on the automotive and industrial market versus the personal electronics. So that's the reason why also the product mix play a bit in our margin. But main contributor, manufacturing efficiency.
But Mr. Shea, have you not had any discussions with politicians that say, even if it's more expensive, you should produce more in Europe? I mean, it's actually sometimes crazy to think that we can't produce more of these things because we're so dependent on certain other countries.
It's not a question to be more expensive and so on, because again, it's more complex than that. Okay, it is related to your strategy. It is related where you have people skill and competencies. Okay, it's not a question of labor cost or cost. Okay, we are in Europe. We are strong install base in Europe, and we are competitive. And ST, okay, is in the market we address. We are in the top 5. So you can produce, okay, in a competitive way anywhere in the world. More important is the infrastructure you have, the skilled people you have, the determination you have.
All right, thank you so much. Jean-Marc Chéry there, the Chief Executive of STMicroelectronics. Now, coming up on Bloomberg Technology, we'll also continue the conversation on the chip shortage with Qualcomm Chief Executive Cristiano Amon. That's at 5 p.m. in New York, 10 p.m. in London, and this is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg First Word News, and President Biden is betting he can sell the American public on sweeping changes. Last night, in a speech before Congress, the president called for higher taxes on the wealthy to fund a massive investment in the nation's social security net. He's asking for trillions of dollars for infrastructure, childcare, education, and subsidies for working-class families. Well, politics may force the president to eventually abandon some of the more ambitious ideas. Legal experts say federal authorities may be on the verge of bringing charges against former Trump White House lawyer Rudy Giuliani. FBI agents raided Giuliani's Manhattan home and office. There's been a long-running investigation into his work in Ukraine, including attempts to dig up dirt on Joe Biden, while Giuliani's lawyer denied any wrongdoing. HSBC is offering its ultra-rich clients in Asia direct access to its investment bankers. The London-based bank is trying to become a wealth management leader in an increasingly affluent region, while HSBC, we understand, will offer the wealthy a full slate of finance and investment products, deal-making, and institutional market access. And finally, the Italian island of Ischia has a plan to save its economy from another disastrous tourism season. Residents are waiting for a boatload of vaccines that will create herd immunity among the 70,000 inhabitants. Now then, they'll declare Ischia a COVID-free zone and wait for an influx of visitors from Europe and the U.S. But on mainland Italy, regional governors argue that no one should get priority treatment. I know we've been talking a lot behind the scenes, Matt and Kaylee, about, of course, holidays, whether people can travel or not, the vaccines, but it does seem much easier if you're an island state, or just an island like Mykonos in Greece, or Ischia, even Capri in Italy, if you can be almost self-sufficient, vaccinate everyone, and then tourists, tell tourists to come because it makes up like 50 or 60% of their GDP.
I know, well, Kaylee wants to travel to an island, but it's not off the Italian coast.
It's not.
It's a lot bigger, and they speak English. But Ischia looks gorgeous when you Google it. And you can rent a mini moke there to drive around. It's one of the coolest little buggies you can rent, a mini moke.
I know, now I'm questioning my decision about Ireland. I did, by the way, actually book my flights. I'm confident I'm going to be able to go this summer, but maybe I should have picked a different island instead, one with maybe a beach or something. Honestly, though, any vacation at this point sounds great.
Yes.
I'll take anything.
Yes.
Kaylee, I told you, just make sure the weather is good in Ireland. So, you were warned before of it.
I was.
It is actually a serious economic problem for, Italy, Spain, Greece, that are so reliant on tourism. So they haven't vaccinated, or they haven't reached critical vaccination yet. And so you have to try and figure out how you get tourists out, but keeping everyone safe. Coming up, we look at the Fed upgrading the view on the economy.
One of the interesting features about this illness is that if you look at it, the people who develop these long-haul symptoms are often not the individuals who are hospitalized and were sick and on a ventilator and stuff like that. These are individuals never mount a strong enough immune response. Then what happens is you may have mild symptoms. You thought, oh, I escaped this. But in reality, you never got rid of the virus. So you get this chronic immune activation that persists in these individuals. But it's never good enough to get rid of it because they never got rid of it in the first place. But it's enough to start causing collateral damage. And what the virus does is it inhibits certain types of immune responses. It's a drain on society at every single level. I mean, it affects women more than men. It affects people in their average age is 40. That's the most productive years of your life. And so you can see that the impact, worldwide impact of this is unbelievable. Economic toll, the psychological toll, every aspect of society is going to touch.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, early edition. I'm Francine Lackman, London. Matt Miller in Berlin, Kaylee Lyons in New York. Matt, if you look at the markets, they're on a roar. They're on a tear for two reasons. Of course, it's all about the Fed and the fact that they're pretty confident about, pretty confident. Again, I keep on using these euphemisms. They're very confident about the economy, but they're not talking about tapering. And these blowout earnings from the tech companies in the U.S.
Yeah, no, absolutely. I mean, the earnings have been stellar, although that hasn't helped every company that doesn't put out a stellar outlook accompanying the earnings release. But really, it's all about free money, Francine. As long as the government keeps handing out free money and the Fed continues to finance it, why wouldn't the markets rally?
Absolutely. I guess we'll know more about what the economy is doing, with CPI, but also GDP on Friday. How's it playing out in the markets, Kaylee?
It's risk on, Francine. Both sides of the Atlantic, you see stocks in the green. You have that dovish Fed, you have robust earnings, and then, of course, you have the prospect of more stimulus potentially coming here in the U.S. after Biden outlined his long-term economic spending plan yesterday. So where that leaves us is up 0.4% on the stock 600 here in the U.S. Come the opening bell in about 4 hours' time, it does look like we will be solidly in the green, especially on the NASDAQ 100 futures, up nearly a full percentage point on some of those big tech earnings. I'll have more on that in just a second. But on that dovish Fed, we did see yields come down yesterday as Powell reiterated his message that they aren't changing anything anytime soon. But once again today, we're seeing yields move back up 4 basis points on the 10-year. We're just above 1.65%. And guys, we are getting closer and closer to 10,000 when it comes to copper futures on the London Metal Exchange. Right now, we're sitting at 9,975. I will be watching every single tick on that futures chart all day today. Now, as for some individual stocks I'm watching, come the opening bell, Facebook, of course, is one of the companies that reported blowout earnings after the bell. Revenue growth 48%. That blew past analyst expectations. It's all about that digital advertising boom, the same kind of phenomenon we saw benefiting Alphabet yesterday. Apple is also higher by the better part of 3%. Really solid iPhone 12 sales, Macs, iPads, you name it. But the company did warn about that semiconductor shortage. That could mean a hit of $3 to $4 billion in the fiscal third quarter. One of those smartphone chip makers is Qualcomm. It had a really bullish second quarter outlook, and those shares are up the better part of 5%, but we know that chip shortage is weighing on automakers, and Ford yesterday cut its outlook. That could cost the company $2.5 billion. So those shares are down 2.4%, and it's like I can feel you frowning, Matt Miller.
No, not at all. I thought the Ford story was fascinating. It doesn't bum me out until I start thinking, I hope they don't reduce F-150 production. But I don't think they will, because they're going to focus on the products that have the highest margins. So it's going to be the cars that I don't really care about that they're not going to make as much of. By the way, I was looking at that copper price as well, Kaylee. We got to get hats. We got to get copper 10,000 hats. I have a chart for Francine that shows, because you're talking about GDP and focused on the amazing growth that we've seen, it's a bit of a spaghetti chart. But basically, this is 5 years in terms of EPS revisions So it shows earnings performance or expected earnings performance from analysts. The only line you need to look at is the white line. And for those listening on radio, the white line is the one on top that goes through and then exceeds all of the other lines. So earnings revisions for 2021 outpaced all earnings revisions for the last 5 years. I think that says a lot about economic growth, Francine, or expectations for economic growth.
Yeah, it does say a lot. Transitory was also the word yesterday. The Fed upgraded its view of the economy, signaling that risks from the pandemic have diminished. Now, it kept rates near zero as expected and attributed inflation pickup to transitory factors.
While the recovery has progressed more quickly than generally expected, it remains uneven and far from complete. Continued vaccinations should allow for a return to more normal economic conditions later this year. We are also likely to see upward pressure on prices from the rebound in spending as the economy continues to reopen. However, these one-time increases in prices are likely to have only transitory effects on inflation. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. The economy is a long way from our goals, and it is likely to take some time for substantial further progress to be achieved. We've got a long ways to go, and also, it's going to be a different economy. The only thing that will guide us are the tests met? You know, that's what we focused on, is have the macroeconomic conditions that we've articulated, have they been realized? That will be the test for tapering asset purchases and for raising interest rates.
Well, joining us now is Neil Shearing, Group Chief Economist at Capital Economics. Neil, a lot of data that we have to get through today and tomorrow in the U.S., but what's very clear is when you hear actually the Joe Biden ultra-expansionary thrust, it seems that instead of trying to taper that or temper that, the Fed is really amplifying them. What does it mean for the U.S. economy going forward?
Well, it's a good question. I think that's exactly right what the Fed is doing. Essentially, the message from the Fed last night was, we're not planning to do anything right now. We're going to accommodate all of this. And we're really waiting to see just how quickly the economy does bounce back. I think policymakers, both in government and in the central bank, have kind of learned the lessons from 2008 and are going to stay the course this time, which I think is probably the right thing to do. What it means for the economy is we're going to see some incredibly rapid rates of economic growth, I think, in the US over the coming quarters. I suspect that by the early in Q2, probably around now actually in the recorded data, the economy is going to be close to its pre-pandemic levels, and it will blow quite quickly through that and get quite close to its pre-pandemic trends, I suspect, by the start of next year.
Neil, Kaylee reminded me, of course, GDPs today. Tomorrow, for example, we have the University of Michigan 5-year inflation forecast, which is something that Jim O'Neill is looking at. What are the chances of this economy overheating without the markets realizing straight away?
I think it's actually, as I look across the globe, I think in general, inflation pressures at this stage and kind of inflation risk are probably slightly overdone. That's certainly true in Europe. We're going to see this kind of mechanical rise in inflation in Europe over the coming months and quarters, but it's really about energy and prices of some goods that were depressed in the pandemic rebounding. The US is in a completely different situation, and the reason it's in a completely different situation is the scale of what's happening on the fiscal side of the ledger. Just so much stimulus has been pumped into this economy that I think there is a substantial chance, actually, that these are not transitory inflation pressures in the US, and that we do start to see some meaningful build-up in price pressures, both on the consumer side. Obviously, we're already seeing that on the asset price side.
Can't we handle that? I mean, we could handle 2-3% inflation for sure, Neil. What kind of levels are you thinking we'll see?
Well, I think 2 or 3%, I suspect we probably will see. Yes, I suspect we'll get there at some point over the next kind of 12 or 18 months or so. The question that I don't think anyone can really answer, including those on the FOMC, is once we get there, what happens? Once the inflation genie starts to kind of creep out the bottle, can you get the lid back on? Or does the whole thing really then take off and we get to kind of 4, 5, 6, 7%? No, I don't think that's going to happen, to be clear. I think comparisons with the 1970s, which is what everyone tends to reach for, I think are also slightly overdone because institutions are very different. Labour markets operate differently. The global economy and the role of technology and globalization is very, very different too. And Labour's bargaining power is very different. So I think I wouldn't look back to the 1970s for an example, but I do think that inflation rates of 3%, perhaps a bit higher percent on the consumer price side are going to be could become commonplace. And I do think I certainly think that we'll see some of this inflation pressure manifest itself in asset prices rather than consumer prices. You just look at what's happening in housing markets across the globe to see that.
Speaking of across the globe, I'm going to use a surveillance word, Neil, bifurcation. And in the sense that the economic recovery in the U.S. is a lot different than it is here. I went to my GP this morning, just a local small operation, to ask for a coronavirus vaccine. They told me it's a 2-doctor operation. They had 2,000 people on the waiting list, and last week they received 18 doses of the vaccine to pass around. So clearly we're very far behind here. What kind of bifurcation is that going to create in terms of the economic recovery between Europe and the U.S.?
I suspect it probably doesn't change where Europe ultimately gets to. I think, unlike in 2008, where the US and Europe had much slower, entered the period of much slower growth after the crisis, I suspect, and ultimately settled on a lower trend, I suspect this time probably is different, and that all economies on both sides of the Atlantic get back to their pre-pandemic trends. What's going to happen, though, is that it's going to take Europe and in particular countries in the Eurozone a lot longer to get back to its pre-pandemic trends. I suspect it's going to take several years. In the US, I think we're going to get there much quicker. So it's a case of Europe's recovery being delayed rather than cancelled altogether.
Right, and there's the fiscal factor involved in that Europe's fiscal spending has been a lot less robust than what, as you mentioned, we've seen here in the U.S. So I want to get your take on the long-term economic spending plan that President Biden outlined in his address to Congress last night. What is your base case about how much money we could actually see, and then what the growth impact of that would be?
Well, I think that this now has to go through the kind of congressional process. We know it's going to get cut up and dissected, and bits will get traded off, and there'll be and what will ultimately get passed will look very different to what was proposed last night, I suspect. So I suspect the ultimate package might be a bit smaller. But I think the really important point to make is that this package, and indeed the package on infrastructure, was very different from the round of stimulus checks that we saw. That was stimulus. That was debt-financed stimulus that was being pumped into the economy, whereas this is tax-financed spending. So in terms of the stimulus to demand in the economy, it's going to be much smaller. So we've got $1.8 trillion of spending financed by $1.5 trillion worth of tax increases. And when you spread that out over the time period that this is going to take place, many years, is not going to amount to, I don't think, it's not really going to move the needle in terms of economic growth. I think it will make a major difference in terms of kind of have implications for sectors, and on the infrastructure side, it'll make a big difference to potentially the capital stock of the US economy. But in the short term, day to day, quarter to quarter, the impact on demand and growth, I think, is going to be a lot smaller than the big rounds of stimulus checks that we saw earlier.
Neil, thanks so much. Neil Scharing there, Group Chief Economist at Capital Economics. Now, coming up, U.S. futures on the rise after blowout earnings. Our roundup of the results next. We'll also talk about Wimbledon, actually. I think tickets have started to go on sale at 25% capacity. This is Bloomberg.
right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We've had strong underlying sales growth of 5.7%. That means we're growing faster than our markets, and it's thanks to our focus on running our business with operational excellence and good innovation, our purpose-led brands doing well.
So yes, I think we've had a good start to the year. We, as you say, had a significant increase in profitability, up 18%. The 1.4 billion is one of the biggest quarters profit-wise we've had for several years.
I think we should not take Q1 as an indication of the full year yet. There's still a lot of volatility, of uncertainty. I think we have not passed what we call the tipping point of the pandemic, and therefore we have to remain quite prudent. We see a lot of diversity in situations across the globe on the recovery or sometimes the aggravation of the pandemic. It was rightly mentioned, and India is really in a very difficult place. So it's a good Q1, but it's not yet a full year.
Unilever Chief Executive Alan Jope, Standard Chartered CFO Andy Halford, Airbus Chief Executive Guillaume Faury, just some of the chief executives talking to us on earnings earlier on Bloomberg. Now, stocks getting a boost today from tech earnings and the Fed. Laura Cooper, Bloomberg MLive macro strategist, joins us. Laura, talk to us about earnings. I feel like most company actually I look at are actually delivering some pretty blowout earnings. Is there a danger that we get lulled into a false sense of security and then next quarter will be too tough to beat expectations?
Well, I certainly do think that that's the case, because we have really seen just this stellar earnings season so far. Just looking at the stock 600, earnings surprises have come in by about 40%, and that's largely driven by financials. And then we have those tech blowouts yesterday coming through in the U.S. But what I think price action is telling us is that, yes, we do have this near-term boost, but more broadly, sentiment is quite stretched, positioning is quite bullish, and I do think a lot of good news is priced in. So like you mentioned, the risk now is that we already knew that healthy earnings were needed for equities to grind higher, but what will be that catalyst to push them even further? Because largely the indexes have been fairly range-bound over the past couple of weeks.
What about a dropping dollar? I mean, does that help in terms of more foreign direct investment? So more foreign investors, coming into the equity market?
I certainly think that is what the dollar will potentially do, is just continue to support that rotation trade that has stalled over the past month or so. But really, we're going to see those flows back into those cyclical sectors, back into those value stocks with Europe, because Europe is still, that catch-up story still remains. Notably, when we look at European banks, the fact that they have had just these really strong earnings, overlaid with the fact that valuations continue to be quite deeply discounted, I would expect that the dollar weaker will feed into that clear trade.
Laura, I want to ask you about margins, specifically input cost. I am literally watching my chart to see if copper hits 10,000 today, and we've heard a lot about higher commodity costs and the pricing pressures that have resulted from
through potentially disrupting production even further. That came out of the earnings call from Tesla earlier. We are seeing that play out in terms of Apple production disruptions. So clearly, I think that needs to be on investors' radar, and just the broader inflationary backdrop. The Fed is telling us that they are seeing just transitory price pressures, but that really is the key market question to watch going forward. And I think the fact that earnings are really driving that point home just captures how important this is.
Laura, thanks so much. Laura Cooper, Bloomberg MLive macro strategist. Now, coming up, Indian stocks maintaining momentum despite the worsening COVID crisis. We'll hear the perspective from the emerging market guru, Mark Mobius, next. This is Bloomberg.
This is basically going to kick off the whole week.
From bank earnings
really have to be front and center,
to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings.
And those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
So, you know, I'm very bullish on India. In fact, in our fund, the largest allocation is India. And I'm frankly surprised that despite this terrible news about the COVID secondary outbreak, our stocks in that market are doing quite well. Now, there's no guarantee, you know, whenever you have this kind of bad news, it will affect the psychology of the market. You might see some decline, but generally speaking, India is on a run. And despite this problem, and I think, of course, it will be temporary, more and more people will be vaccinated, and the death rate will decline. Nevertheless, there is an impact, and we can expect some correction, but not a big one.
Mark Mobius there, Mobius Capital Partners founding partner, speaking with Bloomberg earlier today on India's stocks amid its COVID crisis. Now let's talk more about earnings and also the Fed. Tom Keene, co-anchor Bloomberg Surveillance, joins us. Tom, I know you were really focused on the word that I also picked up on, which was largely by Jay Powell yesterday.
Yeah, well, what Jay Powell said yesterday was really interesting. I mean, he got through it in one piece. I thought Mike McKee ended the press conference with a trenchant question that nobody wanted to answer. But there you go, and on we go. I believe it's to June 16th as well. Francine, we got a dovetail here going on right now, and there's a price to pay. We've got phenomenal earnings from these technology juggernauts, which are absolutely original in our business and our national history. along with the pandemic that Mr. Mobius just talked about. And you go, well, what's it devolve down to? Let's look at the chart. This is my chart of the year of 2 of the last 4 years. This is the twin deficits. Take the fiscal deficit to GDP and the trade deficit to GDP and add them together. Francine, all you need to know is the math isn't that good. The research says they're really not linked. But the fact is right now we really care. And they are out to 4.8 standard deviations. Francine, this is truly something no one ever imagined.
Yeah, and the other thing, Tom, I know you're a great student of history, and if you look at, I guess, the Biden-Powell duo, a lot of people are saying it's a little bit like what Reagan and Volcker was, but in reverse, right? If you look at Reagan, Volcker, and the regime change there, it was really powering the economy, shifting to government from market and from labor to the owners of capital, and we could see the reverse now.
I think that's really well said, that it harkens back to the regime change of Reagan and Volcker of another time long ago. I don't even know what the British analog is. I honestly don't know what the British analog is. Maybe it's in the 19th century, but that twin deficit chart, Francine, is absolutely original, out almost 5 standard deviations.
Tom, thank you. I'm looking forward to the program. Tom Keene, there, co-anchor of Bloomberg
Amazon's out with earnings.
Coming up after this. I know we're all over Amazon. This is what we're watching for the rest of the day. Now, we're watching a little bit of sports and then Amazon, Kaylee.
I know I should probably be watching Amazon or the economic data at 8:30 a.m. Eastern time, but I'm actually watching what's happening at 8 p.m. Eastern time, and that is the NFL draft taking place in person in Cleveland. I might stay up past my bedtime to watch it, Matt, and watch Trevor Lawrence, the quarterback out of Clemson, go as the #1 pick to the Jacksonville Jaguars. I'm pretty excited for it.
That is so cool. I love the draft, and the Super League would have probably had a cool draft if it had ever gone forward. I am watching Hillary Clark become a grown person. It's her birthday today. She is my erstwhile charts producer, and I just wanted to wish her a happy birthday. And you hang in there, kid. We're all rooting for you.
She's like the queen of charts and the queen of hearts for all of us. She does really some of the best charts in town. I'm watching actually Amazon, so that's the big one. We'll see if they also have some blowout earnings and how much they'll pay their workers. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The amount of liquidity that's out there, $4 trillion plus in money markets, savings rates near all-time highs. All of these augur well for the continuation of the bull market.
It will be, I think, temporary inflation for the course of the next 12 to 18 months.
We know this economic data is great. This is all reopening, fiscal stimulus. Well, how much does behavior change? We're all becoming behavioral scientists.
There are several mega trends here that will probably make this cycle hotter for the next several years.
This is not just overheating. There's a risk that this is like starting a fire. So there is a chance that inflation could be overshooting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Tim Cook knocking it out of Cupertino Park from New York City. For our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg Television alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures positive 0.6%. Tom, the numbers that Apple just put up, absolutely huge.
Well, we saw Google, then Apple yesterday, and Amazon this afternoon, John, and I think Julian Emanuel needs a massive shout out at BTIG. He absolutely nailed the importance of yesterday. John, yesterday was a reaffirmation of what we're living with as technology companies. I believe firmly we don't really understand their dominance. Jim Suva at Citigroup goes from 150 to 170, up 27% on Apple this morning.
Got an upgrade from Goldman this morning as well, Tom. Revenue up 54%, a $90 billion additional buyback into the mix as well. Could those numbers get much bigger, TK?
Well, I don't know if they can get much bigger, but they can be persistent. What's important about what Cook has wrought, and I give great credit to the late Steve Jobs, is since 2012 they have decided to deploy to share repurchase, and it's so much, John, the chronic nature of it. Every quarter there's too much cash from their profit, and they use it to assist shareholders and also to build a new campus in North Carolina.
The P word, the right word, Tom, persistency of this growth has been absolutely unreal. Lisa, we do also need to touch on execution risk. That's been a theme of the last 24 hours.
There's been a concern about some of the chip shortages, and we saw that with Ford earnings coming out, really disappointing as a result of that. Apple being the exact opposite. And just to give you some scope here, every region revenues grew for Apple more than 35%, including a 94% gain in Asia. Just to give you a sense of the acceleration here, but just to also give you a sense of perspective in terms of what markets are priced for, the Apple shares of Apple are up less than 3% in pre-market trading after being up less than 1% year to date. John, try to square that.
I couldn't agree more. Stock's not responded. We've had record geographical growth. In each geographic segment, record growth, Tom, record revenues and double-digit growth in each product category, and yet here we are.
Well,
here we are talking about what, a stock that's hardly moving.
Go back to Valentine's Day pre-pandemic, and you'll see that the major fangs in fits and starts find a time to move. They simply don't move on the present news. They move on the expectation, and Wall Street has to reset where they are in Apple. Imagine how we're going to reset tomorrow on Amazon.
This bond market reset, can we talk about the quiet sell-off in the Treasury market?
Yes,
Let's whip
please.
through the price action. Yields higher on a 10-year. Not getting much discussion this week. We've had a move of 10 basis points on a 10-year yield on the week so far. 165.57 on 10s, up another 4 or 5 basis points on a session. Equities, get used to it maybe. 4,200 on the S&P 500. There it is in futures, up another 27, 28 points, and we advance 0.7%. I'll touch on the commodity market a little bit later in the program. A big call coming from the team at Goldman in the last couple of days. 64.56 right now. Goldman thinks maybe 80 in the next 6 months. Lisa, we got a lot to get through.
Yeah, this definitely commodity super cycle seems to be a common theme among a lot of strategists. I gotta say, there is a question that grows with respect to data. When does it matter? Today at 8:30 a.m., we get U.S. initial jobless claims. They are expected to come down somewhat significantly. The whisper number is actually under 500,000, but it's about 540,000, the consensus. Still elevated, and yet nonetheless, we're also expecting a first quarter GDP number of 6.6%. I know you don't like a quarterly GDP number, John, but there is a question here about how hot this economy can run before people recognize it as such, people being Jay Powell. Then 11 a.m., the Fed's Randy Quarles is going to be speaking at an OCC meeting talking about financial regulation. I'm very curious to hear what he says, especially after Jay Powell yesterday said that the Archegos incident showed that there were risk management problems at certain banks. I wonder how much he's going to come out and talk about regulating some of the derivatives, or at least giving a little bit more transparency around some of these trades. And after market, the earnings roll continues. Amazon and Twitter expected to report earnings. I am watching the stock price reaction. How much do they have to blow it out of the water for stock traders to care? How much is already priced in, and what exactly are they pricing in? I mean, honestly, it seems like no beat really matters, John, when it comes to the stock trading activity afterwards.
Let's talk about the reaction this morning. You touched on it briefly, Lisa. I want to talk about Apple and have a look at Ford as well. Ford is down in the pre-market. Why? There is a chip shortage. Can supply meet demand? Execution risk, the issue here. Ford down at a little more than 2%. Tom, Ford putting a number on it. They've had to cut planned production in the second quarter by 50%. Apple putting a number on it. It's going to constrain revenue around the Mac and the iPad, 3 to 4 billion. Look, 3 to 4 billion off quarterly revenue for Apple is nothing in the context of the fact that they just posted a $90 billion quarter. But for Ford to slash production in the second quarter by 50%, Tom, that's something.
Well, I like the way you partition it, John, and that to combine the tech companies, to conflate them in with other sectors, I don't think is appropriate. And certainly the other sectors out of the pandemic and all the logistics issues, witness Long Beach on the West Coast finally getting back somewhat to normal. I mean, it is just the shock of this pandemic, and we'll get through it. Apple and the rest of them, that's a different story. I mean, Apple's joined at the hip with Taiwan Semiconductor as they build out the new M1 chip.
The global chip shortage is certainly the issue at the moment. And Tom, to your point, each and every individual company will have a very unique experience with this, and some will execute better than others. I want to bring in Marvin Barth now, Barclays head of FX and EM macro strategy. Marvin, you're calling the dollar the beast. It's still the beast, but it can't get much stronger. Why?
Well, it's already relatively overvalued if you look at it on a long-term historical basis. But we do expect it to continue to trade at these high levels. And that's actually quite unusual. If you look back historically, when the dollar's been to its peaks, it's gone to these, peaks in the 85 in 2002, and then it comes off quite hard. That isn't what we're seeing this time. And part of that's because of exactly what you've been talking about here, that where are you going to go to access growth in the world? It's really about the U.S., but it's also the place that you go to access safety. So you get the best of both worlds. So people are going to maintain over-allocations to U.S. assets for the foreseeable future.
Marvin, when do deficits start to matter again?
Well, I think we're getting to the point where they do matter, and I think it's more a question of the debt, not so much the deficits. Let's remember that deficits are taking place pretty much everywhere, so it's not just a U.S. issue. What we're confronting right now is a very different situation from the past, or certainly the last decade, where countries were bailed out by falling real interest rates. Now, you're not going to see falling real interest rates. We're at the zero lower bound or effective lower bound for most countries on nominal rates. And the only way to get real rates to fall from there is to hyperinflation.
So, Marvin, with your dollar resiliency, do you assume then that the real yield doesn't claw its way back to zero, that we stay with a persistent negative real yield?
So ultimately, we should expect that real yields will start to pick up. We will see Treasury yields start to pick up over the course of the next few years gradually. Markets have already priced in a significant amount of the inflation that we expect. There's still room for that to go to get to the Fed's comfort zone in terms of where break-evens go. But we will see a rise in real yields, but it's not going to be anything like what we've seen in the past. But remember, that just makes, to Lisa's point, the debt problems more pressing for countries around the world.
And John, what's so important here, the cadence of Marvin Barth at Barclays is the same cadence as Chairman Powell. The real note yesterday with Chairman Powell was his x-axis. Chairman Powell's timeline extends well out into 2022, and that's what I'm hearing from Marvin Barth.
The Fed is totally committed to this, Marvin, totally committed to this, and Chairman Powell won't blink. Do you think everybody gets that now?
Well, look, I think people get that, and that's why we've had this pause in bond markets over the course of the last month or so, right? Remember, we had a very intense sell-off in the first quarter, a lot of volatility associated, and since then, bond yields, you pointed out, they've gone up a lot this week, but we're still basically trading within the same range we've traded for the last month or so. They're not really going anywhere. That is the market accepting that, and now the next step is they need to see, well, is the economy going to be stronger than Chair Powell and the committee expect, or is it going to be in line with theirs, or is there going to be some sort of disaster that's going to take it down? And for that, we're just going to have to wait for the data, and that's why we're range trading across asset markets right now.
Marvin, it's always good to see you. Great to catch up. Marvin Barth there, Barclays head of FX and EM macro strategy. Shout out to Sam Rowe of Yahoo, who drew my attention to the work of Renaissance Macro and Neil Dutter. Here's a quote for you, Tom. I think the Fed is far more concerned about the virus than the average American. Jay Powell is the guy that shows up in your Instagram feed sharing stories about how bad the pandemic still is, while you're back to sharing photos of your beach vacation. That's by design, Tom. This Federal Reserve chairman is waiting and waiting and waiting, and he wants to be behind the curve.
Yeah, that was a clear tone and the consistent tone yesterday. I think, John, one thing to note here, and this is true of all of them, I remember when Ben Bernanke's voice went from the nervous that he was to being very calm, is Powell's really matured into the job where it's a very cohesive press conference, and that's what really impressed me yesterday. It was solid from the beginning right to the end when McKee was rude.
Tom, he got the last question. It was about $120 billion a month, and can you do the same with less? Now, I understand why he didn't want to answer it, because even if he agreed with that, the signal that you would send with cutting that would be, let's say, strong to say the least.
Yeah, well, I had the intraday, on the Bloomberg. McKee's asking the question. I'm watching the yield, and the yield wants to go lower with what McKee's saying, and then you're like, and then I think Michelle took the hook and said goodbye.
At least they didn't play the elevator music over Mike McKee this time around.
No, I was looking for him to play Toto. In honor of Al Schmidt, I was looking for him to play Toto.
I'm trying to figure out where to place that sound that Tom just put out there. I'm hoping it's
the sound
transitory.
Of the bond market. You never heard that before?
No, I hadn't. This is okay.
Isn't that the sound of the bond market?
I will just say this. I think it's fascinating how much of an experiment we're in terms of Biden amplifying Joe Biden's policies. On the same day that Joe Biden came out and announced nearly $4 trillion of spending plans, we have Jay Powell saying, we're going to hold rates as low as we can for as long as we can, John. This is a huge sea change.
They're going to keep waiting. Coming up on the program, Steve Cheverone, Federated Global Investment Management Portfolio Manager. Looking forward to that conversation. Here's your equity market.
Don't go long Amazon.
We're looking at all-time highs on the S&P 500. I think you might have missed this one, Tom. Futures up 29 on the S&P. We advanced 0.7%. We are through 4,200 on the S&P 500. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden is betting he can sell the American public on sweeping change. Last night, in a speech before Congress, the president called for higher taxes on the wealthy to fund a massive investment in the nation's social security net. He's asking for trillions of dollars for infrastructure, childcare, education, and subsidies for working-class families. Politics may force the president to eventually abandon some of the more ambitious ideas. And President Biden's speech also underscored how much he's focused on China and its economy. The president said he believes that the U.S. and China can cooperate in some areas, but he warned that Xi Jinping wants to make China the most significant, consequential nation in the world. And the president insisted that the U.S. will maintain a strong military presence in the Pacific. The U.S. government has warned its citizens to get out of India as soon as possible because of the worsening coronavirus crisis. The State Department issued a level 4 travel advisory, its highest level. Americans were told not to travel to India or to leave as soon as it's safe. India says there were a record 379,000 COVID cases in the last 24 hours. Amazon is rolling out raises to more than 500,000 of its hourly workers a few months early. They'll get pay hikes ranging from 50 cents to $3 an hour. The raises are designed to boost hiring at Amazon's fast-growing logistics division in the U.S. The company says it's hiring tens of thousands of people at the unit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
American Jobs Plan is a blue-collar blueprint to build America. That's what it is. And it recognizes something I've always said in this chamber and the other. Good guys and women on Wall Street, but Wall Street didn't build this country. The middle class built the country, and unions built the middle class.
Good guys and women on Wall Street, not the divisive language some people expected in anticipation of that address from the President of the United States. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. It's the price action of the moment on the S&P 500, up 30 on the S&P. We advanced 0.7%, 4,200. Apple The new $90 billion buyback authorization, larger than 400 of the S&P 500's components. That stat coming from the team over at Bespoke Investment. What a stat that is. And Tom, an upgrade. Several upgrades in the last 24 hours. Raymond James and Chris Caso have gone to 185. That's the most bullish on the street. Dan Ives of Wedbush joins them, taking his price target from 175 to 185. Apple essentially the Tom Brady of the tech world. The skeptics will continue to say the best is in the rearview mirror and the success is moderating, yet Brady just won his 7th clip and Apple just reported its most robust quarter in roughly 3 years. So there you go.
Yeah, I'm going to go back to Lawrence Haverty, the great Larry Haverty on the Fifth Avenue in front of the Apple Store, John, telling me as the doom and gloom was there on iPhone 5 or iPhone 6.
How many times we played that game?
The world's coming to an end, and Haverty just laughed at him, and Larry was right then. And
here we are.
Dan Ives is opinionated now. Also opinionated is Martin Schenker, our editor-at-large. He's in charge of narrow majorities in Washington. Dan Ball's in the Washington Post, writing about this huge reality of narrow majorities that President Biden has to deal with. How does he affect process given such narrow majorities?
Well, he's got to keep everybody in line, and he can't have any defections. If he's going to get these proposals through Congress, he's going to have to do it with 50 votes because the Republicans are not going near it.
What's the power of the quiet, moderate Democrats? Joe Manchin's out front, visible, I get that, but there's a lot more than Joe Manchin out there, and they're being quiet now. How do they convey their message?
Well, they're being quiet because they want to see what they can extract in terms of compromise from the Biden administration, that they can comfortably go along with his plans and not face a re-election struggle in 4 or 6 years.
What's the consensus among the Democratic Party, among Biden's many different plans that he's proposed, that actually looks realistic given the slim majority?
Well, I think that he certainly is going to go for these tax changes because it's more philosophy than anything else. He wants to change the way the United States approaches taxation of the wealthy, and he's going to push this through even if it takes a vote by Kamala Harris to get it done.
I don't understand, Marty, why there is such resistance to even talking about simply closing loopholes in addition, or perhaps just to replace the idea of higher taxes, because the higher tax rates don't necessarily translate into higher tax revenues.
Yeah, it's perplexing to me too, Lisa. I mean, everybody in abstract agrees that we should just collect the taxes that are owed. The Republicans make the argument that you don't even need any tax increases if you just do enforcement. But then they oppose spending money on enforcement. So it's nonsensical.
Yeah. No one watching this show, Martin, knows what you and I know. This comparison to Reagan is baloney because of the boll weevils. Long ago and far away. He brought up Wilbur Mills, John. Wilbur Mills would have been your favorite congressman. Marty Schenker, the boll weevils of 1981 were a conservative majority in hiding for the Republicans as well. There's no boll weevils now. The polarity here is the real issue for the president.
It's true, and we shouldn't forget the fact that Joe Biden has a secret ally, even though he's non-political, and that is the Fed chairman. And in an environment where interest rates are going to stay low for as long as the eye can see, he can get away with these plans.
Are taxes going up?
Taxes are going up.
They're going up. You think so? You think that?
I absolutely believe that.
You think the Democrats in the House are going to let that go through at risk of losing the House?
I think that's true. And, it's interesting, Jonathan, you mentioned the good guys on Wall Street. That line was not in his prepared text.
It was an ad-lib, Marty.
He ad-libbed it. So, even he realizes he has to reach out to the financial world in order to get some of these plans.
Marty, do you think it's broader than that? Do you think this is about avoiding the divisive language of, say, Senators Sanders, Senators Warren?
Oh, I absolutely think that since there was nothing really new in the speech, it was more about style than substance last night. And, it depends on your view, but I thought he did very well in that.
Greg Valliere, gentlemen, and Lisa, moments ago, Greg Valliere, some Democrats aren't on board on Biden tax hikes. That from Valliere.
Yeah, well, this has definitely been an issue, and the issue is, so how much can you get people on board? I was looking at Michael Zezas of Morgan Stanley coming out this morning and says that what seems viable among the slim majority of the Democrats is a Build Back Better plan of $4.1 trillion. There might be opposition, John, but it still seems like there's quite a bit that could get done.
Yeah, and let's talk about this from the market perspective as well. I caught up with Priya Misra of TD a little bit recently, in the last 24 hours, in fact. And Lisa, she's having a tough time processing what comes next down in D.C., and I think most people in the bond market are too. We came into the new year, and it was pretty clear what the trend was, where the emphasis was. We're going to spend more, pure deficit spending. That shifted. It's become a lot more nuanced, and I think many people are struggling with just how much additional supply we'll have in the next few years and how much of that will be offset by tax revenue.
And not just that, but how much will be offset by a Federal Reserve buying a lot of these bonds, because so far they have financed a lot of the plans to fight COVID as well. Marty, before we let you go, how much does Biden appreciate Fed Chair Jay Powell, or is Jay Powell's job potentially at jeopardy for a variety of reasons?
Well, it's actually interesting to me that Jay Powell has never met Joe Biden since he's taken office.
Really?
So, no, and that is actually pretty surprising. There is speculation that progressives want to make sure that Joe Biden picks a new Fed chairman when his term ends. I think it's in January. And that may, in fact, happen, given there's no personal connection between the two men.
Marty, really decent final point. Marty Schenker there, Bloomberg editor-at-large. Tom, there are many people in the market that I've had private conversations with who believe that the Chairman Powell turn of the last 12 months or so to social warrior status is somewhat disingenuous and is all about getting a second term.
I don't have a strong opinion on that.
I don't have an opinion on it either. I'm just telling you where the discussion is right now on Wall Street.
You know, you walk in every day, John, and you know, you're the foreigner here, and you're learning about boll weevils.
Thank you.
And the boll weevils became blue dogs.
Is that how we welcome the foreigner in the room?
Yeah, you know.
Well, the foreigner here.
No, when I go to London, I have no clue what's going on.
I have no clue what's going on at the best of times, Tom, even when we're talking about the UK. You're often confusing me.
Yeah,
There's nothing new about this morning.
We'll talk the designated hitter tomorrow.
Okay. Coming up, Glenn Hubbard, Columbia Professor of Economics and former Chairman of the Council of Economic Advisors. You're off tomorrow, aren't you?
I don't know.
Are you?
My people haven't told me.
Oh, okay. I was told you might be. Futures through 4,200 on the S&P 500, up 30 points. We advanced 0.7%. An upgrade from Dan Ives at Wedbush to 185 from 175.
Maybe if Amazon stock splits, I'll come in.
Give us a phoner, Tom. I'll do that. I'll take a phoner from you tomorrow. That sound good enough?
Yeah.
Okay.
Boll weevils. Blue.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
All-time highs on the S&P 500. We advance again this morning. Your price action looks like this: 4,200. We break through it, up 30 on the session, up another 0.7%. The Nasdaq, where your outperformance is, up by 1 full percentage point. The numbers from big tech have been phenomenal. North of 50% growth at Apple. Get your head around that. Switch up the board and let's talk about something different. I want to talk about execution risk. Morgan Stanley, the first big bank on the south side to really put this on the table. Demand's going to be great. We all agree on that. Can you meet it with supply? And one of the issues right now, one of the obstacles, is a chip shortage. So two different companies, two different issues. Apple talking about a $3 to $4 billion revenue hit to the iPad and the Mac business because they can't get the chips they need to meet demand. That's not going to be an issue for a company that churns out $90 billion in revenue in a given quarter. It is an issue for the likes of Ford. Ford is down by 2.65% in the pre-market. Q1 numbers were decent. Hardly anybody is talking about Q1 numbers because up by 50% because they can't get the access to the chips they need. This is the classic example here. Great demand, can supply meet it? I want to finish on this. Switch up the board in the bond market, 2s, 10s, 30s. This is what we look like. We've had a 10 basis point move on the week so far, and it's hardly being discussed. We've got a 5 basis point move on a session, and it's just slipping under the radar again. 165.75 on 10s, on 30s, 232.68, and up 4 basis points today. Tom, slipping under the radar because we're still within the range of the last month. They were the words of Marvin Barth of Barclays, but I think this move is notable. Once again, a shift higher on 10-year, 30-year yields, and that curve getting a little bit steeper too.
Some of that yield is there off of the nominal GDP that we see, and we see it with Merck earnings out moments ago. Merck reaffirming that organic, rather I should say sales growth, revenue growth of 8 to 12%. Those are numbers that I have never seen before, and that is because of a boom economy. We'll give you the best earnings coverage we can here through the morning, and of course Amazon this afternoon. Right now, we are thrilled to bring you Glenn Hubbard. To say he's a Columbia University barely describes his contribution to economics. Former chairman of the President's Council of Economic Advisors. He is hands down, bar none, the most articulate conservative economist we have today, bashing those to the right of him on supply side theory at any time. Dean Hubbard, we come to you in an extraordinary and original time. What we are living right now is not in the textbooks of you, not in the textbooks of the laureate Joe Stiglitz, not in the textbooks of Ned Phelps as well. How do we come out of this? With stability or instability?
Well, huge and important questions, Tom. I think that we have to take action on both monetary policy and fiscal policy. We had news on both yesterday. The Fed's got to be a lot clearer, both on the inflation side and the real side. And fiscal policy has to confront the fact that we do have to pay for things in the long run. The tax system required for the government President Biden wants is one that would require value-added tax or some very large middle-class tax increase.
How should our viewers and listeners synthesize inflation? Should we partition it as the dynamics of goods and services? Should we look at it as U.S. versus the rest of the world? How do you study where inflation's heading?
Well, great questions. And I think the answer is sort of all of the above and more. I do believe that under good conditions, inflation bursts could be transitory. Inflation will rise. We'll see that in services inflation as it bounces back, and in goods inflation and shortages, of course. I think the problem for the Fed is that their focus now on the labor market misses an important point. That one of the reasons employment recovery is not as fast as output is that part of that's structural. It's an economy readjusting, and the Fed being easy isn't going to help that. It's not really a matter of running the economy hot. So there are inflation risks, to be sure.
Glenn, what would you say to people who would say, look, for years we've been expecting inflation. For years it seems like there hasn't been that much slack in the labor market. And it would make sense, given how low rates are, that inflation would pick up. It hasn't. This is not going to change. How would you respond?
Well, inflation is picking up. I don't think it's going to explode, but I do think there will come a time where the Fed's data dependence rhetoric is going to make it really explain the groundedness of inflationary expectations. Unfortunately, but maybe fortunately for the Fed's stance, the kinds of policies we're seeing on the fiscal front will slow productivity growth. So the kind of secular stagnation scenario and lower real rates in the medium run may prevail.
Can you explain that, how the proposals that we've heard from Biden's administration will actually cause more stagnation and less productivity?
Sure. The tax proposals on the corporate front and the capital gains front are definitely leaning against investment. The president may well articulate fairness points, but we're not hearing about the efficiency points. And traditionally, we trade both of those off. There's not very much support for work in what the president is proposing, but really an expansion of social spending. So it's a very different set of orientations. From the Fed's perspective, that could mean lower real interest rates going forward.
Is there an economic precedent to highlight and to show what you're saying? Because a lot of people point to the tax cuts under President Trump and said, well, a lot of that did not go into capital expenditures. That didn't necessarily go to investments and higher productivity. On the flip side, higher capital gains taxes and higher corporate taxes won't have that big of a material effect in terms of diminishing capital expenditures and productivity.
Great questions. In the TCJA, the Tax Cut and Jobs Act you referred to, investment did go up early on. That growth was retarded by the fact that administration chose a protectionist trade policy that generated enormous amounts of policy uncertainty that were themselves anti-investment. We have experiences from the 1970s of malaise with bad tax policy. Tax policy is only one thing. It's not dispositive. But clearly there are more efficient ways to fund government than what we're hearing about. And from budget math, you can't fund government this big by taxes on the rich.
Now, Glenn Hubbard, I'm not going to mince words. Lawrence Kudlow and I are on the same page, where you are the singular voice of conservative economics, with homage to the great Ed Lazier of Stanford University and his colleague in crime, John Taylor. Glenn Hubbard, let's get back to first principles right now. What does Art Lafler and his crew get wrong? To those that are more strident than you are about conservative solutions, what do they get wrong?
Well, I don't know if it's a matter of right or wrong, but it's sort of a missing starting point. The first starting point in government is what's the size and scope? Taxation is just a way to fund the government that people desire. It's either taxation today or taxation tomorrow, which is called debt. So we really have to decide what we want government to do. And then we have to ask the most efficient way to pay for it. So simply arguing for low taxes doesn't make sense if that's not the public choice. The public choice seems to be for a larger government. The question is it efficient? And are we paying for it in the most efficient way? And the answer to both of those questions is no.
Can we take our obligations now to our children, our grandchildren, and our great-grandchildren and solve it through the growth of the nation's economy? Or are we going to have to be more overt and strident 5, 6, 7 years out to get this fixed?
Well, growth will help. But if you look at some of the big drivers of fiscal problems before COVID, they were in the entitlement programs, and growth alone doesn't get rid of those liabilities. And I don't think it's really a green eye shades problem. I think it's a question of how do we make government work better? And so we really need to focus on helping people prepare for opportunity, support for work, and yes, reining in some of the other programs that try to drain the budget. And if we have to raise taxes, raise them in the most efficient way, carbon taxes, consumption taxes, and so forth.
Always great to catch up with you, Glenn. It's good to see you this morning. Glenn Hubbard there.
Thank you.
Columbia Professor of Economics. Caterpillar up more than 27% year-to-date so far, up 27.62% coming into today, to be precise. Out with numbers in the last couple of minutes, and it's a big beat on earnings. 287 versus an estimate of 195. Revenue, $11.9 billion for the first quarter versus an estimate of $10.48 billion. Expectations were high, Tom. We come out of the number with a big upside surprise on Caterpillar.
Yeah, it's a big upside surprise. And again, John, this goes to the partition you made earlier of the FANG stocks and like Ford Motor and the chip issue as well. These are really worth studying. These are companies, obviously global, but much more away from the hoopla, if you will, of Amazon, Apple, and Google. These are real businesses, and how they do here with a revenue beat is incredibly important, and how that call is, how they reframe for Q3 forward.
A nice read on the physical economy. Encouraged by improving conditions in end markets, the stock, Lisa, up by a couple of percentage points.
And this has to do not only with home building, which has been going gangbusters in the United States, but also around the world, these ideas of investing in the infrastructure. And I got to say, the fascinating story that really is sort of surprising after the digital economy really was front and center in 2020. Now we're talking about the physical world, as you say, John, and just how much people are bidding that up. And I wonder how far that will go, what this is pricing in terms of what in Biden's plans will actually get passed, and how much this will bleed through into actually fixing roads and bridges.
4,200 SPX. I mean, Lisa, you were talking about it earlier in our team meeting that we have.
Oh, yeah.
2-hour meeting that
I don't get invited to that. What time's the team meeting?
It was 2 minutes before the show started.
No, John, Lisa and I were in makeup. You know, like,
that's where the team meeting is. Do you not see your own makeup, Tom? I do my own. I do my own.
Well, I sleep with mine on, so it works.
You sleep with yours, okay.
Yeah, but Lisa,
Continue.
when do we get to 5,000 framing on SPX? We're not there yet, but come on.
Where are the fundamentals that people are looking at? And I think that ultimately that becomes a question. We're looking Caterpillar shares pre-market up nearly 3%, and this makes sense. We didn't see the same extent of a pop for Apple, even though those earnings actually beat way more than Caterpillar.
John, good morning. Ben Laidler at eToro. Annualize it. We're up 24%. SPX.
It's not bad, is it? It's not bad, Tom.
3 years double digit. Good morning,
since the
Mr.
beginning
Laidler.
of November, we're up almost 30%. That's the realized
for
return
an
that we've
entry
had,
point.
up almost 30%. The only banks coming into 2021 with their numbers still north of where we are now, I believe JP Morgan at 4,400 and Goldman at 43. Everybody else, because this was 30% ago almost, you think about what happens with the year ahead look ahead. Some point in Q4, Southside gets together and says, you know what, we'll do the year aheads now, Lisa. And this market just ripped into year end.
The real question now is are these peak earnings? Are these peak numbers, or is this just the beginning?
Coming up.
Are they what?
Dr. Jennifer Nuzzo, Johns Hopkins Center for House Security Senior.
Could earnings be transitory?
You have a drink, TK. North of 4,200 on the S&P, up 30 points. We advanced 0.7%. Yields up 4 basis points, 165.21. We were almost serious for a moment.
Almost.
Just for a moment.
You know, I like it with Cholula.
Wasn't the weather beautiful yesterday?
Cholula?
The heat in New York City, just
in
a little
Bloody
bit, just
Mara?
the flavor of summer. 3 different people talking about 3 different things.
Completely different
That is the beauty of this
3 weeks in
program. That is a promo for Bloomberg Surveillance. 3 anchors talking about 3 different things simultaneously. Weekdays, 6 a.m. Eastern, tonight. Salad.
All listening to each other.
This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden is proclaiming that America has turned the corner on the pandemic and is on the move again. In a speech to Congress, he promised tax hikes on the wealthy to pay for ambitious plans to spend trillions on education, childcare, and other democratic priorities. The president said his infrastructure proposal would be a jobs maker, especially for those without college degrees. Those are people who largely supported Donald Trump. And legal experts say federal authorities may be on the verge of bringing charges against former Trump White House lawyer Rudy Giuliani. FBI agents raided Giuliani's Manhattan home and office. There's been a long-running investigation into his work in Ukraine, including attempts to dig up dirt on Joe Biden. Giuliani's lawyer denied any wrongdoing. Shares of Facebook rising. First quarter sales soared 48% at the social network. There was strong demand from retailers and other advertisers wanting to grab attention from Facebook's billions of users. The average ad price rose 30% and monthly users rose 10%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I have a feeling of cautious optimism now. We were seeing cases go up. We were seeing people relaxing their measures, and I was really worried that we were in for yet another surge. I will say we have plateaued our cases. Cases are starting to come down. We think that this is related to increased vaccination, increased people taking caution, and so I'm cautiously optimistic that we're turning the corner.
In about a month, we've gone from impending doom to cautious optimism at the CDC. That was Dr. Rochelle Walensky, the CDC director, speaking to Good Morning America from New York City. Good Morning America. Alongside Tom King, Lisa Bramis, I'm Jonathan Ferro.
Slick on a Thursday.
Do you like that, Tom? Up 30 on the S&P. So slick, so smooth, through 4,200. Like Thanks, Tom. Almost. I'll get there one day. I'll bring you with me. Yields up 4 basis points on a 10-year to 165. You and I got to let it drop one day. Euro dollar 121.21. We're unchanged on the session. Tom, can you imagine? Let's picture this. 20 years ago, and the likes of AOL and Yahoo were for sale. Can you imagine what our coverage would be like this morning?
Yeah, that's true. I happened to be with Steve Case the day they unloaded that dog, and it stayed a dog, and it is a dog, and we're doing the accounting this morning. Just the back of the envelope from our Jillian Tan is another current $4.9 billion, what do you want to call it, a loss, a write-down, whatever, from Verizon. John, this has been a train wreck from day one, and I don't think we have the final accounting yet.
I should say it is for sale, Tom. They're exploring a sale, and I imagine that a dog is not in the prospectus. This is Verizon exploring a sale.
Maybe they'll do the sale in
assets,
Bitcoin.
Yahoo and AOL. And Lisa, this hasn't worked out.
No, it's been a really tricky combination, and there's a question about big cable companies and big tech companies becoming involved in the media space. It hasn't worked so well, and this is an ongoing theme, and perhaps capping this
Major shout out to Tim Armstrong, who got in when it was happy and got out right at the top.
Some of the reports this morning.
One of the great trades of the year.
So
let's look at the pandemic right now. As we just heard from CDC, cautiously optimistic. We are always optimistic. To speak to Jennifer Nuzzo with Johns Hopkins Center for Health Security. Dr. Nuzzo, good morning to you. I want to know the distinction you're looking at into the weekend. We've got the horrific story in India. I've got good news. I got yelled at 3 times yesterday because I didn't have my mask on. What are you looking for into this weekend?
Domestically, I am also cautiously optimistic. I think the case numbers are good. I love to see them coming down. Give it a couple of weeks for me to declare that, this is a sustained trend and feeling full confidence. So the U.S. situation is looking good, but of course, all eyes are on India right now. I mean, it's a humanitarian emergency that's unfolding there, and this is something that we can't turn our eyes from. It's obviously quite worrisome for India, but also for the rest of the world, because our abilities to feel normal about this pandemic, to resume the life we once knew, that 2019 lifestyle, really depends on countries having this virus under control. And India is in dire need of vaccines, but they're also the place where a lot of vaccines were going to be made for the rest of the world. So I do worry about the cascading impacts of this. And, I think it's a wake-up call that any country that hasn't had a serious surge of cases and hasn't vaccinated its population remains at risk.
Well, we remain at risk, but there's a confusion out there. I think, we heard that on Bloomberg surveillance yesterday, the confusion of the CDC. What clarity do we need so I don't get yelled at because I don't have a mask on?
Right, sure. So first of all, we know that outdoor environments are much safer. And, regardless of your vaccination status, if you're outside far away from people, you don't need a mask. People who are vaccinated obviously have a lot more freedoms, and they can do some kind of outdoor gathering without a mask, as long as they're with other vaccinated people. But when it comes to the indoors, you still very much need a mask, vaccinated or not right now, as long as the case numbers are really high. And that's in part for maintaining compliance with indoor mask wearing, really important given the fact that most of us aren't protected from vaccine, but also because the case numbers are high, and we're hoping nobody gets the virus after having been vaccinated. So I think it's a fairly low risk, but we know that indoors are where those transmissions tend to happen, and so that's where you're going to see the mask use still be needed for some time.
Doctor, you said something so important there. Part of this is to maintain compliance from people who aren't vaccinated. I think a lot of people who have been vaccinated now just want to know the science and not the ethical decisions that certain policymakers are making right now. If you are vaccinated, do you need to wear a mask indoors? Regardless of compliance and the behavior of other people, do you?
Yeah, so I'm not really as worried about that as a vaccinated person. I think if I were in a really crowded, place, particularly a place with poor ventilation, I would still wear one just because we're so close to this thing being over. Why take the risk? And a mask is going to be protective and fairly easy to wear, but it does actually reduce the pressures on you for sure.
So there's a question here going forward. At what point will we actually be able to take off masks, given the pace of vaccinations and given where we are in India?
Yeah, I mean, I think that's a really fair question, and I would love for there to be some target set for that, because I think people want to know, and I think it's important for encouraging people to get vaccinated, not only to say, yes, this makes it easier for you, but there's a light at the end of this tunnel. Some people have proposed that once we get down to sort of seasonal flu levels of infection, that sort of changes everything. We don't maintain restrictions and make people wear masks in the context of seasonal flu, so that perhaps that will make it feel much easier to do that. But we haven't actually defined it as a country, and I wish we would.
This is a double-edged sword, though, right now, isn't it, when it comes to what vaccinated people can and can't do? There is an effort from policymakers to make sure there's compliance from the people who haven't been vaccinated. At the same time, we're not providing a big enough incentive to get those who are hesitant to actually go and get one. Are we at an inflection point now where we have to stop doing this and just start telling people the truth, what they can and can't do, and just allow them to make a decision?
Yeah, I mean, I don't think they weren't telling them the truth before. I think it does reflect the fact that our understanding of how protective the vaccines are, as well as our understanding of where the virus is being transmitted. And you saw the mask guidance really focus on outdoors as being the safest thing that we can possibly do. But yeah, I think it is really important that people get vaccinated, and we're seeing some waning interest, and we have to do everything to encourage people. I have always been concerned since we've started rolling out vaccines that we've spent too much time telling vaccinated people what they can't do and not enough time telling them what vaccines enable them to do. The truth is vaccines change everything, and they make everything you do much safer.
Doctor, I think we all agree with you. In this country, at least, we need to do a much better job of telling people what they can do and not what they can't do. Doctor, it's great to catch up, as always. We appreciate your perspective. Dr. Jennifer Nusser there, Johns Hopkins Center for Health Security Senior Scholar. Tom, that's the issue at the moment. It is a double-edged sword. You can see it from the perspective of policymakers. They want to maintain compliance to certain behaviors for certain people who haven't been vaccinated. I get that. But for most people in this country who have been vaccinated now, they just want to know the science. They don't want the opinion of a policymaker who's worried about other people.
It's day by day. John, I'm going to stay with that. And, you were great on this with the United Kingdom and what they've done and, the path of vaccinations. Where are we going to be the second week of May? Where are we going to be the second week of June? Where are we going to be the second week of July? And we just have to be patient to get there and stay vaccinated. One of the cherubs got vaccinated, second shot yesterday.
Didn't know that, Tom. That's good.
That goes next week.
Who shouted at you? Where was that? On the Upper East Side? Get shouted at?
Oh, I don't know. I was, having a daily cigar.
Just having a walk and a cigar through
Good
Central
morning,
Park.
Cuban seed.
It happens so commonly. He doesn't remember.
Some old lady came up and beat me with a cane.
Nice.
Oh, right.
Okay. Equities, all-time highs.
She turned to me and said, here, walk the dog.
This is Bloomberg.
If you can just scan all the incoming mail, all the incoming luggages, it's going to be a massive time saver. And it means that we can capture a lot more of the illegal wildlife trade that's currently going undetected.
So our focus is odor detection, and this is because no matter how you're bound, what container you're in, you're still producing and releasing odors, and we're kind of building off of wildlife detection dogs.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
The amount of liquidity that's out there, $4 trillion plus in money markets, savings rates near all-time highs. All of these augur well for the continuation of the bull market.
It will be, I think, temporary inflation for the course of the next 12 to 18 months.
We know this economic data is great. This is all reopening, fiscal stimulus. Well, how much does behavior change? We're all becoming behavioral scientists.
There are several mega trends here that will probably make this cycle hotter for the next several years.
This is not just overheating. There's a risk that this is like starting a fire. So there is a chance that inflation could be overshooting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Upside surprise after upside surprise from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures nicely positive, 0.7% on the S&P 500. Companies in America delivering, Tom, in a big way.
Yeah, they're coming out, and there's different parts of America, but I like how you take it to America, John, because each of the sectors is different now. We've got Altria wandering out now. They churn by in the famous Bloomberg headlines. Lisa, help me here. Maybe we get McDonald's out. We had Caterpillar earlier on and on and on. And you know what, John? It's all the same story. Well, yeah. Revenue surprise.
I mean, the revenue upside surprise, 13.6% on comp sales, plus 9.23% was the estimate. The numbers from Apple, revenue up 54%. New record for services, for the Mac, revenue all-time high. Luca Maestri, the CFO, revenue records in each geographic segment, double-digit growth in each product category, Lisa. The numbers, incredible.
The thing is, this isn't just beats. These are unbelievable beats. They are blowing it out of the water beats. And I'm looking right now at McDonald's share price ahead of the open. It's up 1.1%, right? I mean, this goes to Apple being up less than 3% ahead of the market, given the fact that it absolutely blew expectations out of the water, which makes me wonder, what exactly are traders looking for? What fact could necessarily change their view, make them buy more robustly or sell more robustly?
And John, one headline here that goes away from tech, McDonald's global comparable sales up 7.5%, and that's that nominal global GDP proxy. That's what you've got to look at.
Against an estimate of 4.94, so another upside surprise. We also need to talk about execution risk. It dominated the conversation in the previous hour of this program. We've seen that show up in Ford in a big way. Struggling to get access to semis in the auto sector has been an issue sector-wide. For Ford, it's going to cut production in the second quarter by 50%, Tom.
Yeah.
By 50%.
It's Tim McCauley saying he prefers Generous Motors over at Citigroup right now. John, I'd also want to point out the Verizon media train wreck as they jettison AOL and all. I'm going back and forth with Craig Moffett. We're trying to get an all-in loss there. But I love their phrase, we connect people to their passions.
How's that working out?
That's how,
Yeah.
And then you look at Apple and, take the Verizon media phrase, we connect people to their passions, and throw it over to Apple. And, those are the winners and the losers in this derby.
One company's doing it, the other one isn't. Right now, equities, all-time highs on the S&P 500, 4,200 on the S&P and up by 30 points. We advanced 0.7% into the bond market with yield higher 4 basis points on 10s to 165.04. Euro dollar unchanged at 121.24, and a big call out of Goldman that we'll touch on a little bit later on the commodity market. 11K on copper maybe. 80 on crude, right now 64.73, up by a little more, Lisa, than 1.3%.
It is a boom market, and Tom, perhaps Verizon is connecting people, perhaps McDonald's is connecting people to crispy chicken sandwiches, which evidently was one of the reasons why they said comp sales were so good. Today, we are looking not just toward crispy chicken sandwiches, but also initial jobless claims are expected to come down. I still wonder, though, why they are not coming down faster. The expectation is for it to be about 540,000 new initial jobless claims. Still a lot of people getting benefits. Again, what is going to make this number go down materially, probably as the world reopens and the summertime emerges? That will also happen. GDP expected to come out 6.6%. Then 11 a.m., Randy Quarles of the Fed is going to be speaking about financial supervision, financial regulation. Very interesting to see what he has to say about Archegos and possible disclosures around derivatives, especially given the fact that Fed Chair Jay Powell was saying this does raise questions about risk management controls at a number of banks. And then later today, we are, of course, going to be getting a better look at earnings. Amazon and Twitter coming out after the bell, expected to blow things out of the water, given what we've seen from Apple and Facebook and everybody else. Again, I do wonder, what will make traders respond? Why has there not been a bigger response to beats that are astronomical, John? I mean, these are way above normal beats.
And to your point, Lisa, it's not just the companies that have had big year-to-date gains. It's also the likes of Apple, who haven't delivered anything in 2021 so far and have blown it out of the water, knocked it out of the park, and still that stock has hardly moved. It's up by a couple of percentage points. TK, I know one focus for you on Amazon is the fact that it's north of 3,500, and you think maybe, or perhaps they should, deliver a stock split?
We're seeing all these companies, not specific to Amazon, John, but they are all adapting to the reality of their success. And they've got a PR effort on to the nation, frankly, to their employees. I saw that yesterday afternoon with the Amazon out front about pay raises coming quicker to people. And one of those things is just to be more visible and more accessible. It's antiquated as all get out. But why don't they do a stock split to recalibrate with other big companies like McDonald's and that ilk?
Let's do a clinic right now. Steve Cheverone, Federated Hermes Portfolio Manager. Steve, I'm going to put you in the middle of a debate. What's the value of a stock split?
Well, I think it's actually a little bit more now than it has been over the last several years, because over the last several years, you had a market that was dominated by institutional investors, and it really didn't matter what the price of the stock is. But we know that retail investors have come to the fore in a much, much bigger way over the course of the last year or so, or about a year. And I think it does make those stocks more accessible to those folks and could increase demand, at least in the short run. So I think it's a little bit more than it has been.
Steve, a major shout out to Federated Hermes. You people have been fabulous about having the courage to stay in this market. How do you acquire shares this morning?
Well, I think it's a stock picker's market right now. So, as you know, we had a 4,500 target for this year. We're getting there. If we're 4,200 this morning, I think you're likely to see some volatility over the summer. I think value-driven markets in general are more volatile than growth markets, just because you need that data to continue to support that value cyclical story. I think politics and the sausage making around, now a myriad of spending and tax proposals will get messy as that gets negotiated in public. And so our view is you look for areas of weakness. If you see some of these value cyclicals sell off because, the 10-year rolls over, or there's a flare-up in the virus, you want to buy those. Likewise, I think we're getting to the point, and I think it'll be the next quarter, the second quarter of 2020, where value will be, on a fundamental basis, as strong against growth as it will ever be. And that's probably your sign to start adding to some of those growth names again with more earnest. So I think it's stock by stock, industry by industry, buying weakness. It's not about buying the broad market, at these levels.
Steve, why are stock traders not responding more to these beats that are incredible? I mean, look at Apple. Not only did they beat, but they said they were going to buy back about 4% of their shares. Why is the stock not up more?
So I think this is healthy, and I think it solves, the big question that's out there about, the multiple on the market. The market is growing into that multiple, right? The market wasn't going to wait for these numbers to come in. We understood COVID was easing. We understood people were going back in, and that started getting priced into the market. Now we're delivering the earnings to justify that. So if you look, the market was trading at a 22 times PE last June. It's trading at a 22 times PE today, and we're up 40%. This is good, fundamental growing in earnings, and it's one of the reasons why we have not been apoplectic about the multiple, and we think that this is more of a sustainable run.
Steve, I get that at the index level, but let's take two given names in a sector. Let's say tech, very different companies, but Alphabet going into its earnings report was up about 30%. Knocked it out of the park, the stock rallied. Apple did nothing all year. Knocked it out of the park, the stock's up a couple of percentage points. I think some people are struggling with that, Steve.
Yeah, but I think if you look in the fundamentals of the company, there's some clues there. Number one, right, we know we had a major refresh on the iPhone last year with the 5G. Question is with that big refresh, are you going to get a similar one going forward? Okay. On Google, though, there was read-through to the macro economy, and I suspect it'll continue to filter through. What we were reminded of yesterday on Google was how cyclical parts of that business are. And the fact that you've got advertising dollars jumping the way that they are, particularly in an area like travel and leisure, that's a sign of economic strength, reopening, and potentially further cyclical upturn for that company's revenue. So I think it's about the sustainability of what's going on. You can see Google continuing to accelerate in those areas, where, Apple, it's great, but it should be this good, but not necessarily any better in the coming quarters.
Steve Smart, and always good to see you. Steve Chevrone, Federated Hermes. I haven't talked about Facebook this morning. The stock's up by more than 7 percentage points. Off the back of the story that Steve is talking about right now. There was a company on the ad side of the business that was selling more units and getting more revenue per unit. That's just great right now. With that embedded cyclical story in some of these tech names, Facebook, the ad revenue over at Google, Alphabet, we've seen big pops, Tom.
And you wonder about Twitter this afternoon, below the radar on Amazon, as well. John, what we're doing here, trying to say it all, as you mentioned Ford Motor and such, and we mentioned Stanley Black & Decker yesterday. I just wandered through a toothpaste company, Church & Dwight, and we're talking iPad, iPhone, and all that. How about, John, double-digit gummy vitamin growth?
Nice.
This is all part of it. It's a general lift in expectations across a lot of products away from the fancy stuff the business media is totally focused on.
And everybody's going to talk about peak growth, Tom, because it can't get much better than this. We wouldn't usually be talking about peak growth this early in the cycle, but this cycle is so unique, and that's why I wonder whether the concept of peak growth is even relevant. If you have a mechanical, mandated recession, and then a reopening that delivers a mechanical year-on-year rip, like the one we're seeing in corporate America right now and in the general economy, can you really use peak growth as a concept in this cycle?
You can't. And John, I'm going to go back to corporate officers adapt to the cards they're dealt. And that's always the way it is.
Lisa?
It depends on the company. If you're talking about a Facebook, one thing that's clear is that some of the pandemic habits are persistent. And we're seeing that with Apple with respect to the purchases. We're seeing that with cloud computing. There are companies that do not see that. Netflix was one of them, and you saw it punished in the aftermarket trading. But that, to me, is the question. How much has the economy changed?
Coming up on this topic, Michael Holland of the Holland & Company chairman. Looking forward to that from New York City this morning. Good morning. A little bit later, it's Amazon's turn. Up 30 on the S&P. A break through 4,200 on the S&P 500 futures, up by 0.7%. We have a lift on a 10-year yield as well, up 3 or 4 basis points to 164.50. And in foreign exchange, euro dollar just about positive, 121.27. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. President Biden is betting he can sell the American public on sweeping change. Last night, in a speech before Congress, the president called for higher taxes on the wealthy to fund a massive investment in the nation's social security net. He's asking for trillions of dollars for infrastructure, childcare, education, and subsidies for working-class families. Politics may force the president to eventually abandon some of the more ambitious ideas. And President Biden's speech also underscored how much he's focused on China and its economy. The president said he believes that the U.S. and China can cooperate in some areas, but he warned that Xi Jinping wants to make China the most significant, consequential nation in the world. And the president insisted that the U.S. will maintain a strong military presence in the Pacific. The U.S. government has warned its citizens to get out of India as soon as possible because of the worsening coronavirus crisis. The State Department issued a level 4 travel advisory, its highest level. Americans were told not to travel to India or to leave as soon as it's safe. India says there were a record 379,000 COVID cases in the last 24 hours. And Apple crushed it again. Revenue soared 54% last quarter, and the company authorized another $90 billion for stock buybacks. People working and learning from home bought iPads, Macs, and the 5G iPhone 12 line. But Apple warned that the global chip shortage could knock off up to $4 billion in revenue during the fiscal third quarter. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is basically going to kick off the whole week.
From bank earnings.
Bank earnings really have to be front and center.
To tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We're in competition with China and other countries to win the 21st century. We're at a great inflection point in history. We have to do more than just build back better. To build back, we have to build back better.
Build some chips right now. Let's build some chips right now. That seems to be the issue at the moment. President Joe Biden there on Building Back Better from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bramvitz, I'm Jonathan Ferro. Here's the price action. I'll get to what I'm talking about in a moment. Equity futures up 28 on the S&P through 4,200. We advanced 0.7%, all-time highs. It is the issue of the moment. Demand is great. Can you meet it with supply? We saw this story play out with Ford yesterday. They've put a number on it. They've had to cut their planned production for the second quarter by 50%. We've seen this play out with Apple. They've put a number on it. It could hit revenue by 3 to 4 billion, quarterly revenue, because it will hold back sales of the Mac and the iPad as well. And now we've put a little bit of detail around the story from Caterpillar. The CFO, we may not meet 2021 end user demand due to the chip shortage. Mike Wilson and the team at Morgan Stanley talked about this coming into the quarter. Demand's great, it's about execution. And because of the chip shortage, Tom, some of these companies are going to struggle to meet that end demand and execute.
And the timeline on that's a real mystery, John. I think what's so serious about the chip shortage is this is not like 1 month, 2 month, all of a sudden. How far out would you say it is, John?
For the chip makers, I think they're talking about 2022.
Yeah, exactly.
For the CFO over at Ford, what I saw him say yesterday in the press release was the following. It will get worse before it gets better. The company believes that the issue will bottom out during the second quarter. That's from an auto manufacturer. We hope that's the truth. But for the chip makers, they're talking about this story playing out beyond that, into 22. And of course, both companies have got skin in the game. Both sectors have got skin in the game. The autos want this done with now. The chip makers are doing pretty well.
You know, with the Bloomberg folks, we're so advantaged to see the fabric of all these earnings. And John, what I see is a lot of companies struggling. Molson Coors out with their earnings, flat revenues, even lower revenues and all that. And they're talking about hard seltzer. John, I've never had hard seltzer in my life. That's like the savior of the moment.
I have to admit that I've had some hard seltzer. I think it's called White Claw a couple of summers ago when that really blew up. I understand that's still a thing, Tom.
It's still a thing.
I didn't like it. It wasn't my thing.
Our crack booking team has gone out and found someone expert on hard seltzer, and that would be Jack Fitzpatrick, Bloomberg hard seltzer reporter in Washington. How bad of a hard seltzer, Jack Fitzpatrick, do the moderate Democrats need after the State of the Union last night? I mean, President Biden went out and did the ballet that any president has to do. What is the morning after the hard seltzer like for the moderate Democrats?
Well, they kind of got ahead of this and warned that when this gets to Congress, it's going to be reshaped very significantly. Biden can give his pitch and talk about his ideals, but the legislative process is going to be very different. So Joe Manchin was talking yesterday about how just the overall spending numbers that these proposals have added up to kind of give him heartburn, and that's not something he wants to see. There is a divide between the moderates and the progressives, clearly, but this is on a pretty bipartisan track right now. They're not pushing it through the process that they can do this with a simple majority in the Senate. So there is a lot of pushback from the moderates and Republicans to try to whittle this down to something significantly smaller.
Lisa, let me translate the jargon there from Jack Fitzpatrick, hard seltzer correspondent. Reshape means, Lisa, they don't agree.
Thank you. I appreciate
that. Reshape. We're
State of the
reshaping
Onion,
this
by the
morning.
way. That's classic. I love that.
Yes.
State of the Onion, I'll have to use that. Jack, there is a question about what in the proposals that Biden has put out there already are actually getting pushed through the sausage, the disagreements that Tom is talking about, especially given some of the supply chain disruptions that John was just talking about that a lot of companies are mentioning, especially given the fact that people are still saying that there are serious infrastructure needs on a myriad of issues that need to be addressed in the near future. Yeah, the basic transportation infrastructure stuff and the buildings and utilities, water pipes, that kind of thing, that's where there's bipartisan support. When it gets more to things relating to climate, and the human infrastructure, if you want to call that, that's where there are way more disagreements. So there is probably bipartisan support for a good chunk of the money in here. Some of the
it's competing with China. Semiconductor stuff that lawmakers have worked on does seem to be a bipartisan priority. But a lot of the stuff that Biden's pushing for this next plan on family care, child care, that kind of thing, that's where it gets a lot more controversial.
Jack, I understand that there's bipartisan support, but is it plausible for these to actually get done, given the fact that Biden wants to include some of the other proposals and given the fact that perhaps some Republicans don't want to appear to be on the same page with Democrats?
Yeah, it can get done. There are a number of Republicans who want to get something done as long as they can cut a lot of that other stuff out of it. The choice for Biden and Democrats is, do you try to push this through in a partisan way through the reconciliation process that is slow and confusing, and some things would be pulled out because of the parliamentary aspects, or do you actually continue to work with Republicans? They are talking to them now, and understand that Republicans are going to pull a lot of stuff out. It would be a big win for Republicans to cut out big chunks of this, the most controversial stuff on climate and that kind of thing. The question is if Democrats continue to work with them as they push to cut and cut and cut.
Jack, what's the messaging to the Sunday talk shows? It seems forever away, but what are you going to listen for on Sunday as everybody regroups into May?
I think Sunday, the topic will probably still be this. It'll be the infrastructure bill and this next big push for the families plan. But I'll be looking for the concrete stuff. There are conversations between Republicans and the White House, but at what point do the committee chairs take something up? At what point do people work on legislative language and actually get into the details, which is when you discover even more challenges and disagreements that you have? But I think that the news cycle will be pretty focused on this legislative agenda from Biden for a little while.
Jack, we've got to leave it there. Jack Fitzpatrick down in D.C., Bloomberg government reporter. A headline out of Germany. Germany administered a record 1.1 million vaccine doses yesterday. A record 1.1 million vaccine doses. Now, here in America, to give you an idea of the size of that, the population of Germany is a little north of 80 million. So let's population adjust this, just back of the envelope. That's the equivalent of a 4 million day here in America, Tom.
Well,
4 million vaccinations
it's a big number.
in America.
You've said
it's a huge number.
They're picking up on this, and they're going to do it with a certain efficiency, and maybe there's some, because of the size and scope of America, they're going to catch up even faster than we perceive.
We had days like that in America, and now we're printing something in and around 2.5, 2.6. I use the word printing a little bit loosely there. We're looking at 2.5, 2.6 million vaccinations a day in America at the moment. But this is getting better in Europe. We're crawling our way out of this, Tom, on the continent.
John, I'm thrilled that people watch and listen to us each and every day. When Luke Kawa emails in, we are mentioning hard seltzer and Molson Coors.
What did Luke have to say?
Luke Kawa notes that the Molson family has owned the Canadiens, the Montreal Canadiens, for 30 years, and he notes this is the loser Canadiens as they went down in flames last night.
They didn't do well last night.
Back to the early 1960s.
The Maple Leafs is Luke's team?
I believe so,
Just to be clear. Thank you.
Yes.
Okay.
They haven't won since time began, and they're winning big this year.
Bit of ice hockey for you.
Thank you, Luke, for watching.
Thank you, Tom. Coming up later in the hour, Pierre Ferragut of New Street Research on a chip shortage hitting corporate America.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Live on TV and radio, this is Bloomberg Surveillance for our audience worldwide. Here's the price action this Thursday morning. Good morning. Futures up 28 on the S&P, a breakthrough 4,200 and positive 0.7%. Some outperformance on the NASDAQ. Katie Lyons will go through the big tech earnings in just a moment. We push higher there as well. We're up by more than 1% on a session so far. Switch up the board. I want to talk about the bond market and expectations coming into the new year. Spare a thought for the sell side, just for a moment. I know some of you might not want to get that small violin out, but spare a thought for them. At the start of November, we've had a rally on the equity market of almost 30%. And when we were looking at the year ahead, the outlooks from some of the big banks on Wall Street, the only two names that I can think of right now that still have a year-end price target on the S&P 500 north of where we are, Goldman won at 4,300, Tom. JP Morgan was the other coming into the new year at 4,400. This market has moved so quickly, and this bond market did too, until the end of March when we topped out at about 174 on a closing basis on a 10-year. Then we get a lift again this week by about 10 basis points. Right now up another 3 to 164.50 on a 30-year, up 3 to about 231.59. We're starting to recalibrate again. Tom, just let me get to this, because this is the one you're going to want to comment on in the commodity market. Switch up the board and get to copper and to crude. Goldman Sachs. I think, Tom, Jeff Currie does such a wonderful job of not making the call on the commodity market, just explaining the characteristics of commodities. The supply needs to meet demand. It's a physical market, and you need to clear, and you can't price tightness in the future ex ante. And I think that is so important, and that's the call he's making right now.
And the call of Goldman, and that, of course, was a big splash yesterday, John, is the linkage here, folks, in from commodities and then back into rate markets and the inflation proxy, and then over to equities in the expectation out 6 months. And I would suggest, John, very much so, that to Lisa's point earlier, the expectation out 6 months on stocks gets you to November of this year, and nobody has a clue what kind of earnings stream we're going to see into 12/31 reported out, say, end of January next year.
Well, here's the Goldman call 6 months out. On copper, on crude, 11K on copper, right now just shy of 10K. On crude, looking for 80 maybe over the next 6 months, right now 64.70. These are the year-to-date moves. Look at the year-to-date moves we've already had on copper, on crude, 28%, 33%, Tom, respectively.
Yeah, but you link it in, John, and I do, into the Pacific Rim statistics of Apple yesterday afternoon. And the answer is there's a boom consumption recovery in Asia. And with that, an industrial recovery as well, witness selected commodities.
It's the demand shock that Jeff Currie's talking about, the tightness that he expects and the inability of supply to meet it. That's the commodity market. But Kaylee Lyons, that's a massive story for the equity market too. Can supply meet demand for corporate America?
Yeah, and John, as you talk about the rally we've seen in commodity prices, all I can think about is higher input cost and the pricing pressure that results. Margins definitely a key theme in this earnings season. But today, the key things for me are 1, the chip shortage, and 2, the blowout numbers from big tech after the bell last night. Facebook, one of them, revenue up 48%. It left expectations in the dust. All of that digital advertising spending we saw Google benefiting from earlier this week is true for Facebook too. That has the shares up about 7.5%. Also, user growth beat expectations. Apple also blowing it out of the water. 54% revenue growth with everybody out buying Macs and iPhones. Also, a $90 billion addition to the share buyback program, aiding sentiment as well. Though I would note Apple and that semiconductor shortage is a factor here. The company says that could knock $3 to $4 billion off of fiscal third quarter numbers. Of course, Qualcomm is a maker of chips for smartphones, and it is benefiting from that surge in demand. Really bullish second quarter outlook as a result. Those shares up about 5%. But on the other side of that semiconductor equation, you have Ford. That chip shortage biting in a big way with a cut to the outlook. The company says it could cost them about $2.5 billion. Those shares down the better part of 4%. We also heard about chips from Caterpillar earlier this morning. Earnings, yes, beating expectations by about 47%. But the company's CFO saying they might not be able to meet end demand in 2021 because of that chip shortage. Also, they didn't provide any outlook. Still, though, the shares are in positive territory in the pre-market, up a little more than 1%. Align is up on a healthy beat by 4.3%. To the downside, though, ServiceNow failed to meet expectations on the outlook. It's lower by the better part of 7%. And eBay, Tom, this is interesting, down 7.8%. The outlook missed. The company saying stimulus money ran out. We're not going to be able to benefit from that anymore. And as Americans emerge from the pandemic, they just don't think they're going to be able to hold on to those gains, Tom.
It's just in, Kaylee. Domino's Pizza, same-store sales up 13.4%. Wow. That's a trenchant statistic for this morning. We're making our contribution to the Keene household.
Are you?
Yes,
you eat Domino's?
we are.
I did not believe you.
No, well, no, I'm not. I don't. What do I see? It just wanders by me and disappears into bedrooms. And,
wandering pizza.
Exactly.
Can I share a story?
Said.
Is it too early to share a story? Let me share a story, Tom. Just a little one, a brief one. I once met Tom for a drink at a Carlisle, and I forget what time it was. It was pretty late at night. And I turn and I bring some friends with me who are in town for the weekend. I think it was around the US election in 2016. And we arrive and Tom's propped up at the bar with Mrs. Keene. And I'm hungry, so Tom asked the barman, can you get some food for Mr. Farrow? And he comes out with hot cookies and this little plate of chocolates as well. And I've never seen anything like it. The barman at the Carlisle bringing out warm cookies to have a snack in the middle of the night.
John.
With a hard drink.
That
is what Tom does at the bar.
John, that was phenomenal. Tim, and to you it's Timothy.
I'm okay. Timothy.
Did you eat the cookies?
Timothy. Of course I ate the cookies.
You and I wish we were Tim. He takes off all of February.
Sometimes, TK, I wish I was you.
Colorado.
I wish I was you sometimes, too.
There we are.
Domino's.
We say good morning to all of you as well. And what's important here, and I want John to bring him in because John's migrating to the Real Yield tomorrow afternoon. We're distracted by earnings. We're distracted by all this tech stuff. And guess what, folks? It's about the deepest market out there, and that is fixed income. John, Michael Schumacher is someone to speak to.
Yeah, we've got a lift. 165 on 10s, up 4 basis points. Mike Schumacher of Wells Fargo with us now. Mike, your read on this week's price action, please.
Yeah, John, we're still bearish. We think this move is overdue, frankly, and Treasuries have sat in a pretty narrow range for really the last month. So you've got so many factors coming together to push rates up, whether it's additional stimulus, as we heard last night from Joe Biden, or a very compliant Fed, take your pick, and on top of that, really strong inflation readings. So we do think yields go up from here.
Mike, this debate at the moment in this bond market I find really fascinating. Mike Collins of PGIM was with me recently, and he said, we've seen peak growth, you might have seen peak yields. Bob Michael at JP Morgan came on 24 hours later, and he took the opposite side of that. He said, as far as he's concerned, peak growth as a concept isn't relevant in a cycle like this one, because of course peak growth is going to come early in this cycle because the slowdown was mandated and the reopening is so mechanical. Mike, where are you on that debate? The concept of peak growth and how relevant it is for the Treasury market?
Yeah, peak growth really is irrelevant at this point. It's all about the central banks and it's all about inflation data. So those are the things that count. As far as the growth numbers, the U.S. has blowout growth last quarter. Who cares? Nobody, frankly. We all know that. It was awful last year. It's good this year. That's really baked into the cake. What's much more important is how quickly does inflation ramp up? How quickly do you get past these strange base effects the economists like to talk about? And ultimately, how fast does the Fed taper? Didn't talk about it yesterday, swatted down those questions. And we do think that's a very strong recipe for yields to go up.
There's a question, though. Markets are going to get ahead of the Fed, right? The Fed might be looking at a certain roster of inflation data, but we're hearing out of companies the degree to which input prices are being passed along to consumers. Has there been enough data, Mike, at this point to say this is more than transitory?
Probably not quite yet, Lisa. And I think you've got to get out a couple months. So if you think about, again, I hate to talk about base effects. I'll do it briefly, but the most intense month is right now. So April of last year, CPI fell 0.4. In May, it was down 1/10. So I think you really need to get out to the June prints, which will show up in July. That's when we'll get more evidence that the inflation pickup really is sustained.
Right. Michael, how does your world change when the mayor of New York City announces that New York City will, quote, fully reopen on July 1? That has to have an effect on capital markets.
Yeah, the reopenings are huge, Tom. And you think about the impact on markets this year from vaccinations and reopenings, it's extraordinary. Perhaps the Keene household will consume a little bit less pizza at that point, but I think it's a big sign for the economy. You're going to have a boom, and it's going to have legs.
Mike Schumacher, we've got to leave it there, of Wells Fargo. Let's wrap up these headlines. Comes from an interview on MSNBC with New York City's mayor, Mr. de Blasio, saying the following: New York City to fully reopen on July 1st. Tom, I'd be interested to get the detail around that and what that means for, let's say, going to Yankee Stadium and going to watch a baseball game. What that really means for all those kind of activities.
I agree. It's in the details. And I will say in the last 48 hours, maybe 72 hours, cases have really come in, as we heard from Dr. Nuzzo over at Johns Hopkins today. John, I want to straighten everybody out. We're Apple, Facebook, Amazon, Twitter. We're as guilty of this as anyone. Seriously, Domino's Pizza, up 37% per year for the last decade. Apple Computer up 28%. Per year.
Yeah, it's been one of these huge stories. I agree with you, Tom. It's been one of the big winners of the stock market for, I think, more than a decade, right?
Yeah. Well, they've been a big winner, but their equity interest in the Detroit Tigers hasn't been so good. That hasn't been a
value add. I'd expect nothing else.
You know.
You pivot away from a big headline like that from Mayor de Blasio, Lisa.
What's it mean? Seriously,
Tom, I'm with you. Go on, Lisa.
Hold on a second. I can provide some insight. There are questions about bars and restaurants being open now until midnight and then past midnight. The whole idea of the city that never sleeps. Can it not sleep again? Because it's been sleeping, right? I mean, you've had subways that have been shut down for periods at night. Are they going to reopen? How much will people come if the city reopens? These are some of the questions.
These are the questions I think we're all asking. Yeah. What does it actually mean? Are they going to actually get rid of all of that? Is that what that means?
Well, I mean, that would be the implication, but I do not know the answer to that. And then there's a question of pools and beaches. Are they going to open on time? The city's saying, yes, they're going to open on time. But again, will people come? I mean, if you go outside, it looks like they're coming. The city's crowded.
Can we go to Yankee Stadium? I imagine, Tom, this season it might be easier to get tickets. Is that right?
No,
it's easier to go and watch the Yankees.
No, it's actually, I've been looking. Seriously, I've been looking. Like Red Sox are Mets, they beat DeGrom last night. Magical game. It's hard to get seats because, there's only a limited number.
And you have to have a COVID test, although they do provide COVID testing on site for a fee.
Can you take a vaccine passport? Does that exist?
Yes, that does.
You can take your card.
Yes, you can take your card.
And you can get in.
Correct.
So we aren't doing vaccine passports in certain parts of this economy.
You're doing vaccination cards showing
not at the government level, just private companies, Tom, getting this done.
Al from New Jersey emails in and says the whole team needs cheeseburger, chicken taco, and Pacific veggie pizzas from Domino's for this morning.
As in this team. For
Bring
breakfast.
it on.
For breakfast.
Yeah, Honolulu Hawaiian.
Got to stay cut for summer, Tom.
Yeah,
no pizza. Come on.
That's their new logo. You don't know that? Domino's. Stay cut for summer with Domino's.
Stay for summer with Domino's. That's going to work out, isn't it?
Thank you.
Up later,
royalty incoming.
Pierre Ferragu from New Street Research on a chip shortage that has hit Ford, Apple, and now Caterpillar warning about it too.
Maybe if Domino's splits, they can join the Dow.
TK, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden is proclaiming that America has turned the corner on the pandemic and is on the move again. In a speech to Congress, he promised tax hikes on the wealthy to pay for ambitious plans to spend trillions on education, childcare, and other democratic priorities. The president said his infrastructure proposal would be a jobs maker, especially for those without college degrees. Those are people who largely supported Donald Trump. And President Biden also called on Congress to pass stricter gun safety laws. That's in response to recent mass shootings in the U.S. He urged lawmakers to pass 3 House-approved measures designed to strengthen background checks. The president also pushed for a ban on assault weapons and high-capacity magazines. The Carlyle Group brought in more money from investors and posted gains across its business in the first quarter. The firm's private equity funds rose 15%, whilst investment solution funds were up 14%. Carlyle benefited from taking its companies public early this year when U.S. stocks soared. And Caterpillar reported first quarter earnings that beat estimates. The world's biggest maker of mining and construction equipment says rebounding economies drove demand for its signature yellow machines. Sales were flat in North America, but rose in other regions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
ultimately your own pricing power is dictated by your technology strength, and I'm pretty optimistic about how that is developing at the moment. Then the other side of the equation is, of course, the fact that the semiconductor market is tight, and there are examples of semiconductors where we are seeing prices go up at the moment.
That was the Nokia CEO questioning the situation at the moment, and I think it is the big situation at the moment for corporate America. Anyone exposed to the chip shortage is starting to get hit. Can supply meet demand? From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Here's your equity market. The S&P 500 futures up 28 points on the S&P, 34200, and we advanced 0.7%. Into the bond market, yields higher by 4 basis points to 165.21 on 10s. Euro dollar unchanged at 121.32. A headline crossed on a Bloomberg in the last couple of minutes. It comes from New York City's Mayor, Mr. Bill de Blasio, who says the following: New York City to fully reopen on July 1st. But Tom, I'm trying to get my head around this headline and what it actually means, because he goes on to say he expects Broadway to return to full strength in September. So are we reopening the entire economy, keeping select parts of the economy back until September? Is this just about capacity and timing issues that Lisa alluded to 10 minutes ago? What is it?
Oh, he's in the bright lights with Walter Isaacson and Joe and Miko over there. And, you know, I would say, John, there is some confusion about this, but the confusion was there yesterday as well. We're all stumbling forward. And, you know, Lisa, I'm going to go to you on this. I'm sorry, but the school thing in September is really the trenchant point.
And the question I have is, how much is this going to hinge on vaccinations of 12 to 15-year-olds?
Or
when are we
younger
going to
even.
open up to the younger individuals?
Absolutely.
We don't know yet. That said, the idea that kids will be able to go back to school in person, in full, in September will be positive news to a lot of people.
John, I know we got to get back to semiconductors here, but John, I'm really going to say our Dr. Levy at Children's Hospital in Boston was heated that we need a research regime before we give vaccinations under 16 years old.
Yeah, we need a little bit more clarity on a whole range of issues, including reopening New York City in full. When we get those details, we will bring them to you. A headline crossed the Bloomberg in the last hour, not related to that story, related to the chip shortage. The Caterpillar CFO saying that they may not meet their 2021 end-user demand due to a chip shortage. You saw this in Apple as they knock off $3 to $4 billion of quarterly revenue because of a chip shortage, holding back sales of the Mac and the iPad. You saw this from Ford, cutting production by 50%, planned production by 50% in the second quarter. I want to bring in a man who knows this business far better than us, Pierre Ferragut, the New Street Research Head of Technology Infrastructure. Pierre, let's just start right there. What's happening at the moment, and why is this hitting some companies more than others?
Okay. So on what's happening at the moment, let's rewind back to a year ago. A year ago, the world came to a stop. Everything stopped. And then, you know, guys working in the supply chain, at like in foundries, at chip manufacturers, like buyers, planning for orders, they all went a very cautious road. And then at that point in time, the world split in two. You had players more in the tech space who were thinking, we have very important turns to take, like the cloud turn, the 5G turn, and we don't want that situation, that temporary situation, to stop us. So they kept ordering like there is no tomorrow. And then you have people who were more defensive, like the auto industry, like industrial supply chains, that were really scared about cash burn and like getting into trouble in such like a significant downturn. And they became very, very cautious. Then right after that, what happened? The world remained relatively slow, which is not great for many people, for like restaurants and things like that. But people staying at home, like white collar kept getting paid. Blue collars or like, you know, like service jobs got compensated with government money, with stimulus money. And a lot of money kept flowing into demand. You looked at the results of Apple yesterday. That was a massive, massive bit. Like iPhone sales are up 65% year on year. So demand is far outstripping the cautious supply planning that was made last summer.
Pierre, beautifully explained. You are definitive on this out of Bernstein years ago. What is the Ferragut timeline to where the logistics mess clears?
So unfortunately, the core of the logistics mess is what we call lagging edge logic chips. So that's the chips manufactured by global foundries, by TSMC, by UMC. And the lead time to put out a new fab and have it up and running is at best, in ideal conditions, 18 months. And you should be more like thinking, even 6 more months like that, like 24 months or a bit more. So we're going to hear about chip supply for the next couple of years. And in terms of who gets impacted the most and things like that, it's going to be very difficult to call, because one chip missing on a motherboard, you can't ship your iPad. One chip missing in your car, you can't manufacture your car. So it's going to be very random, who gets hit, who doesn't get hit. But of course, if you are like an Apple,
right.
You're better positioned because you've been preparing for that better, because you were working on your 5G transition than others, taking way more precautions in terms of supply than a car manufacturer just being focused on managing the downturn.
Pierre, this is exactly where I wanted to go. Execution risk, as John was talking about earlier. How much is this something that corporate executives can get ahead of at this point? What are you looking for to hear from corporate executives that they are going to do about it?
It's going to be very difficult to get granular details about what they're going to be able to do about it. The CFO of Ford, cannot really have his own hand on a plan to secure alternative supply for a very minor chip in their car. So it's going to be very difficult to be able to do something about it. I think what you have to do is to mitigate it. And then another perspective that you have to keep in mind that is very important is that we are in this extreme situation where people braced for a downturn and actually spending increase. But as the world reopened, and you were talking about New York getting back to normal, people getting back into the cities that never sleeps and in bars and restaurants, this is actually going to flush down the amount of money going into consumer electronics and potentially even going into the car industry. And so maybe the saving grace in this environment is going to be when demand normalizes. Is Apple going to have massive quarters as they reported yesterday for the next 6 months or 9 months? Maybe not. Maybe things are going to cool down. And that's actually what's going to accelerate the return to normal on the supply side of things.
Pierre, really smart, as always, and I look forward to catching up again. I keep meaning to talk to you about Tesla, and then we get distracted by something else. We're going to do that soon, I promise. Pierre Ferragut there, New Street Research Head of Technology Infrastructure. It's an issue that's dominating corporate America. Anyone exposed to the chip shortage right now, it's a struggle to execute, to meet that demand, Tom.
You just work your way through it, but there's a real mystery on how you work your way through. And I'm going to go to the end of third quarter, into fourth quarter. Who has a clue where we're going to be? There's, Peter Hooper, there's a guesstimate there on GDP, but it's just that, a guesstimate.
New York City to fully reopen on July 1st, according to the Mayor of New York City, Bill de Blasio. That headline just crossing as the Mayor of New York City speaks to MSNBC. Here in America, from New York, equities up, all-time highs on the S&P. This is Bloomberg.
There's renewed global attention on the fact that the efficacy levels of Chinese vaccines have not reached the levels that we've seen from the mRNA vaccines in Pfizer and Moderna, and even Russia's vaccine. All of these have efficacy levels above 90%, but the Chinese vaccines are ranging between 60-something% to just below 80%. And specific attention is being paid on one Chinese vaccine, Sinovac. This vaccine has been proven in a large-scale Brazil trial to have an efficacy level of just above 50%. 50% is the minimum threshold that regulators will accept for approval. So that is concerning, especially because this is the Chinese vaccine that's been distributed most widely around the world. A lot of developing countries like Brazil and Indonesia are dependent on this vaccine. So questions are starting to mount on how is this going to affect the global immunization effort. But what's also really important to keep in perspective is that the 50% efficacy rate is looking at all symptomatic disease, even mild sickness. And the truth is that all the vaccines we have out there right now, including the Chinese ones, are nearly 100% effective at preventing hospitalization and death. And those are the two most important things: bring down serious sickness, bring down fatalities. We're still going to see that happen around the world, and that's why it's really important for people to keep getting vaccinated, even if the only access they have is to a Chinese vaccine.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Farrow. This is Bloomberg Real Yield.
Fed's got to be a lot clearer, both on the inflation side and the real side. And fiscal policy has to confront the fact that we do have to pay for things.
We will see a rise in real yields, but it's not going to be anything like what we've seen in the past.
We understood COVID was easing. We understood people were going back in, and that started getting priced into the market. Now we're delivering the earnings to justify that.
We know this economic data is great. This is all reopening, fiscal stimulus. Well, how much does behavior change? We're all becoming behavioral scientists.
This is not just overheating. There's a risk that this is like starting a fire. So there is a chance that inflation could be overshooting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A simulcast, Bloomberg Radio, Bloomberg Television, a simulcast of stock upgrades, Google up, Apple up, maybe tomorrow morning, Amazon up as well. John, it's the good news of big tech overlaid upon the good news of the distinguished mayor of New York City.
The bulls on the south side get more bullish, and those who are bearish on the likes of Apple have to throw in the towel. And one of those, Goldman this morning, Tom, upgrading their rating from sell to neutral on Apple.
Brutal.
Their original view that the iPhone cycle would disappoint in the midst of COVID was clearly wrong. Dan Ives lifts his price target, most bullish on the street, along with Raymond James and Mr. Queso. 185 now the price target, and I'm with you. The news that crosses from the mayor of New York City, Mr. Bill de Blasio, on MSNBC, saying that New York will fully reopen, New York City fully reopen from July 1st. At the moment, Tom would like on detail on what that actually means, but it just really captures the moment in America. Things getting back to business. The numbers are stellar.
Let's sum the details of the mayor of New York with the chancellor of Germany. John, you mentioned it earlier as you interpolated the vaccine news in Germany. I'm sorry, it is a bundle of worldwide good news.
A record day of vaccinations in Germany, north of 1 million. Now think about this. Population just north of 80 million. million. Anything north of 1 million is the equivalent of doing 4 million vaccinations here in America. That is a fantastic number. Europe clearly heading in the right direction now, and euro-dollar got the sense of that a number of weeks ago. That's why we're now north of 121.
Lisa, the stark reality here of the fanciness of finance and markets and all the else we do on Bloomberg surveillance is the reality of what you heard from the President of the United States last night. A huge body of the public really doesn't care about price target upgrades on Apple.
And there still are a lot of people who are still struggling. And one thing that Joe Biden was talking about was that the pandemic hit the lowest income earners the hardest and actually allowed savings to grow pretty substantially among the highest earners. What I thought was interesting, Tom, was that Jay Powell echoed this, talking about substantial further progress in the employment market, not having to necessarily do with the number. And he said that, yes, there are pockets of froth within the markets. He used the F word. But then he said, I won't say it has nothing to do with monetary policy, but it also has a tremendous amount to do with vaccination and reopening of the economy. Yeah. Perhaps that's already been priced in, Tom.
Lisa, help out John Farrow here as he prepares to blow up the real yield. You'll see that, folks, tomorrow afternoon and into the weekend.
Thanks, Tom.
And as well. Lisa, what has high yield and IG said about what full faith and credit is doing?
Default risk is off the table. That's what it's saying. Basically, the riskier, the better. That is what people are buying. And you can see that companies are selling. And one thing that I was looking at last night is that the duration of those bonds has been lengthening. Basically, companies are selling longer and longer maturities. Perhaps this is a bet on inflation because they're saying, you know what? We think our money will be worth less to pay back this debt later.
John, I'm trying to figure out what the Padres are doing with the Diamondbacks as the Giants and the Dodgers hold strong in the National League West.
You just missed Lisa taking a really bullish refinancing argument and making it somewhat bearish. North of 70% of year-to-date issuance in high yield has been refinancing.
Okay.
North of 70%. The maturities are longer, the rates are lower, and arguably the balance sheets are better.
How's it the Carlyle
and we're making the argument that
John,
somehow this is bearish because these companies think that their debt is going to be worth... Lisa, come on.
No, honestly, I'm not saying that it's bad to refinance, but I will say with respect to refinancing, they're refinancing debt that they took on during the heart of the pandemic because lower costs costs have gone down. I'm talking about investment-grade companies selling 30-year bonds. This idea of why would they do that when they have a record stockpile of cash on their balance sheets unless they thought that rates were historically low and that going forward, they're not going to get as good of a deal going forward.
What's new about that, though?
That they don't need the money.
What's new about that dynamic? It's always either a supplier's market or a buyer's market, and right now it's a supplier's market because at the moment this economy is doing really well.
I just see the amount of cash on some of these companies' balance sheets, and I wonder why are they raising so much money then in the debt market?
So Apple's doing the same thing. Has Apple got weakness right now? You think Apple's a weak company?
No,
they're doing the same
thing. I'm not saying that they're weak companies.
Apple's investment grade, load of cash on the balance sheet. They're issuing debt.
Correct, and I'm saying why would they do that? To me, why would they be doing that unless they thought that the rates were so good they might as well lock it in now?
But we've been talking about that a year ago, 2 years ago, 3 years ago, 4 years ago, 5 years ago. This bearish argument around credit, I'm not saying you're not going to have months, years where things are bad, but the bearish argument around credit hasn't changed. It's been the same one for the last 5 years.
I don't think I'm making a bearish argument, though. If you want to know the truth, what I'm saying is simply what it says is that companies see this as an opportune time to finance themselves, even with the cash that they have on their balance sheets. And this is a view on the economy going forward.
And that I totally agree with you.
Okay, well, good. I'm glad we got there. I'm looking at Apple debt denominated in Swiss francs, and basically you're paying Apple to take your debt. Let me look at the data right now, the lift in the markets, all of this of the good feeling on earnings. Futures up 29, Dow futures up 136. The VIX comes in, but not like I would think, 16.91. Thank you to Dean Kernett for wisdom there the other day. John, in the yield space, the real yield like a rock, negative 0.79.
We've had a lift on a 10-year Treasury. It's got to be the story of the week in sovereign debt. Yields higher by 4 or 5 basis points, 165.75. Right. Euro dollar 121. Just to go back to that news from Germany, just better news. Good news out of Europe, and it's much needed as well. And hopefully, in the same way that we looked at Europe several months ago, we'll look to certain emerging markets as well in months to come that they can turn the corner to.
One of the realities here is that life will clear and markets will clear. We're thrilled to bring you Michael Holland of Holland & Company for decades, giving wisdom and perspective. And yes, this too shall pass. Michael Holland, you have been a steadfast bull. You have held shares, including Apple. Once again, we see corporate officers adapt to the cards they are dealt.
Adaptation is the means for survival. I guess Mr. Darwin told us, Tom, and I think the adaptation for companies has been remarkable given the last 14 months. I think it's incredible, not just to watch people like Apple and Google, et cetera, do spectacular things because the winds at their back got a very strong wind there. But in addition, you have the rest of corporate America doing, as Lisa was talking about, a lot of smart things. It's smart to raise money when you have very low interest rates and lock it in. And if you can't find ways to use that money for business purposes, which they will, you can always give it to your employees or the shareholders.
Michael, looking at the share price reaction is something Lisa's been on top of through this morning. Great numbers, not huge responses to upside surprises in the equity market. What's the read across from that?
Well, I think we're beginning to get inured to good news, Jonathan. I think that you're ending up with good news being greeted with a, well, that's good, or really good news saying, okay, we'll applaud that. But if you get slightly less than good news, we've seen the results with things like Pinterest yesterday.
Michael, what's your view after earnings? Does this change anything for you in terms of how hot this cycle could run or how long it could last?
As Tom said, Lisa, at the open with me, I've been around a long time, and so I've learned not to do that, not to try to pick what you guys were talking about a few minutes ago before I came on the show, which was, peak earnings. Where does this thing peak out? I have no clue. Mm-hmm. The companies don't have a clue. A lot of them won't make guesses because of the, one single fact. How about the shortage of semiconductors? Who knows if it's going to be 2 quarters from now or 2 years from now? But the reality is things are very good. This is a really nice problem.
For our radio audience, it's important to note that Michael Holland comes to us with a famous Holland & Company clipper ship behind him. That was the ship in the early 19th century that made the Holland fortune in Asia. Michael, you've been an Asia bull, and once again, we see spectacular resurgence and reemergence out of this pandemic out of Asia. Do you invest in American multinationals, including Apple, obviously, because they will win in Asia?
I still have a little bit of Taiwanese exposure, a little bit of China exposure, Tom, but I'm focused on the U.S. myself. And I think all of the good things that are going on over there in that part of the world are actually, to me, somewhat sublimated by the current craziness in the political machinations of China. So I actually have some trepidation about having any of my or people I care about having their money in that part of the world right now. It's just, there's too much going on. It has nothing to do with running businesses. So in the U.S., I'm just delighted to take advantage of whatever China and Taiwan can do for us here, including produce some semiconductors.
Michael, you're the only fancy guy I know who hasn't moved to Florida. Are you long New York City?
I actually am not a good candidate to head down to Florida. I was down there last week for a few days of R&R, and I can tell you it's a very nice place to visit. And I love being here. My second choice, Jonathan, would probably be London, but and actually closely rivaled by Boston. So those are my three. We're lucky enough to be able to travel around, and these are my favorite places to ensconce.
That's the most diplomatic way to insult a city, Michael, just to say it's a lovely place to visit. It's a lovely place to visit. Michael Holland, Holland & Company, the chairman. I'm with him, though. New York City, the traffic's back, Lisa, in a big, big way. Have you experienced that too?
Oh, my gosh. Can you see in the park? Have you gone to the park during the weekend?
Yep.
It looks like Times Square. I think everybody is out and everybody's enjoying it.
No, Lisa, this is true. The changing of
like
Central
the first
Park
true thing
in the
you've
last
said.
couple of years. I was out mowing the lawn the other day.
Oh, of Central Park?
I got one of those John Deere push mowers
in Central Park.
They gave me the mayor gave me like a third of an acre, and I mow it.
The rental market's picking up as well. If you just take note of that.
Big time, yes.
Things are getting busy.
Big time.
Coming up, Henrietta Trace of Veda Partners, Director
Are
of
you two on
Economic
speaking
Policy.
terms again?
Lisa and I are always
Have
on
you kissed
speaking
and made up?
terms.
Yeah.
Don't know about this.
Social distancing, but
we're socially distanced.
How was that about?
Just getting into it a little bit, having a chat, talking about credit.
Christ, he's so freaking English.
Futures, 4,200. We say what we think.
I'm shocked.
Shall I do some of that
That's a
passive
break
aggressiveness that
exclusive.
you're trying to teach me?
I don't do passive aggressive.
You want to do that? Lisa's one of us. Lisa just says what she thinks. She does not do passive aggressive. That
Can't do
passive
that.
aggressive.
What am I, a wasp?
You just
I'm a wasp.
That passive aggressive thing, you know. Just say what you think. You ever see that in New York? Everyone gives each other a hug. It's so good to see you. It's been so long. It's been so long for a reason.
John, you got to take wasp lessons. You'll get through it.
Don't you experience that, guys? It's been so long. It's been so long. Kiss, kiss. Come on.
Look at those markets.
From New York, this is Bloomberg.
Have a beverage if you're here. It's transitory.
With the First Word News, I'm Ritika Gupta. President Biden is betting he can sell the American public on sweeping change last night. In a speech before Congress, the president called for higher taxes on the wealthy to fund a massive investment in the nation's social security net. He's asking for trillions of dollars for infrastructure, childcare, education, and subsidies for working class families. Politics may force the president to eventually abandon some of the more ambitious ideas. New York Mayor Bill de Blasio says the city will fully reopen on July the 1st. De Blasio told MSNBC that kids can go back to school full strength on the 1st of September. He also expects Broadway theaters to reopen too. New York has been embarking on a slow step-by-step comeback as infection rates have eased. McDonald's appears to have turned the corner on the coronavirus pandemic. The fast food chain reported its first quarter of global sales growth in more than a year. McDonald's posted same-store sales that rose 7.5% in the first 3 months of the year. Comparable sales in the U.S. soared almost 14%, beating expectations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, the party, makeup will bounce back.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're going to get rid of the loopholes, allow Americans to make more than $1 million a year and pay a lower tax rate on their capital gains than Americans who receive a paycheck. We're only going to affect 0.3% of all Americans by that action, 0.3%. And the IRS is going to crack down on millionaires and billionaires who cheat on their taxes.
That's the big effort of the President of the United States in an address to Congress yesterday evening. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Equity futures shaping up as follows on the S&P 500. Going into initial jobless claims, 12 minutes away. Some data we haven't discussed just yet. We'll do that a whole lot more in just a moment. Equities up 29 and through 4,200. We advanced 0.7%. In the bond market, yields higher by 5 basis points now to 166 on 10s. Euro dollar unchanged. Some brilliant news out of Germany. Record daily vaccinations out of the largest economy in the Eurozone. And some decent news in New York City as well, as the Mayor Bill de Blasio talked about fully reopening, Tom, on July 1st.
Good news with the bid up 29, as you mentioned, on SPX futures, really near record high. John, the flavor claims 540,000 is a survey. I just did a fancy 10 data point extrapolation, and claims are a little bit ahead of themselves. You really wonder if they keep the trend of the last number of weeks. That's a hugely constructive number.
We could have maintained that trend, Tom, that's for sure.
Yeah, we'll have to see on that. Right now, Henrietta Trey's joins us, Veda Partners, here on the soiree in Washington last night. Henrietta, I want you to explain in the white marbled halls of Washington how politicians line up their tax policy around, as the president mentioned, 0.3% of taxpayers. Why aren't they more representative of the rest of America?
You know, one of the interesting things I hear from senators, and including the moderates like, a Joe Manchin, is that they want to tax wealth like they tax work. So they have, I think, a lot of talking points around raising cap gains, around raising taxes on top marginal rates. I think the real question, though, is, what can you functionally get the votes for? With no margin for error, where can you get those 50 votes in the Senate? And I don't see much movement as realistic. Maybe a couple points here and there.
Okay, this is really, really important. Dan Balls, esteemed Dan Balls in the Washington Post, talks about the narrowest of majorities. When do we come to our senses that the president can't be bold if we do? Is it within hours, days, or do we have to drag this into July?
I mean, honestly, I think that most investors should have seen that when, for instance, they couldn't pass the minimum wage hike to $15 an hour, and they lost 8 votes. I mean, I think July is probably a good time frame for when we'll start to recognize that we're going to be mostly deficit financing the cost of this bill. The administration and Democrats generally have been doing a great job of avoiding the conversation around reconciliation and deficit increases that will have to be authorized this bill. And that's because President Biden has rolled out this ambitious agenda to pay for it. So July seems right to me based on what we see from the budget committees. We know that Speaker Pelosi is marshaling this bill through the House, and they want to be wrapped up by the 4th of July. I think reconciliation comes right after. September is a possibility. Might be this headline risk that looms over us until September. But September is my thinking as well.
What will the headline number most likely be in September after it gets pushed through the congressional sausage?
My expectation is that the cost of this bill, which is currently $4 trillion, the combo of the infrastructure bill and the families plan, gets slashed by at least half. So $2 trillion is the maximum sticker shock spending number that those moderates in the Senate can stomach. So the spend alone is going to come down by half. And that means the revenues needed to offset the costs are going to come down by at least half. And we haven't even started talking about the deficit hike. So the real question is going to be, when do we see the spending level? My expectation is that doesn't get discovered in earnest until the Senate starts to consider this bill, which will be July, late July specifically. And then the deficit hike number, again, will be the other key input point to see how much revenue we need. So all this is going to just effectively wait till July. You can skip over the next couple months. The House will pass a big bill that maybe is $3-4 trillion, and then we can forget about that as soon as we get over to the Senate.
Henrietta, if you look at equity trading, you can see that a lot of people don't believe that corporate taxes will be raised all that much. What do you think they will be looking at in September? Will it be higher than they expect, or will there be more enforcement of loopholes and just getting the actual taxes that they're charging?
Great point. I mean, that enforcement mechanism, when you start hearing lawmakers talk about enforcement and collecting taxes that are due by beefing up the funding for the IRS, that should tell you all you need to know, which is we're not going to go after new taxes. We're not going to create some new tax stream. We're going to go after the ones we've already collected, try to boost, fraud, waste, and abuse, and call some earnings from that. I think what investors are stuck in right now is this mentality that whatever the president says goes. So they hear, a 39.6% capital gains tax rate, and that's what they go to. And then you see a couple advisors say, maybe 28. Well, imagine if the number is 23, 24%. I think that's where we ultimately end up, but people aren't using their imagination effectively enough yet. The same with corporate rates. It doesn't have to be 28%. It doesn't even have to be 25%. It could easily be 24, 23%, and that's what the business community is pushing right now. We can handle a point or two. Don't take us all the way to 28, and possibly don't take us all the way to 25. And those are options, and I think the street will respond pretty favorably based off of what current expectations are, which still can be really high if you're on the phone with folks. I agree, the market's not pricing it in, but when you're on the phone with people talking about where tax rates are going to go, they're surprised at our thesis that taxes will not rise that much.
Henrietta, just quickly, it wouldn't be the first time that we've had a week where we're drowning in fiscal news in America and we miss the foreign policy story that creeps up on us. What are we missing right now outside of America, outside of domestic fiscal policy?
Man, John, I thought the part of the speech last night that was most compelling was the China-facing component. The U.S.-China relationship is one that I think is going to be paramount in the back 3 years of the Biden administration. They're not going to pass any more legislation after this bill, most likely, except for a China-facing component. So U.S.-China relationships, that means everything from export control restrictions beefing up to domestic subsidization of manufacturing in the high-tech sectors, monitoring the South China Sea, dealing with Taiwan, dealing with the EU and the UK to sort of combat China on a multilateral basis. That's the future. That's the next 3 years.
Henrietta, great to catch up. Henrietta Trace there of Vader Partners. Thank you. Tom, you got a flavour of it there, didn't you? We've got a chance to do things domestically. After that, we move on pretty quickly to foreign policy, almost exclusively maybe.
Well, and he's got his travels coming up and rumors of announcements of ambassadors coming up as well. It's a busy presidency, and it's a back to a more traditional presidency than we certainly saw with Mr. Trump. The hardest part for me, John, is the scope and scale of the numbers we're talking about. I still have trouble getting my head around the size of the numbers and how quickly those numbers are coming on.
You've just sent me a message about breakfast conversation etiquette. What is this?
All of us.
What is this?
I'm just trying to keep you guys happy.
Try to keep your mealtime discussions pleasant, something light-hearted that isn't controversial is ideal, unless everyone at the table thrives on heated debates. It is always a good idea to discuss what you like about the food you are eating when everyone else is eating the same meal.
You guys were having a transitory
Lisa
argument.
and I love a heated conversation.
It's important.
Lisa and I have been debating these issues offline for years and years and years.
And we're not eating breakfast.
And we'll continue to do so.
Everybody to get along.
TK, don't project.
It's transitory.
We're all good over here.
He's just
As for
12
you,
or 18
I'm not
years.
so sure. You've got a day off coming up, haven't you? I can tell. This is Bloomberg.
I need to rest.
one of the interesting features about this illness is that if you look at it, the people who develop these long-haul symptoms are often not the individuals who are hospitalized and were sick and on a ventilator and stuff like that. These are individuals who actually, most often, they never went to the hospital. They had a relatively mild illness in the acute phase, and they recovered from it. If you were in the hospital, it means you probably mounted a very strong immune response, okay? And you recovered from the illness, you probably got rid of the virus. If you never mount a strong enough immune response, then what happens is you may have mild symptoms. You thought, oh, I escaped this. But in reality, you never got rid of the virus. So you get this chronic immune activation that persists in these individuals. But it's never good enough to get rid of it because they never got rid of it in the first place. But it's enough to start causing collateral damage. And what the virus does is it inhibits certain types of immune responses. It's a drain on society at every single level. I mean, it affects women more than men. It affects people in their average age is 40. That's the most productive years of your life. And so you can see that the impact, worldwide impact of this is unbelievable. Economic toll, the psychological toll, every aspect of society is going to touch.
This is basically going to kick off the whole week.
From bank earnings
really have to be front and center,
to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
A big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Got a little breaking news here in the United States of America. From New York City this morning, good morning. Alongside Tom Keane, Lisa Bravis, I'm Jonathan Ferro. The economic data just around the corner. Let's bring in Michael McKee for more, shall we? Morning, Mike.
Good morning, John. We've got some big numbers coming out this morning, and let's start with jobless claims because that one's the first one to hit the tape. 553,000, that's down from 547,000 unrevised from last week. We'll see what the revision is. Looks like at this point still 547,000, not much of a change there. So 553,000, it's a little bit higher than was anticipated and last week, but we also are in the range now of 500,000 on a kind of solid basis. Here we go, 553,000, a decrease of 13,000 because they revised up to 566. So it goes down a little bit. And then we are at least in the range of what we've had the last couple of weeks, which gives you an idea that maybe this is the new range, 500,000, as it continues to go down. GDP is just coming out now, and the number comes in a little bit softer, the headline number, than anticipated. The forecast was for 6.7%. We get 6.4% for the first quarter GDP. Now, this is the first estimate, and frequently those are revised higher. We could see that happen. What we're looking for now is to see the breakdown, and here we start to get it. Personal consumption comes in very strong, 10.7%. Last quarter, it was 2.3%. So I think we are all going to look at that and go, stimulus checks. Everybody went out and spent their stimmies. The GDP price index, 4.1%, is not that relevant. It's double what it was the quarter previously, but we did, this is averaging over 3 months. So it is not the latest numbers. We'll get the latest GDP PCE inflation numbers tomorrow.
Michael McKee, what's so interesting here is I shout out to Steve Stanley at Amherst Pierpont, who had a more cautious trend than what the survey was as well. You know the equation for GDP. What's the biggest mystery right now? We all know what consumption's doing, but is it investment? Is it government? Is it net exports? What's the mystery for Mike McKee of GDP forward?
Well, I think it's going to be hard to separate things out because what we're looking at in this case is the rebound from very distorted figures. And so you're going to get a very strong personal consumption number of, as we said, 10.7% at this point because people are spending their stimulus checks and spending had been delayed. Ordinarily, you'd want to see the breakdown between GDP, personal spending, and businesses. But the problem with businesses is they're trying to catch up, too. So we're looking to see that. I'm just looking over the data now to see if I can find that yet and have not gotten to the charts. But let me see if I can find that as we maybe, John, you can tell us what the markets are doing to react to this.
I'll jump in
while I find the information that Tom wants.
You do that.
Buried here.
I'll whip through the equities. Equities elevated up 0.7% on the S&P 500. Yields still up too, Lisa.
Yep.
We advanced by about 5 basis points on a 10-year to 165.75.
I would argue that people shrug off these employment figures, these initial jobless claims, as noisy and irrelevant at this point, which, Mike, I find interesting. And I'm wondering if you could weigh in on that, especially because you could see continuing claims actually rose from last week to 3.66 million from a revised 3.65 million. Do we just disregard these numbers entirely at this point, Mike?
I think you do. The continuing claims numbers represent claims, not necessarily people, and they're also a week behind. And so we're going to be seeing that come down on a more slow basis. You see the revision higher to last week's initial jobless claims. That'll fold into that continuing claims and push it a little bit higher. I do have some numbers here now for you on GDP, the breakdown, and it is kind of interesting. Gross domestic investment, which includes structures, falls 5%. The big drop is in structures. We didn't see as much office buildings and large buildings, it appears, during the first quarter. But when you look at non-residential fixed investment, it was up 9.9%. So business spending in general up a lot, just like personal consumption. Americans spent 10.7%. Businesses spent 9.9%. So that's a very strong number. Equipment was up 16.7%. And intellectual property products, computers, etc., the programming, 10.1%. So we do have the strength in business spending. What held down this whole thing, it looks like, I'm trying to get the inventory number in front of me, but I'm not seeing it. But the exports were down by 1.1%, which is kind of interesting because we saw that number yesterday for March was much higher. And imports were up by 5.7%. So the trade deficit's still a weight on spending.
Mike McKee, quickly, when do we get the second look? Is it like a month away?
A month away. We'll see it at the end of May. We'll get the second look.
And Mike, good to catch up. Thank you, sir. Just to recap, the numbers, 553 on claims, 553,000 against a revised 566. So it's the wrong kind of upside surprise against the estimate, but the trend is still lower given the revision, the higher revision, just a nudge lower over the last week. Looking at GDP, we come in at 6.4%, the estimate 6.7, core PCE quarter on quarter 2.3, the estimate 2.4. Whip through the price action just briefly, Tom, up 30 on the S&P 500. We hold on to those gains, up 0.7%. Yields higher by almost 5 basis points, Tom, 165.57.
David Kelly with us with J.P. Morgan. And David Kelly, I'm going to go to the bottom of this first look at GDP. And the nominal GDP statistic is 10.7% with a big prices paid statistic. Does that signal to you an inflation that is here or an inflation that's going to come?
A little bit of both. I think there is clearly inflation right now. You can see it in things like lumber prices, which don't feed through that much. But you can also see in the difficulty that businesses are having in hiring workers. They're going to have to pay up in terms of higher wages. I think we've got bottlenecks all over the place. I think light vehicle sales are pretty strong, but the inventories are very low, and that is pushing prices up. So I think we're seeing that right now. And in fact, one other thing in this report, when you actually look at the numbers, that's really interesting is inventories fell at an $86 billion annual pace in the first quarter. So if you think it's hard to find stuff, you're right. But what that's going to do is it's going to cause manufacturing to crank up in the rest of this year. So I think you're going to see, as inventories are restored over the course of this year, it's just going to add further oomph to this economy. We had a savings rate over 20% in the first quarter. That's more fuel. So I can see this economy really geared up to boom in the second quarter. I think we'll get better than 10% growth annualized in the second quarter.
Can these companies meet that demand? David, the money question. Are there still reason to be bullish this equity market?
Yes, I think so. But I think you've got to focus on the cyclical sectors, the value sectors. I think they should do very well because this economy is going to accelerate fast here. I don't think interest rates are going to stay at this level. I think they have to go up with the pace of acceleration that we're likely to see over the next few quarters.
How do you look at the data, David, given the fact that people don't seem to trade off of it? What data are you looking at to determine whether this is something more than transitory, whether these price pressures have legs?
Well, you almost have to have a new model of inflation. I mean, the problem is that the old rules in terms of the Phillips curve and the relationship between money supply and inflation, they don't really work very well. So it's a complicated process, but you have to put together the pieces of it. And I think the wage part of it's very important, and also the fiscal part. President Biden announced a lot of plans yesterday. If he gets that through Congress, usually it's spending now, taxes later. And so I think you get more fiscal stimulus. And if you get that stimulus, you will, I think, have some inflation that sticks. And the really interesting point about this is, the Federal Reserve says, well, it's probably transitory. But by the time they know whether it's transitory or not, we're in the middle of next year. So the question is, how long can you wait to be sure that it's transitory?
That was a hat trick of transitories. That was very good, Dr.
You're getting drunk, TK.
He's killing it. David Kelly, it was very transitory of you to come on and give us wisdom out to the third quarter or fourth quarter. With what we've seen in the last, say, week or even 5 days, do you have any clarity past Labor Day of this year?
Yeah, I mean, I think we can see the GDP story. I mean, this thing is just going to keep on accelerating. We know we've got the fuel, and we also know that we've got people, anxious to get back to doing normal things. And I think the fourth quarter of this year is the first quarter that's going to feel in any way normal, and I expect it to be a very blockbuster quarter in terms of economic activity. I think the holiday season will be huge. But I think things get much more murky when you get into 2022.
Does David Kelly have to go back to the office soon? Is that July line in the sand for you, David?
Well, my second vaccine I get on May 8th. 2 weeks later, I intend to go down to New York.
There we go. We look forward to seeing you too. Hopefully you can come back into the studio one day.
I'd love to do that. Let's do that.
At some point in the next, I don't know, several years. David Kelly, JP Morgan Asset Management Chief Global Strategist. Who knows when that happens, Lisa?
The ambition there.
I've got no idea. At some point.
I'm with
over
you.
The next several years.
We could stick him at a podium over there.
Coming into this quarter, I think Morgan Stanley probably raised the big question, didn't they? Whether we could execute, the execution risk around this story. And that's been the debate, I think, for the last several days as well. There will be huge demand. There's massive consensus around that. Mm-hmm. Can we meet it?
I'm wondering also about the employment challenges, right? I mean, with that exact point, are there enough people to fill the jobs that are required? When David Kelly is talking about manufacturing, do we have the infrastructure to ramp it up here, or does that just lead to an even deeper trade deficit?
And Tom, how quickly we're trying to hire them too. What's the Morgan Stanley estimate for a couple of weeks' time on payrolls?
It's 1.2 million, and there's a lot of others catching up, like 900,000 is common, John. I mean, there's a real shift here in the last number of days. John, Alpha, New Jersey emails in and says, let's lose the jargon. John, to be clear to you and our international audience, Labor Day is a holiday at the end of August into September.
I'm aware.
Great tuition is the great tradition. The tradition, as Lisa knows, of Labor Day is to write tuition checks.
Lisa, I've lived here for 5-6 years, and Tom talks to me like I've just arrived off the boat. You called me the foreigner earlier this morning, and now you're telling me what Labor Day is. Thanks, Tom. I appreciate that. Yeah. It's super helpful.
I will say, though, that this is going to be the question, just to sort of completely ignore that and move forward, the idea of supply to demand dynamics, and can we end up ramping up supplies too much? Should I keep going?
You can, Lisa. Please do. No, please do.
Looking around the corner.
Just keep going.
Looking around the corner of microeconomics.
Do you really think it's going to take years before people get into the studio
I've
with
got
us?
no idea. What do I know about any of this? I default to you guys.
way to put it out there.
Coming up,
Labor Day
a man who knows something about Apple, the big bull on Wall Street. He is the joint most bullish on the street, looking for a 185 on Apple.
You know,
it's Dan Ives of
ask Dan
Wedbush.
if I should buy my first share.
And he joins us in the next hour. Tom, I'll do that just for you on Bloomberg TV.
Thank you.
Do you want to simulcast that?
Apple's success is transitory. Thank you.
Equities 4,200 up 0.7%. Lisa Abramowitz, Tom Keene, Jonathan Ferro. This is Bloomberg.
On speaking terms.
With the First Word News, I'm Ritika Gupta. President Biden is proclaiming that America has turned the corner on the pandemic and is on the move again. In a speech to Congress, he promised tax hikes on the wealthy to pay for ambitious plans to spend trillions on education, childcare, and other democratic priorities. The president said his infrastructure proposal would be a jobs maker, especially for those without college degrees. Those are people who largely supported Donald Trump. And President Biden also called on Congress to pass stricter gun safety laws. That's in response to recent mass shootings in the U.S. He urged lawmakers to pass 3 House-approved measures designed to strengthen background checks. The president also pushed for a ban on assault weapons and high-capacity magazines. Merck reported first quarter sales and profit that missed estimates. A surge in coronavirus cases early in the year deterred many people from seeking more routine medical care. Demand was weaker than expected for some of Merck's most important products. Sales of blockbuster cancer therapy Keytruda came up short. Caterpillar reported first quarter earnings that beat estimates. The world's biggest maker of mining and construction equipment says rebounding economies drove demand for its signature yellow machines. Sales were flat in North America but rose in other regions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax
in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
For many years, we've been focused on inflation deviating below 2%, and we used our tools aggressively to keep it back up at 2%. If we see inflation moving materially above 2% in a persistent way that risks inflation expectations drifting up, then we will use our tools to guide inflation and expectations back down to 2%. No one should doubt that we will do that. This is not what we expect.
The chairman of the Federal Reserve System on target yesterday with an interesting press conference. Our special thanks to Diane Swank of Grant Thornton for attendance yesterday from Chicago. I thought she was very trenchant about the choice set that the chairman faces into the rest of 2021. Joseph Feldman of Telsey Advisory Group has a choice set. He wrote a brilliant note on Amazon 2, maybe 3 days ago. The ink is barely dry, and he probably already has to change the model. Joe Feldman, how do you approach Amazon this afternoon after what you witnessed from Google and Apple?
Yeah, I think you're going to see some really good results out of Amazon, especially fourth quarter and the first quarter so far has proven to be quite strong for really all the retailers, anybody selling to the consumer, and Amazon's going to be a big winner of that. I think their Amazon AWS business has been strong. Even last night, they just announced a new deal with Disney Plus. So they're continuing to be this juggernaut in the retail and technology and just dominating out there. So I think our numbers are probably going to go up. I think our model's going to have to adjust again tonight after they report. I'm expecting good results.
A juggernaut with a target on its back, and we saw it of Apple trying to get ahead of that with a plan to do infrastructure spending in the United States, invest in new plants. Are we going to hear something similar out of Amazon?
I think they are. They continue to invest in the future. They're getting closer to the customer with more facilities, whether it's distribution or grocery. They're leveraging their technology in the stores. I think we're going to have contactless shopping at a whole new level because of the technology Amazon has. Their distribution capabilities continue to improve. Like I said, the AWS, they're continuing to become more dominant there, and especially with more people working from home, and that's likely to continue to some extent, that AWS becomes even more important to have things in the cloud. So I think they're going to continue to really push and lead the direction for most others in the consumer space, for sure.
There's also a question on the employment space. Amazon coming out today and saying that it was planning to raise wages for a lot of workers. Is it enough, what you've seen so far, 50 cents to $3 an hour for most workers, this idea that Amazon has had so much pressure, including that unionization push?
Yeah, I think that they have done a good job, better than most people expect. I think if you look at their average wage, it is pretty strong, and it's certainly above the $15 mark. And I think that they've, been very competitive. I hear a lot of retailers talk about needing to compete with Amazon for talent, particularly in distribution and even at retail. So I think that Amazon has done a good job, and people want to work at a company that's growing fast and has a lot of strong prospects ahead.
Joe, I'm looking at free cash flow back 5 years. Here's the numbers, folks: 6, 17, 22, 26, 26 again, and we model out to 52. We've gone from 6 gazillion to 52 gazillion in a long cup of coffee. Joe Feldman, when's the dividend? Where's the share buyback? Where's the stock split? When do these guys grow up and become a Dow component?
Yeah, the stock split is something that seems nearer to us than something, the others, the dividend or buyback. You would think that they are on stable enough footing at this point, and they've been able to show profitability quarter after quarter now for several years, that they should be able to start to think about redeploying that cash to the shareholder in some regard. I get it. You want to hoard some cash and be able to continue to invest and do what they're doing. But we're back. We're now in that new territory, a new phase of growth for this company, where I do agree that you're going to have to see some of that.
Cash, Lisa, 26, 31, 41, 55. They've gone from 26 to 84 gazillion.
Yeah.
In like another long cup of coffee.
Which raises a question, Joe. What are they going to buy?
Well, they could buy whatever they want, I guess. But, they do have a lot of opportunity to grow, I think, their footprint to get closer to the customer. Now, whether that's going to be through distribution facilities or grocery stores, I mean, a lot of our contacts in the real estate community, indicate that Amazon's been pretty aggressive trying to build out their grocery network. Now, clearly they have more than enough cash to do that. I don't think they want to buy a retailer, though. I think they'd rather grow it themselves organically. Maybe they could get some, leases or something. But it's not clear that that's where they would make an acquisition.
Well, I got to say, Joe, when you say that they could buy anyone, sure, they have the cash. But I do wonder, the antitrust push in Washington, D.C., is it just lip service, or is that a real threat for Amazon?
I mean, look, as big as they are, they've got this big guy in Bentonville that's quite large themselves, and on the retail side of things anyway, and they've got quite a few competitors in the cloud. So I'm not so sure that they've got this monopolistic power out there that people are concerned about. Mm-hmm. There is pretty strong competition in the space of retail and technology.
Joe Feldman, thank you so much. Thrilled to have you on here early in an Amazon day. He is with Telsey Advisory Group. Lisa, just absolutely fascinating. And, Lisa, I'm going to really you sum up the whole zeitgeist right now. I'm sorry. We're talking about fancy pants Bloomberg stuff, and President Biden's talking about 2/3 of America that can barely get to the next paycheck.
And it's not just Joe
bizarre.
Biden. It is. It is also Jay Powell, though, also really recognizing the bifurcated nature, the K-shaped nature of this recovery. Which raises a question, is this boom economy enough to bring up the lower income individuals? Is a 50 cent to $3 an hour wage increase enough to do that? And these are some of the questions that are sort of embedded into the employment statistics that we parse through every week.
The theory was there in February before the pandemic that we were bringing up the bottom. Okay, I get that. But we recapitulate that, and then what, to me, is the big question.
Well, you have to think about that savings. We talk about the $5.4 trillion in excess savings globally. Is that because people got checks from the government, or is that because people didn't go on vacations and put their money in the bank account, and they earned a raise because the industries that they were in happen to be doing well?
I have the answer because Ian Lingen told me at BMO Capital Markets. Lingen, writing trenchant notes, just comes out and says, look, GDP was about goods. Goods, not services. Goods exploded up.
And that's the reason why some people are thinking that the semiconductor shortage will actually wane when people start to do less with the goods and more with the experiences. We'll see.
Yeah, I look at it as logistics as well. What we're going to see is to get you through an eventful Thursday after the economic reports that we see, and really drive to the close with all those important earnings from Twitter and, of course, Amazon as well. We do it with not only a market lift, but a persistent lift. There's been a bid, a vengeance of a bid for the last 2 hours under SPX. Up 32 points, 42.08 on SPX. John Farrow insisting, I quote, Dow up 158 points, 33,882. We look for new Dow components, perhaps this afternoon.
Stock split.
This is Bloomberg on radio, on TV.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Is it Friday yet? What a week. From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now, 30 minutes away from the opening bell with equity futures advancing. This is Bloomberg, and we begin with a big issue. Can supply meet the boom in demand?
No question, there's bottlenecks everywhere.
As certain things are really in short supply.
We've got a reopening economy now.
16 months of inventory needs to be produced in 12 months.
That demand came back actually in a matter of months, if not a matter of weeks.
All the supply chain sort of issues
is being largely outrun by the demand side of the economy.
All of the inputs are going to go up.
We have commodity prices continue to go up.
Semiconductor shortages spreading beyond automobiles.
This will be passed through to the consumer.
For many companies, they're losing out on sales because they cannot meet demand.
I think it's CapEx.
A lot of these bottlenecks are a result of people leaving the workforce.
CapEx is going to be an important part of that.
As they come back in, you'll see supply ease.
The basic question.
Is this going to work itself out?
Is this going to work itself out? This is the issue right now for corporate America. Let's bring in the Bloomberg team, Kaylee Lyons and Abigail Doolittle. Morning, Kaylee.
Morning, John. Well, no other issue really exemplifies the supply and demand problem more so than the semiconductor shortage that is reverberating across industries, and it's a crisis that is going from bad to worse. Companies just cannot get chips fast enough to produce enough to meet appetite. When you look at lead times, at the beginning of 2020, we were looking at about 12 weeks between the time a company ordered a chip to when they actually received it. As of February of this year, that gap had widened out to 16 weeks, and the line on that chart likely will keep moving dramatically upward as we progress through the current quarter and quite possibly the quarters to come. We were speaking to the CEO of ST Microelectronics on Surveillance Early Edition this morning, and he told us these shortages could last for a year, and that is having a material impact on a growing number of companies. This morning, Caterpillar saying the shortage may mean it won't be able to meet end demand for users in 2021. Apple last night warning it will cut between $3 and $4 billion off of revenue in the third quarter. Samsung warning about the impact shortly after Ford cut its outlook because of the supply crunch, saying it will cost them $2.5 billion. And it is far from the only auto company that has been impacted. In just the last 24 hours, BMW and Honda both have said they have had to halt some production. And here's the thing, John, it's not just about getting your hands on the chips. That is one problem, and it is huge. But even when the chips are available, the shortage has made them incredibly expensive. DRAM prices have spiked more than 38% over the last year. And actually, if you change that time horizon to just the last 5 months, prices are up nearly 70%. And what all of that could translate into is some serious margin pressure, John.
Kaylee, that's the issue right now. I agree with you. And on the margin pressure, costs. Here's Abby.
It really is the hot topic right now, rising input costs, John, and what Fed Chair Jay Powell is referring to as transitory inflation. We'll know whether or not that's the case with time. What we do know right now, costs are rising. Over the last year, it's just incredible. The Bloomberg Commodity Index up 67%. Within there, lumber up 347% over the last year alone. Really extraordinary. Metals up 66%. Ag is up 74%. So costs are rising. Now, there's no doubt that this is starting to press on some of the industrial companies, 3M talking about it the other day. But the staples sector really under pressure too. If we go into the Bloomberg terminal, we take a look at the 2-year break even, we are going to see it is moving higher, higher, higher. With the break even is the staples underperforming the S&P 500. So companies such as P&G and other staples companies, Kimberly-Clark, are they at some point going to have to pass this along to customers, or is it going to eat into margins? Not eating into margins right now, John. If we take a look at margins last year around this time, below 10%, high single digits. Now we're above 12%. That's expected to stay in place for the rest of the year, John. The question is, though, whether or not these costs stay in place as well and start to crimp into margins. The expectation right now, not so much, but let's watch and see whether that stays the case.
I agree with you, Abby. Can supply meet demand? That's the overall question this morning. And how much will it cost to ramp up that supply? What will happen to margins? Look at the call on the commodity side from the team at Goldman Sachs, Jeff Curry. I just want to bring you some numbers. We see commodities rallying another 13.5% over the next 6 months, with oil reaching $80 a barrel and copper reaching 11,000, with risks to the upside. Jeff Curry does a brilliant job of talking about the character of the commodity market. Supply needs to meet demand. You have to clear prices. It's a physical market. It's not the equity market. You can't price this in ex ante. And this is a demand shock. And when it hits, supply will not be able to respond quick enough. That's why he sees $80 on Brent and copper getting to 11,000. Maybe at some point in the next 6 to 12 months. The call's there from Goldman. So what does this mean if you're in the Treasury market? Matt Hornback of Morgan Stanley joins us now, Global Head of Macro Strategy. Matt, you get the themes, and you guys at Morgan Stanley were out front coming into this quarter. Execution risk, front and center for corporate America. How do you read things right now, Matt?
John, thanks for having me on. I mean, look, we still remain optimistic about the economic outlook, very much in line with how the Fed is seeing things, but we need to see more data. I mean, I think that's the bottom line here. This GDP report this morning certainly a step in the right direction, but certainly missed the expectations of our economists. You know, we saw strong consumption coming through in this report, but inflation less so, as well as CapEx. It's just not quite there in these numbers. So ultimately, we need to see continued strength in the data. It's just going to take more time, John.
This equity market, of course, ahead of the move. We've had a somewhat 30% move, something like that almost, since the beginning of November to now in the equity market. Matt, it feels like we've been talking about this boom for a long time. But when you hear Chairman Powell, as far as he's concerned, we've seen one payrolls report, and it's not enough. Matt, when you and the team sit down, when you catch up with Ellen Zentner, who heads over the economics team here in the United States, how many jobs reports do we need? Is it 2, 3, 4?
Well, Ellen's view is very clear that the Fed probably needs another 3 labor market reports. It's going to need at least 1 inflation report beyond the base effect reports that we have coming up. And so Ellen's expectation is that by the time we get to the July FOMC meeting, that the Fed will have enough data in hand to declare that we are well on our way to making the type of substantial further progress that would ultimately result in a tapering of the Fed's asset purchases. You know, I'd say at this point, you know, we'll see what the data next week hold. You know, the data, we've got a tremendous amount of important data next week. And I think when you look at the bond market in the wake of this FOMC meeting, it's pretty clear that investors are nervous about buying treasuries ahead of this string of important data. So we're going to need to see a lot more of it, at least another 3 to 4 months of data, we think.
Copper, 10K on the London Metal Exchange. There's the number for you, Matt. How do you process the moves in the commodity market as someone looking at treasuries at the moment?
Well, look, I mean, we think it continues to support a steeper yield curve. It's pretty clear when you look at the raw industrial commodity complex that demand is there. It continues to grow. There was a period of time over the past couple of months where the CRB's raw industrial commodity index moved sideways. That was sort of a precursor to the range trade that we've seen in the treasury market. Now that index is starting to make new highs in price. So it's pretty clear that the demand picture continues to improve. Ultimately, that's going to weigh on longer-term treasury yields, securities rather. So yields should be moving higher gradually. We think that supports a steeper yield curve, and so that's what we're recommending investors position for.
Matt, do you think that what happens in spot commodity prices, front-month commodity prices like copper right now on the LME, do you think that shapes inflation expectations in some way, shape, or form, and should it?
Well, I do think that investors will remain nervous about inflation, probably for some time. I'd say by the time the Fed grows concerned about inflation, investors probably are over it by then. So we're kind of in this interesting period of time where investors, I think, are showing more concern about the inflation outlook than the Fed is. By the time the Fed starts to show concern, I'd expect investors to be over it. So we're kind of in an interesting period here, John. Investors will almost certainly continue to be worried about inflation for the next 3 to 6 months.
Matt, how does that play into the shorter, hotter thesis that you and the team have at Morgan Stanley?
Ultimately, that thesis is going to be driven by how the central bank ends up responding to the hotter economy in the short term. But what we're seeing here is that the central bank is going to take its time. Chairman Powell made it very clear it's going to take a lot more data. So it's not just the quality of the data, which is very hot in general. It's also the amount of data that matters to the Fed. And so, it's going to take time. Now, that in some sense counters a bit this hotter but shorter thesis because it's going to take time to get the data. But ultimately, how short is this cycle going to be? We think it'll be shorter than the last cycle. Guess what? The last cycle was the longest cycle on record. So it's not really a high bar for this to be a shorter cycle, John.
Hey, Matt, it's good to catch up. Stick with us. Matt Hornback of Morgan Stanley. Just to turn to that breaking news, we do break through 10,000 briefly on the London Metal Exchange on copper. If you go back to early 2011, it was 10,160. That'll be the next one that a lot of people look for. A break of 10,000. Right now, 9,989. On copper prices on the LME. Just to break a 10K briefly. Let's get some price action in the equity market. Ton of earnings to get through. Here's Abby.
That move in copper really matches the risk on tone. The NASDAQ 100, John, up more than 1%, set to open at a new all-time high. Not surprisingly, tech stocks doing great on earnings. Apple putting up a blowout quarter, beating adjusted earnings by 41%. Sales by 16%. These are huge numbers, too, and that's 54% year-over-year revenue growth. Big demand for devices. Goldman Sachs upgrading. Facebook putting out a huge quarter also, really crushing the estimates. Sales, users jump, average ad prices up 30%. Investors clearly rewarding those results. That's the case, too, for Qualcomm, an Apple supplier. The stock up nearly 6%. They beat. Their outlook is very bullish on strong demand for smartphones. Sales jumped 52%, but limited by the chip shortage. We see the whole Apple complex flying higher. And then turning to the industrial space, Caterpillar up 2%, massive beat, 48% for earnings on $11.2 billion. That's 7% better than expected. Interestingly, though, they are saying they may not meet the full year view because of the chip shortage. So there's another company being limited perhaps by the chip shortage. They have not talked about rising costs yet on the call, but we'll keep you posted if I see anything on the tape, John.
Abby, thank you. Thank you very much. Coming up, more spending and low interest rates are here to stay. President Biden and Chairman Powell looking to keep the U.S. recovery rolling. That conversation up next with Morgan Stanley's Matt Hornback and Terry Haynes of Pangea Policy. 19 minutes away from the opening bell. Equity markets look like this, up 28 on the S&P and a break of 4,200. All-time highs in sight, up 0.7%. And copper with a brief break of 10K on the LME in London. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe and give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy, and we need companies to step up.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We're going to get rid of the loopholes, allow Americans to make more than $1 million a year and pay a lower tax rate on their capital gains than Americans who receive a paycheck.
President Biden.
We're only going to affect 0.3% of all Americans by that action. 0.3%. And the IRS is going to crack down on millionaires and billionaires who cheat on their taxes.
President Biden discussing his new spending package, planning to fund the multi-trillion-dollar proposal by raising taxes on the wealthy. Fed Chair Jay Powell addressing similar concerns, hoping to close the wealth divide in America.
While the recovery has progressed more quickly than generally expected, it remains uneven and far from complete. The only thing that will guide us are the tests met. That will be the test for tapering asset purchases and for raising interest rates. We've got a long ways to go.
Bloomberg International Economics and Policy Correspondent Mike McGee joining us now for more. Morning, Mike.
Good morning, John. Well, you could boil down what Joe Biden and Jay Powell are saying to one word: jobs. That's what it's all about for both of them. The president trying to create more jobs in the future. Jay Powell just trying to get us back to where we were before the pandemic. You take a look at what happened after the great financial crisis. We took 6 years to get back the number of jobs we had lost. If you want to include what would have been normal job growth, it would have been 8 years before we got back to normal. Right now, we're looking at a very quick rebound part of the way, but Powell, as you can see on the right-hand side, wants to close that much more quickly than they did in the Obama administration. And so that becomes an issue then of how fast do people get more money? Do we see wages rise as jobs come back? For the last 8-10 years since the great financial crisis, average hourly earnings have been very, very limited. We haven't seen big gains. Now, you see on the right-hand side the distortions caused by the pandemic recession, because the people who made the least amount of money were the ones who were laid off, and that goes out of the averages. But you can see that long, low stretch in the middle there. That wasn't a recovery. That's not the recovery that the Fed or the administration wants to see. It does leave us in this kind of unusual position, as Rich Miller's writing about on BN this morning. We're seeing the mirror image of Reaganomics here. In the early 80s, Ronald Reagan wanted to cut spending, government spending as a percentage of GDP, and Paul Volcker was aimed at cutting inflation. Now you look at where we are, the white line there, spending as a percentage of GDP. Joe Biden wants that to go way up, and inflation, the blue line, that's what Jay Powell wants to do, bring inflation higher. And if they get both of those, then they will have, they hope, achieved their goals.
Mike, thank you. Let's continue the conversation. Terry Haynes of Pangea Policy, Morgan Stanley's Matt Hornback with us too. Terry, I want to start on the policy side, and then Matt, I want to talk to you about the bond market and how on earth to price the next move down in DC. A lot of people in the bond market, Terry, are really struggling to understand what is coming next because the emphasis has shifted to things like pay-fors. Can you give me some numbers, just a better understanding of where you think this lands ultimately in the months to come?
Good morning, John. I think where this ends up is today. I mean, the situation is very fluid. But today, I think where this ends up is you're looking at an infrastructure package of about $800 billion to $1 trillion over a period of years. Let's just call it 10 years to be even. And you're looking at this American Families project that will get a lot of rhetoric and heat attached to it, but probably won't happen. So you're going to get a much more modest infrastructure hit than was originally proposed, something that I think is a healthy raise off the normal investment that happens on roads, bridges, and basic infrastructure, broadband, and that sort of thing, but not the kind of game changer that the president's talking about. He'll probably take that, but the rest, I think, doesn't happen. And meanwhile, the next two quarters, what you're going to have is a lot of political risk, political uncertainty about how much of that happens and when.
Matt Hornbeck, do you think some of the confusion around this issue at the moment, just in terms of where this lands, has been one of the reasons that the Treasury market sell-off stalled a little bit up until this week, up until recently?
Well, I do, John, and I think ultimately it's just too early for investors to really start betting big on a large increase in the deficit related to this infrastructure package or packages, right? It could be, of course, Frankenstein together in some sense at the end of the day, but right now it looks like we're talking about two separate packages, one of which may have a higher chance of going through than the other. There's just not enough detail as of yet for investors to be betting on it, in part because, John, the yield curve is so steep that in order to sit here short duration in a portfolio, meaning, in other words, in order to bet on higher yields continuing from here, it is costly. And so the longer that this takes to play out, the longer that it takes for the government to actually put pen to paper and actually get these bills through the Congress, the more costly it becomes to sit short duration. We just don't think investors have the capacity to do that right now.
Trying to avoid the timing questions a lot, Terry, but I think some people struggle with the timeline down in Washington at the moment. How do you understand things play out through the year ahead, Terry?
Let's look at it. The short answer is I think this uncertainty in the negotiations over infrastructure and the families package go into the fall, where they run up against two different things. One, the need for having new annual spending packages, and secondly, yes, we're going to start talking about the debt limit again, because the debt limit is going to come back and be a factor in those negotiations. But what I think is that what you're seeing here is you're seeing the fiscal side and the monetary policy side both bet that the next two quarters are going to roll through, and that the Fed will do whatever it can to support the fiscal side, not knowing how big the deficit's going to be. And after that, they start to take another look after the dust settles a little bit.
Terry, I want to focus on one nuance, if I can, just briefly. One of the philosophical approaches to Washington and setting policy at the moment, from this administration at least, is to equalize the treatment of gains from labor and gains from capital. There is a spread right there. You can see it in the numbers. How much tighter do you think they can get that spread?
I don't think they're going to get it a lot tighter. There's already not majority support for what the president wants to do, in part because significant parts of his own party, whether you're talking about Senator Manchin, Senator Menendez of New Jersey, or others, are not in favor of it. Will they tweak it a little bit? They'd like to. They'll probably get some money from it, but that's about it. Most of the pay-fors from infrastructure, in my view, are going to come from things like drug pricing, which is estimated to come up with $500 billion over 10 years. And I think that sector is under much more pressure now as a result of that.
Matt Hornbeck, just a specific question for you, sir. In the bond market right now, yields up 7 basis points on 10s, about 168 at the moment. 30s up 5 to about 234. What's your take on a breakout this week, Matt?
Well, John, I think simply it is investors nervous about the economic data that we have coming up next week. It's very hard to put money to work in the bond market when you're expecting extraordinarily good data for the month of April, which we are expecting to get next week. So my sense is that the bond market is simply pricing in this type of data that we're going to get. And once we get through that data, John, then I think it's much easier for investors to come back to the market, put money to work, and to honestly take advantage of these higher yield levels.
Interesting. Matt Hornbeck, a little bit more constructive. I can sense it just in the tone, just a little bit. A bit more constructive on the Treasury market. Matt Hornbeck and Morgan Stanley. Terry Haynes and Pangaea. Guys, great to catch up. Gents, thank you. Yields up 7 basis points on 10s right now. We advanced to 168 almost, to 234 on 30s, up about 5 basis points on the session. Coming up, the analyst action you need to know. That'll be next in our morning calls. And later, futures getting a lift from big tech. Apple and Facebook reporting blowout results. The conversation just around the corner with Dan Ives of Wedbush, looking for 185 on Apple, and Nuveen's Brian Nick. Looking forward to this chat. It's just around the corner. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Five minutes away from the opening bell in New York City, equity futures shaping up as follows. Up 30, all-time highs on the cards at the opening bell in New York City. We advanced 0.7% through 4,200 on the S&P. The only banks north of that coming into the new year, Goldman at 4,300, JP Morgan at 44. We're just short of that coming towards the end of April. Unreal. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Susquehanna downgrading eBay to neutral after its quarterly results. The analysts now seeing a more balanced risk reward with the company's turnaround story largely priced in. We're down there by almost 8%. Your second call, it comes from Jefferies, raising its Facebook price target up to $385 with a buy rating. The analyst keeping shares on his top picks list after reporting impressive guidance and revenue growth. We advanced there by 7.44%. And your third and final call, bit of a mea culpa here. Goldman Sachs upgrading Apple to neutral from a sell following its blowout results. The analyst adjusting his ratings after incorrectly predicting softening iPhone sales after COVID and through COVID. We advance on Apple to 137.25, up by 2.75%. Coming up, monster earnings and record numbers boosting equities, but raising concerns over peaking growth. That conversation up next with Nuveen's Brian Nick and the big bull on Apple, Dan Ives of Wedbush. From New York City this morning, good morning. Record highs just around the corner. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
"25 seconds away from the opening bell, all-time highs on the cards on the S&P 500. Futures advance on the Russell, on the Nasdaq, on the S&P up 31. We advanced 0.75% through 4,200. The opening bell in New York City about to ring with record highs on the cards at the opening bell, and there it is. Switch up the board into the bond market. Yields on a 10-year. Elevated up 6 basis points on the session, 167.35. Euro-dollar stable, 121.22. Wonderful numbers out of Germany. Vaccinations north of 1 million yesterday, a record. That's what we want to see. Crude, 65.25, up by more than 2% on the day. We advanced by about $1.40. That's the cross-asset story at the market desk with your movers, and there are many. Here's Abby.
Many movers, John, and this risk-on tone we're seeing this morning, these record highs, has everything to do with the blowout quarters we're seeing from big tech. Take a look at Apple, up 2.5%. They beat earnings by 41%, sales by 16%, sales growing by 54% year over year. These are huge numbers, too, a resurgence in demand for the iPhone. Facebook crushes it also. That stock up 7.5%, beating sales by 47%, and bottom line growing by 93%. Just really incredible. Same deal for Qualcomm. Qualcomm actually saying they were limited by the chip shortage. Nonetheless, the stock up 6.2%. Now, when we turn to more traditional economy stocks, we're going to see a bit of a mixed bag. Caterpillar off of its highs, up 0.5%. They did beat. They raised the outlook, but right now the CEO saying very, very strong growth in copper, iron ore, gold. Let's see whether or not there's any talk in terms of how the rise in costs that we're seeing for some of those metals could at some point impact them. McDonald's turning it around 0.5%. They put up a blowout quarter, really beating numbers in a big way. Global growth for sales turning positive. The U.S. very strong. Margins to moderate, but that has more to do with costs around reopening as opposed to food costs, at least right now. eBay, unfortunately, they offered a cautious view. That stock is down sharply. And Ford plunging down 5%. They lowered their outlook on a $2.5 billion chip shortage that Kaylee was talking about earlier. And then finally, we have Royal Caribbean up nearly 5%. They put up a good quarter meeting, slight beat there, but they're making progress in their talks with CDC to get sailing again. And you see the entire Carnival and those cruise operators sailing higher in response, John.
Abby, thank you. Thank you very much. All-time highs on the equity market in America. 2 minutes into the session, your record intraday high, 42.18 on the S&P 500. Naturally, the conversation starts to change. The bar is high. And do we start to see deceleration? RBC's Laurie Calver saying that a worry of peaking growth, that worry dominating things right now. Expectations for decelerating EPS growth in the second half of 21 are a problem for the stock market and help make the case for a short-term pullback in the U.S. equity market in the months ahead. For more on this, here's Bloomberg's Kaylee Lines. Hey, Kaylee.
Hey, John. Well, this conversation about peaking out is really building because, yes, first quarter results are stellar. Everybody expected them to show a robust recovery, and they do. 78% of companies seeing earnings grow on average by about 58%, and like 86% of them are beating to the upside. But the rewards haven't been there for the stocks. The average one-day price move after results is lower by about 0.25%, likely the result of both high expectations, but also a reflection of the outlook and concern that the momentum won't last. Granted, profits are expected to jump 53% in the second quarter, but the picture doesn't get better from there. Growth expected to slow to 20% in the third quarter, 14% in the fourth. And just looking at margin estimates for the S&P 500, they're seen expanding to 12.5% by Q3, but then plateauing there, literally staying flat through the first quarter of 2022 as rising costs start to take a toll on the bottom line. And John, it is true that analysts have been steadily raising their expectations for full-year earnings growth for 2021 from about 25% a month ago to 28% now. But at the same time, they've been revising their 2022 forecasts lower, down to around 14% from 15.2% a month ago. Not a massive re-rating, but still worthy of note, likely reflecting both the tough comparisons companies will be facing relative to this year and also the prospect of potentially higher taxes, John.
Kaylee, great work as always. Kaylee Lines there. This is where the conversation is at the moment. Are we seeing peak growth and how relevant is it? This is what PGIM's Michael Collins had to say.
You're almost at these peak rates of growth. In the near term, you're right. You will see labor markets improving. You will see the supply of labor coming back online, and you'll see the supply of chips and production increase to meet the demand.
Peak growth, have we seen it? Perhaps yes. Is it relevant as a concept to this cycle, given the nature and uniqueness of this recovery from a mandated slowdown, a mandated recession, to a mechanical jump as we reopen? This is what JP Morgan's Bob Michael had to say.
It's an artificial growth rate. Now there's a lot of stimulus in the pipeline. Things are reopening. We're talking about additional stimulus coming, perhaps another $4 trillion. That's a lot of growth coming down the road.
Joining me now, Nuveen's Brian Nick and Dan Ives of Wedbush as well. Dan, I'm going to talk to you in a moment about Apple, so just be patient if you can. Brian, I want to start here on this peak growth concept. We've seen some stellar earnings, some brilliant growth numbers. Is peak growth as a concept relevant in this cycle?
I think we can pay attention to it, but it's a much different story when you're talking about peak GDP growth coming down from a 10% level, which we think it's going to be in the current quarter, and earnings growth coming down from a 60% year-on-year level, which it probably will be at this quarter as well, then when you're talking about much lower levels. So we peak growth after we hit peak growth, things can still be quite good. The labor market can continue to improve. We should see rising wages. Consumers have a 21% savings rate. We saw a huge inventory drawdown in the first quarter that will need to be replenished. Companies may have a hard time keeping up with demand to replenish inventories, but at some point we'll see higher growth just from greater production and firms turning their capacity dial all the way up to 11 for the balance of the year. So no, the economy is still quite good. It's going to continue to improve over the balance of the year. It may just be improving at a slower rate, but we're still heading very much in the right direction.
Dan, you and I will do a deeper dive, as I say, on Apple in a moment, but your quote this morning, as you upgrade the price target to 185 from 175. Apple is essentially the Tom Brady of the tech world. The skeptics will continue to say the best is in the rearview mirror, yet Brady just won his 7th chip, and Apple just reported its most robust quarter in roughly 3 years. Are the doubters going to keep doubting, Dan, and do you think the upside surprises will keep coming? I think Dan Ives is muted. He was excited, so muted, and hopefully we can unmute Dan Ives, and Dan Ives can actually respond to that question. Brian, to the question I asked to Dan, which was about big tech and the upside surprises we've seen, Apple's a monster, and they just churned out growth north of 50%. Brian, we spent a lot of time talking about the cyclical names, the traditional cyclical names, but this week's been dominated by, let's say, Alphabet One, which has got this nice cyclical story embedded within it, and then Apple again, which is just absolutely dominating and continues to dominate. What's your take on the big growth names?
Yeah, so if you are concerned about peak growth and you are concerned about what 2022 looks like, could be a bit of a return to normal, although I think we're going to get a better than normal economic year next year. As things normalize, assuming the runway stays quite smooth from an interest rate perspective, we should be seeing a rotation back into growth at some point. So while we were adding to economically sensitive names, cyclicals, in the second half of last year and continue to do so, we haven't really lost that preference for tech, because we know once the secular growth story becomes more important than the cyclical growth story, that a lot of these names are going to continue to be very much in demand, and that we haven't seen a slowdown at all in terms of the earnings trajectory of tech. It's just that relative to the rest of the market, it doesn't look as impressive when you're at these 50 or 60% quarterly growth figures.
But Brian, we keep doing this. We keep looking at tech as one distinct part of the market, and then we look at the cyclicals as something else, as if they don't have a cyclical story within tech. And when I'm thinking about a clean read on the cyclical trade right now, where chip shortage isn't actually going to damage the business too much, unlike Ford this morning, where we're talking about plant production in 2Q being hit by 50%, could be cut by 50% because of a chip shortage. I'm seeing industrials, manufacturers, take 3M, use them as an example recently this week, struggling with transportation costs, raw materials. CAT, another one, another cyclical story which should be getting a big pop. Also worried about not meeting that demand. I don't hear the same thing in tech, Brian, and I'm wondering if we're overlooking the cyclical aspect of the tech story, which has got a cleaner read on cyclicality than maybe the traditional cyclical names that have dominated the conversation for the last 6 months.
I think that's right. I think in terms of the actual sales and earnings for tech, that there is a cyclical component there. It hasn't traded like a cyclical sector because it's been so sensitive to interest rates. It's basically traded in the opposite direction from energy and from banks. So I think in that way, it's become sort of that negatively correlated sector, almost more defensively oriented in terms of how it's behaving. But I would also say that something in the GDP numbers that I just noticed this morning is that most of the consumer spending growth, which was very impressive in the first quarter, was still oriented toward goods. And I think we should still be expecting that rotation, a pretty powerful one, into services, which grew in the first quarter, but not by the same amount, and has not come nowhere near to recouping the drawdown from last year, because people simply haven't gone back to consuming services the way they're consuming goods. So that also may take some of the pressure, positively or negatively, off some of these sort of goods-focused sectors. Could be manufacturing, could be technology, as more people are going out for more kind of experiential spending and less about kind of upgrading your smartphone or upgrading your home theater or doing the types of things that people have been doing over the last year. So I think that consumer spending rotation is going to be important for how we see earnings moving and rotating over the balance of the year too.
Brian Nick of Nuveen. Brian, always great to get your perspective on this equity market. Hopefully, we can re-establish the connection with Dan Ives of Wedbush to get his view on Apple in just a moment. Before we get there, let's get to the market desk and get you some movers. Here's Abby.
John, let's tie in earnings to the big theme that we've looked at over the last year, stay-at-home versus reopening and reflationary. Because stay-at-home stocks, the real niche stocks, are falling this morning on these companies, ServiceNow, Teladoc Health, and Citrix, just bunching them together broadly because they either missed or they guided down, or both. So some of these really super specific stay-at-home stocks not doing so well. On the other hand, the reopening trade, Royal Caribbean, of course, reported they put up a strong quarter. They're also making progress with the CDC in terms of sailing again. You see that stock higher, the airlines higher. MGM had been higher. It is actually reversed now, and movie theaters also higher. Turning to reflationary, because of course, two of the best three sectors are banks and energy. We will see that the banks are higher with yields climbing, the yield curve steepening, and the energy complex sharply higher, John, in line with oil.
Abby, thank you. Thank you very much. Coming up, the NASDAQ hitting a record high following Apple's blowout results. That conversation still ahead with one of the biggest bulls on the street on Apple stock. It's Dan Ives of Wedbush, and I understand we might be able to fix that technical connection on the other side of this break. From New York City this morning, good morning. This is Bloomberg.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
If you can just scan all the incoming mail, all the incoming luggages, it's going to be a massive time saver. And it means that we can capture a lot more of the illegal wildlife trade that's currently going undetected.
focus is odor detection. And this is because no matter how you're bound, what container you're in, you're still producing and releasing odors. And we're kind of building off of wildlife detection dogs.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Record after record for Apple numbers. The stock up by only 1.14%, 135.14. Why is this stock not responding to a blowout quarter? For more from San Francisco, here's Ed Ludlow.
Yeah, good morning, John. This was broad-based growth. Yes, the iPhone sales take the headlines, but strength in iPad and Mac. I want to look at the geographies, though. China really surging year on year. Tim Cook talking about how Apple is growing in double digits territory across all categories in that country. Does it give us a lens into what Apple looks like after the pandemic and going forward? Also, come with me into my Bloomberg and look at this terminal chart on record services revenue. Part of the surge here is that now Apple has 668 million paid subscribers across its services offering. Last year, it had 145. Incredible growth. And Wall Street is latching onto that this morning and asking the question, does that services growth translate into growing margins as we go into the second half of this year? The stock has lagged the S&P 500 so far year to date. Wall Street wanted to see a beat, but they wanted to ask, how did Apple beat? And this was broad-based growth. Is this the turning point for the stock, John?
Ed Ludlow on the West Coast. Ed, thank you. What a move. Wedbush raising its price target to 185 after the results and writing the following. Apple is essentially the Tom Brady of the tech world. The skeptics will continue to say the best is in the rearview mirror, yet Brady just won his 7th championship. And Apple just reported its most robust quarter in roughly 3 years. Dan is back with us, and I'm pleased to say we've sorted out the technical issues. Dan Ives, let's start right here. Revenue records in each geographic segment, double-digit growth in each product category. The stock is only up 1%, and it's done basically nothing all year, Dan. Why?
I think it goes back to what you were talking about, worries that this is as good as it gets. And I think that creates the opportunity, in our opinion, because these are the same skeptics at $1 trillion, at $2 trillion, and now what we believe going on its way to $3 trillion. This is the super cycle that's going to continue to play out for the next 12 to 18 months.
But Dan, what drives the capitulation? Let me just jump in, mate. What drives the capitulation? Because we've been talking about this since really when the beginning of September, pricing in this cycle, and we continue to get these upside surprises, and the market's still responding. So from your perspective, Dan, what is the catalyst for capitulation on this as good as it gets story, which is always hovering around the Apple name?
Sure. I think the capitulation really starts over the next quarter or two because based on all of our Asia checks, we're showing iPhone 13. It's about 25% stronger than iPhone 12 in terms of initial orders coming out of the gates in Asia. Put that all together with services. I mean, it's really that as well as the broader product cycle. It's the trifecta that I believe ultimately launches this to $185, potentially $200 plus stock. But that's why on this name, the haters are going to continue to hate. They're going to have to continue to prove it. But that's why I brought up the Brady analogy, because this is just one. It's an underestimation of the monetization that's going on in Cupertino. And right now, this is just a gift for the Bulls as they continue to, I believe, underappreciate the overall growth story.
Well, Dan, let's talk about the buyback too. Can you give me some context perspective on just how big this is? Another $90 billion. On top of the, north of $500 billion that they've already done since 2012. Just how big is this?
I mean, look, I think it goes back to the cash neutral policy that Apple's talked about. They're going to continue to do these massive buybacks as well as we believe acceleration of M&A. And it's important because it just shows right now, if you look at the cash generation and what's happening across the board, this is just what I believe is the next stage of the growth story, but also the cash flow and buyback story that's going to continue into next year, which is why we believe this is going to be a $3 trillion market cap, even though right now it's skeptical peak earnings. Remember, the same that are talking about peak earnings, it's not sustainable today, those are the same bears that were in their caves a year ago saying don't buy Apple because of the growth and the super cycle is not real.
Yep, and now the doubters also talking about the potential of a chip shortage damaging things too. Now, Apple have put a number on it, 3-4 billion maybe. The Mac, iPads, sales could be constrained because of the chip shortage. Now, as you know, Dan, 3-4 billion for a company that's churning out $90 billion on any given quarter is not going to be a big deal. But as you look across the tech complex right now, Dan, do you see that chip shortage generating some execution risk for the companies that you cover, away from Apple, maybe the Teslas of this world, Dan?
No doubt it's thrown a fly in the ointment. And we've seen that across auto, across software, and just broader semis and tech. But I believe that's something that's already factored into numbers. And I think as we start to see a moderate into the second half, I think bark's worse than the bite. Pent-up demand starts to come through. And I think a lot of these numbers, ultimately get crushed relative to street as these companies execute. So I believe it's something that's been properly factored in. But even when you look at Apple, go back 3 months ago, you were talking guidance, everyone thought it was conservative. They just absolutely crushed it. And I think we're going to continue to see the trend. That's why we believe by year end, we're looking at 16,000 NASDAQ.
Dan Ives with some big numbers and looking for some all-time highs on the NASDAQ and on Apple too. Dan, it's good to catch up, sir, as always. My apologies about the technical connection a little bit earlier. Dan Ives there of Wedbush. 32 buys, 10 holds, 2 sells on Apple. Your median 12-month price target, 157.79. Wedbush and Dan Ives at 185. Raymond James and Chris Caso also at 185 with an upgrade to that price target. They are the most bullish on the street. Stellar numbers from Apple, and this stock just is not responding. Abby has more. Hey, Abby.
Hi there, John. Well, sector-wise, it's interesting what you're talking about with Apple because it's weighing to some degree on the tech sector, which is overall higher but not among the top. Nonetheless, we do have record highs for the S&P 500. So most of the sectors for the S&P 500, 10 of 11, are higher. The top one, communication services, up 2.4%. That's Facebook. Then, interestingly, followed by energy and financials with yields higher, oil higher. But take a look at tech, up just 0.3%. This because Apple is off of its highs. Plus, some of those stay-at-home tech names we were talking about, ServiceNow, Citrix, Teladocs, those stocks are sharply lower, weighing on that sector. Healthcare, the one sector that's down. Over the last 5 days, you were making a very interesting nuanced point earlier, John, about the idea that we don't have to put cyclical stocks and tech stocks in 2 different baskets, that we can sort of combine them in some ways. Take a look at this. Energy is the top sector, then the financials, then you have communication services. Those are the mega cap stocks, and then tech. These are all among the top sectors on the week, sort of a just right rally right now.
Abby, thank you. Bit of breaking news. Just want to bring you this headline. Won't come as a surprise. Largely well flagged and well reported ahead of time. The US proposing a ban on menthol-flavored cigarettes. That headline just crossing the Bloomberg terminal right now. Coming up, the market-moving events you need to be watching. That'll be next in our training diary. From New York City, record highs on the S&P 500. We advance almost 0.7%. From New York, this is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Record highs again in America. In New York, the equity market up 27 on the S&P 500, up by around about 0.6%. Just blowout numbers from big tech through the week. But execution risk is the key theme at the moment, isn't it? We all know about the great demand. Can we meet it with supply? How many times have I asked that question through the week? It will continue to be the question for this economy, for corporate America, for the months and quarters to come. Let's get you the trading diary, what you need to be watching through the rest of this week over the next 24 hours and into the weekend. The president promoting his new spending plan later today in Atlanta. Fed President John Williams discussing financial regulation, then the big one later after the close. After the bell, Amazon reporting earnings. Rounding out the week on Friday with US core PCE plus personal income and spending numbers. From New York City for our audience worldwide, that does it for me. Let's check out the price action for you. As we run you through the first 30 minutes of trading in America, equities doing nicely at all-time highs. Do not take your eye off the Treasury market. Records in equities, but yields breaking out this week through 160 and then a pump higher a little bit earlier again. If you switch up the board and take a look at 10s, your 10-year yield in America through 160 at 167.89 and up 7 basis points on the day. From New York City, this was the countdown to the open. Continue the conversation on Twitter at Ferro TV. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself.
So ¿dónde vive acá? En la parte de...
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. election. Yes.
The U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to say, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street. And back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们差。我们在座的所有人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
he's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out, Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money. And they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle, and it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched. You have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，布鲁蒂能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute, bro.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier, and it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a trigger like me, that was dope.
Like, it's just lit, and I think people would take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first on line. I was here at 1. Yeah, I was the third person on line.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
Oh my
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Jade. It's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection